Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right. Good morning, guys. Welcome back to another live stream. Hope you're doing well. Hope you're staying safe out there in these crazy markets these days. And happy Wednesday to you. We're really counting down the days here before we get into Jackson Hole Symposium, which is probably the biggest event this week. We do, however, have a big one today. We're going to be streaming for most of the day today in preparation for the FOMC meeting minutes, which, to clarify what that is, sometimes people get this mixed up. It is easy to do when you see FOMC. A lot of times people think that this is a speech from Jerome Powell, and I know I'm going to say this 74 times today, but just a heads up, the meeting minutes are not Jerome Powell speaking. Jerome Powell will not be speaking today. He will be speaking on Friday at the Jackson Hole Symposium, but today is simply a release of a document that is basically like the scribe work of what is discussed behind closed doors in the Federal Reserve's kind of like team meetings, if that makes sense. So today we do get some very insightful stuff, or potentially insightful stuff. Meeting minutes are always kind of like either they're a huge deal or they're a nothing burger, right? The idea is if there's any major revisions to where the Fed is, thinking things will go, that can cause big market volatility. But most likely, what will happen is the meeting minutes will kind of come out and not be a huge deal, but there's always the potential. That's kind of how it goes. Most likely the notes will come out and they will show much of what we already know about what the Fed is planning to do, which is likely they see it acceptable to start cutting rates in September. Shock points would be awarded if there was mentions of, higher probability or more urgency to cut rates than previously expected. That could perhaps suggest maybe a 50 basis point interest rate cut could be coming in September. But I don't see that as the base case. I think that most likely the market is looking at a 25 interest rate at the federal funds level reduction in September. So if we take a look at yields, this is the best way to kind of get an idea of what the bond market, which is all about, central bank interest rates, what the bond market is thinking about the government treasury yields. So if we take a look at the 2-year yield, right? So if you were to go buy a bond for 2 years or, a note for 2 years, basically, let's say that you gave the government $100,000, right? Here's what this would come out to. The payment rate that you would receive on your $100,000, just passively handing it off to the Treasury, you would collect about 4%. Okay. So you would get 4% per year, $4,000 times 2. You'd make $8,000 in your 2-year bond. And then what would you get? So what happens at the end of your bond, right? You get $8,000 in received interest and you get your $100,000 back. So at the end of this 2-year period, you have $108,000. That's the simplified view of how bonds work. So what you can see here is that if you had bought bonds over here at 5%, we could repeat that math. And now you're looking at, right, quick math is $5,000 times 2 years. You'd have $110,000. So my point with showing you this is that the Federal Reserve is expected to cut their interest rate, which means that offering bonds or bond offerings will come down. The amount of money that you would collect in interest from buying and holding on to U.S. Treasury bonds would go down, or is expected to continue to go down. Now, for a long time there, it was going up, up and away. So bond investors, here's the interesting thing. If you, let's say, here's the way the bond market works. Let's say you bought this bond over here and you're sitting there and you're feeling pretty dang good about your bond buying, right? Because now you're talking about, wait, I'm going to get 5% on my bond, and all these other suckers who want to buy a bond now, they can only get 4%. But what if somebody said to you, hey, I want to buy your bond off of you and I want to collect the interest. I'll give you your money back and I'll pay you a premium to pick up that bond. This is how bonds work, right? So if you wanted to buy this bond, nobody's going to sell, you can't buy that bond. So in order to buy it from this person, you have to pay additional money. That's how the bond market works. So if you buy bonds at a good time, right? If you buy bonds at a good time when interest rates are higher and then they fall on you, the value of your bonds goes up dramatically. Does that make sense? I just want to make sure that we are good on that topic, because it is a very important one that most traders are not really familiar with. The bond market is like, they might as well replace it with the boring market, because it is really a pretty boring market. You're not talking about exciting numbers here. You're talking about making 4% per year, passively investing in bonds. That is not very exciting, right? But bond market movements, in my opinion, are arguably, in today's day and age, the most important market to study is the bond market. Because the bond market, they are the professionals, they are the specialists on what the Fed is going to do next. The bond market is focused solely on the state of the economy and what the Fed is going to do, right? Does that make sense? Do me a big favor. As we get into today's stream, as we get into today's show, we got a big lineup for you today. Do me a big favor, hit the thumbs up button on this stream. We're going to be going all day long. We got 379 people watching between all the different platforms, Twitter, YouTube, etc. Do me a big favor, if you're enjoying the show so far, if that made sense or helped you in any way, hit the thumbs up button. It really helps. So my point with going through bonds, again, I know it's not the most exciting market. Everybody wants to say, well, do I buy gold or do I sell, the dollar? But again, if you understand the bond market well, it can be very revealing. So what does this tell me? Well, even with simple moving averages, it seems pretty clear here that momentum is lower. So let's take that and let's think about other markets. Now that we understand I wouldn't say we understand the bond market completely, because I don't understand the bond market completely. It is so deep and so it's such a rabbit hole. But the basic idea is, it seems like the Fed is going to start cutting rates. That's the trajectory of this market, right? Is the bond market showing us that interest rates are expected to come down. So where do we take that? This could be telling us one of two things. This could be telling us that the bond market thinks we're going to cut rates because things are good, or it's telling us because it thinks we're going into a recession. That's the part that you miss with looking only at the bond market. The stock market will sometimes tell you the other part, how the economy is doing alongside the rates, right? Anyways, so here's the thing. With these interest rates coming down, I do think right now that is actually a positive thing for the stock market, especially when you take a look at the leadership of this move. So I want to show you some things here. We're doing research today. I know it's not as exciting as, drawing candlestick patterns or things like that, but we're doing some deep research here, okay? What has been rallying the hardest in this recent recovery move is very important to note. If you were somebody who looked at this recent rally in the stock market cautiously, then I want to show you something. There's no guarantees in the financial markets ever. Nothing is certain. But I want to show you some things. If you see the stock market rallying and it is being led by really defensive, safe, and stable business models, or this market rally is being led by growth, technologies, innovation, which one of those scenarios, one, defensive stuff, or two, growth and innovation stuff, which do you think is more optimistic for the stock market, guys? One or two? Drop a comment here in the chat. If you're watching with me live, if you were bullish on the stock market, do you want to see defensive companies lead? Like they're the ones pulling the indices higher? Or do you want to see innovation and technology lead? So one or two, drop a one or a two in the chat based on what you think would be the healthier signal of strength for the stock market. All right, you guys are getting the answer correct. I'm seeing a bunch of people type two. Yes, right? We want, if you are somebody like me and you want to see the stock market continue its upward trend, you think it will. I think it will. I've been bullish. Obviously, I've got a position on the S&P 500. Then what would make me nervous would be if we had scenario one. If scenario one was happening where Coca-Cola or Hershey's chocolate or Costco, if these like kind of stable, slow and steady businesses, those were the ones that were taking all the gains, that wouldn't be very exciting. That wouldn't be very optimistic. But if people are out there, we see people confidently stepping into growth names, cybersecurity, semiconductors, technology. That is more optimistic, right? Because that shows people are willing to get out there and invest in innovation, which is higher risk, higher reward. So let's take a look at what has been leading the charge back higher. Is it confirming of our bias of being bullish, my bias of being bullish? You do what you want. Or is it threatening to it? Well, let's take a look. Let's go look at some of the the strong areas of the market first. XLY, consumer discretionary, Tesla, Amazon, Nike. These are companies that the consumer doesn't have to buy their products, but wants to buy their products when they have a little extra money. If the consumer is doing well, consumer discretionary stocks typically do well also because their earnings are projected to go up. Consumer discretionary is killing it. This is a really good news. This bounce back in the consumer buying frenzy in companies like Amazon and Tesla, Nike, these are great things to see rallying hard. It would be nerve-wracking if we continued to see the sell-off in, consumer discretionary purchases, as opposed to, guys, what's the alternative? Consumer staples, which also have been doing very well, by the way. But in the recent rally, we don't only want to see consumer, we want to see everything rally if you're really a bull, right? But what you don't want to see is you don't want to see this up and consumer discretionary flat or down. That's not what we've got. We've got technology ripping hard. XLK is a technology ETF. Technology is doing really well. Okay, here's a defensive sector, utilities. Utilities has been chugging along, but it's in recent times not been the provider of gains in the stock market. What about software, right? Software is an innovation sector or part of the markets and industry. Boom, software, killing it. Real estate, killing it. Energy, this is good. We don't want to see energy leading. Energy is more of a traditionally defensive sort of sector. Just more reliable earnings. We want to see the higher risk stuff going crazy. Like, for example, the semiconductors ETF. So this is why I bought the semiconductors ETF, is because I personally don't see the economy right now going off of a bridge. I think the consumer shows some strength in the last round of earnings reports. So my view on the economy and where the stock market is at is I do not think we are topping out. I know a lot of people are very much, if you go all over the internet, people are always kind of, uber bearish on what's going to happen next. But I think that the Fed is going to cut interest rates, that the economy is going to hang in there, and we're going to see stock market rally continue. If I am wrong about that, Nick, what if you're just dead wrong and you sound like an idiot in 6 months from now? Then it wouldn't be the first time, because there's been many times in my YouTube career where I've had an idea on something and then it turns out sour, and I take some heat in the comment section, but I'm used to it, right? It's part of the territory. Is like I always like to say that, it's part of the business. So what areas am I most bullish on? Am I most bullish on gold right now? The answer is no, because gold thrives. I'm not bearish on gold. Please understand. I am still bullish on gold and would like to see a pullback. I'll probably buy some as kind of a diversification thing on a dip. But I'm not most bullish on gold right now, because a lot of the areas that I like are the high growth innovation areas. And if the Fed can pull this off, which I think they can, where we're able to get inflation continuing to cool off and the labor data comes in strong enough, we start seeing interest rate cuts and the economy reaccelerates. Do you know what I want to be buying? I do not want to be buying gold. I mean, I will probably buy some gold if we get a dip, but it's not going to take up a huge chunk of my account like it had for most of this year, which this year was a great year for gold. I want to buy small caps. I want to buy the NASDAQ. I want to buy technology, semiconductors. Now, please understand when I say that, these areas that I am discussing are high risk areas in the market. When I say high risk, I'm not being a degenerate with this stuff. I'm talking about calculated risk management, but this is where I feel most convicted. I think that when we look at the data, right? When we look at a lot of the economic figures, GDP growth, still strong, right? We take a look at the services component of the economy, still strong. Manufacturing, not so strong. Retail sales, surprisingly strong. Labor market data. Okay, jobs data came in a little bit light. That's for the first part. Private sector, also a little bit light. Unemployment claims have been showing some promise. We get more of that data tomorrow. Job openings have slowed, but they're not crashing. And unemployment rate is rising, but still at historically low levels. So when we sort of do a pulse check here on where the economy is at, and then the final component, we have inflation cooling in the United States, and that is likely to give the Fed the thumbs up, the green light to begin rate cutting. What I'm trying to get at here is that we have made a lot of progress in inflation. The labor market is slowing down, but it's not crashing. But the Fed is probably going to start cutting rates. You look at all that data and you say rate cuts are historically, they help the economy, right? Because borrowing costs come down. The consumer goes out and spends more because they can borrow more money if they need to. They can go buy houses, cars. That's good for business earnings. And suddenly, there's this light at the end of the tunnel for stocks to continue to go up. So that is where I feel the most convicted. I'm laying it out there because I could be dead wrong, right? That's the thing about markets. Nobody knows for certain, and something could change. What if tomorrow there's some sort of big catastrophic event between Taiwan and China? That's going to be rough. But I don't know the future, right? As traders, we don't know the future. It is all educated guesswork and risk management. That is all we can do. Does that make sense? I just wanted to walk you through that this morning here, guys, on what I'm seeing. By the way, as I just went through all that, I just want to remind you that we have, what are we at? We're at 3 days. 3 days left, guys, for the Edge Finder free event. The Edge Finder is currently free to use to everybody who is watching this live stream right now. There it is. We just dropped the link to this in the chat as we speak. So the Edge Finder free week has 3 days left. If you have not applied to get access to the Edge Finder, it is, like I'm saying, no catches here. All you have to do is drop your email on this form. We just dropped the form link in the chat. give us a little bit of information about yourself, and then someone from our team will be reaching out to you and assisting you through your process. We're doing this manually, so we're handling applications, and we're also doing it manually so that you can speak to someone on our team about the tool as you go through your 3-day free trial here until the end of the week. This trial is available until Friday. Friday afternoon, it shuts off for everybody. This is not something we usually do. There's 3 days left. Do not miss this chance. We might not be doing this for a while, right? So this is a 5-day free thing. 2 days have passed. There are 3 days left to try out the Edge Finder for free. If you have not already, again, there's your fair warning. 3 days left. Apply now. The sooner you apply, the sooner we will get to your application. We are handling them on a first come, first serve basis. All right, let's talk about gold. I've seen a lot of people commenting gold, gold, gold. So I hope gold does come down a little bit more. I've been wanting to buy some gold. And if we can get a pullback, then I still very much like the setup here. In fact, I believe the Edge Finder is giving us a bullish rating overall for gold. Yes, +7. COT data looks strong. Seasonally still a strong month for gold. Trend to the upside. Labor data has been showing some cooling signs, which advocates a little bit more bullishness towards gold. By the way, it's not just the US. The global economy seems to be cooling off. And I am not a doomer, or I don't sell that sort of stuff on my YouTube channel. I'm not here to talk about the end of the world, but it is pretty evident that globally there is some slowdown, not recession, not crashing, not terrifying stuff in the global economy, enough so that central banks, to combat that, will likely continue globally to cut interest rates. Cutting interest rates, the idea is it stimulates, more money into the system, allows people to go borrow money at a cheaper borrowing rate. And then suddenly, the idea is that allows for more activity in the economy and it picks things back up. But that cooling in the global economy will likely lead to interest rate cuts. Interest rate cuts are historically very bullish for gold because more currency gets flooded into the system. More currency being printed or created equates to the price of gold, price of an ounce of gold going up. So the force here that's pushing behind this gold up move still seems very intact. In the short run, we may be due for a little bit of a pullback here. I'm not saying I think we will, but if we do, I'd like that a lot because then I could get some entries on perhaps buying gold on a dip. If I buy that, it will be inside of the Discord channel where I post all of my trades. If you're not in the Discord channel, there is a link in the description. And we will also drop the link here in the chat while I'm speaking about it. Gabriel says still preferred on a subscription basis. If you'd like to pay it in installments, that is something that we offer. Gabriel, whoever you are working with on our support team, just ask them about if we have payment plan installment options, and someone from our staff will help you out with that. Whoever you're working with, it's either Emily, Drew, or Hallie, the 3 lovely people behind the scenes helping to handle all of these Edge Finder free week applications. If you want to try it out, there's 3 days left. Again, apply in the chat. All right, so yields continue to come down here. How are stocks doing this morning? The NASDAQ is up a little bit. Let me come back to gold. So for gold here, yesterday we saw a little bit of a long wick off the top, which could signal a little bit of short-term downside. Though, as I've been pretty clear about in my video yesterday and my thought process here on the stream, that does not give me enough confirmation by any means to short gold. Do I think that there could be a pullback coming? There could be. And I'd be interested in it on the long side. But to me, the bias here, the setup favors buying the dip, not trying to short the dip, right? Because we don't know, the dip could be, this could be the end of the dip, right? It's very possible that because the forces are still very bullish, in my view, that this could be the end of the dip right here, right now. I don't know that, and I don't really like that setup as much as waiting for little bit deeper of a retracement. In that case, I might look to get some longs going on gold at that level. Real quick on silver too. Silver topped out right around here. So we'll see where that goes. Where is gold likely going from here? If it does continue its upward trend, did it tag 2550? That might be a psychological level. You could also get fancy with, fib extensions. Let's say we do one of these. So there's the impulsive move, and then you get a pullback. Let's say the pullback is like right there. Let's just, for fun, and let's reset this to default. Whoa. Why did that do template? Let's just delete this. And let's do template. Oh, that is horrible. You can tell I don't really use fib extensions personally very often. Anyways, this is not really my specialty when it comes to like trading, is trying to call tops. I don't do that. I don't try to do that. I find that really difficult to do. So how do I trade something like this? Well, I'll give you an example. Let's just say that everything works out nicely on gold for me. And let's say that I end up getting a retracement set up to this level of support here around 2470, let's call it. So if price comes down here, and let's just say I choose to buy it and I put a stop below structure here. If it doesn't work out, I just take a loss. It's just over. If it does work out, let's say we get this set up, and then we actually do see a good reaction to this area. If that were to happen, I'd be looking for it to take out the highs, right? And if we could take out the highs, let's just say that makes a good move. What I'd be looking for then is to trail my stop loss, which was here, try and pull that up to wherever I can find good structure to trail a stop on it. And from there, if this thing doesn't hold that pullback again, then I'm out and take profits. But if it does hold it, we repeat the first sequence again. So I don't use take profits. So if it shoots up again, I'm not going to take profits here, because again, if it's bullish and it's a very strong uptrend, I do not try and call tops, right? That to me is a really dangerous game to play. So if we get this big break, then I may choose to trim my stop more or trail my stop more. And then let's say that we get another higher low. You can see my pattern here just goes on and on for as long as this takes place until the trend reverses, at which point I take my profit. So I personally don't use a specific target. I don't have a specific target in mind when I place trades. I like to use market structure to tell me when it's time to get out of a trade when the trend has shown some form of a reversal. Does that make sense? Filled out the form on the Edge Finder on Monday. I've not heard from anybody. If you could send a direct message here if you have not heard from anybody. If you have already been contacted, please don't message in there. We've got like 50 million messages coming in right now. People trying to get their access to the Edge Finder. We understand everybody wants to try it, but we are handling applications as fast as possible. And messaging in won't shorten that process if you're already on the list. But if you have not been handled or helped and we missed you, then please feel free to chat us. All right, so that's the thought process on gold. I'd be interested in maybe trying to pick up a buy on it if we do get that pullback. But that's the only reason, or the only way I'd probably get involved on the long side of gold at this time. Waiting for a pullback, see if we can get that entry, and then going from there. So the NASDAQ, the S&P 500, I'm not going to lie, even though I am bullish on these things, they look like they're due for a little bit of a relief pullback. But as I just got done explaining, that's not my specialty. There are other traders out there that are better at that than I am, right? Trying to say, oh, it's become a little extended, I'm going to trade the pullback. Some traders are better than others at that. I am admittedly not good at that. For me, my trade, my strategy, my approach is simply, I think that for me, exits are my strength. And what I mean by that is that what I feel that I do very well in the market is not enter the market perfectly. To be completely honest, I don't think anybody enters the market perfectly, and anybody who says otherwise has not been trading long enough. It's very hard to time the market. That is, even, everybody, even at the most professional level, will cite timing is a very difficult thing to do. Your audio is cutting off. Is anybody having issues here in my audio? Please let me know if that's just Maximus or if it's a consistent theme or if other people are having issues hearing me. But the idea here is this. For me, entries are difficult, but not the absolute most important thing to my trading performance. So I'll just explain this really quick. When the NASDAQ and the S&P 500 began dipping late July, I tried multiple times to get the right entry and took multiple losses. Now, I'll show you where I bought the NASDAQ. I tried here. I tried here. Both of those trades, one was an immediate loser, one was a winner, then became a loser, right? Then I tried again here, snapped in my favor, but did not quite get to a point where I could trail a stop. So it ultimately became another loser. So I took 1, 2, 3 back-to-back losses trying to buy the NASDAQ. Again, all at sound levels of support. I believed my fundamentals were right, and I remained bullish during that time. But the market told me, nope, you're not right. You're wrong. And so I stopped out of all those trades pretty quick, realized losses, and moved on. And then I bought again the S&P 500 this time because it was giving me a better signal on the edge finder. And I also really liked the support level. Really key support from those those March highs, and then when we broke through that high in May. So I figured, okay, it's probably worth another stab on the long side here because you've had really big response to this area. But I'm not going to lie. When I bought this trade, or when I bought the S&P 500, I felt a little bit nervous doing it. I was like, man, this thing just keeps free falling, but I know what I'm supposed to do according to my rules, according to my strategy. I'm supposed to buy here, support, edge finder confirmation. I went long. And when I say that my entries are not they're not like the thing that defines my trading skills. When I think where I excel is more on the exit side. So for me, the management of this position so far feels like it's been pretty good. Obviously, it's hard to mess this up with my style of trading. When you're trailing stops and the market just moves in one direction, it is the ideal scenario for me. And it does not always work out that way. It does not always work nicely. Sometimes, this could technically reverse really hard, but I do actually need to trail a stop on this one because we just took out another key level here on the SPX. And so it is probably time for me to trail this stop again, which I will probably do in just a little bit here. I did this on stream yesterday, and it takes me like 5 minutes to write it all up. So I don't want to do it all on camera because it will dramatically slow down the stream. But I will trail a stop loss on this one. And my point is, I think trade management, risk management, like exits, that's my strength as a trader. And I know that, everybody has their strengths and weaknesses. The other weakness that I have is calling tops. I don't think that this is isolated to me, but it is not my strength. Calling a top, saying like, oh, this market's going to roll over from here. Never really had a lot of success doing that. When the market's trending well and I can trim a stop on it or trail a stop on it, that is my trade, right? That is what works for me. That in combination with fundamentals, a lot of people will only hear the first part. They'll say, oh, so I just need to use a trailing stop and I'll make money. Absolutely not. Trailing stops can create horrendous equity charts if you're doing it without a good fundamental basis. That's what I will say. Trailing stops lead to a lot of little winners, a lot of little losers, and very infrequently a really large winner. That's what ends up happening. So you get a lot of this: loser, 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 big winner, loser, 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 some winners, some losers, big winner. This is what whoops, not the last part. You get my point, right? That's usually what the P&L looks like over time, is you get these kind of big gain stretches and then you give back and then you big gains and so on and so forth. So that's what we're looking at. Ivan says, can we buy SPX now? Well, for me, no. You do what you want. Ivan, I know you're messing with me because you always do. But for me, if I was looking to buy let's just say I didn't have a position on the SPX500 and I wanted to get long, there's a couple levels that stick out to me. Pull back to this area, 55, let's call it 55.50. That's an aggressive entry. Like if you're really bullish and you're trying to buy the dip, it's hardly a dip at this point. We are almost back to the all-time highs. This is a high risk trade because you're going into Jackson Hole. This could be, stop one before stop two is right back down to the lows. It could happen. That's why I really need to trail a stop on this trade. But the other side is, what about this spot? This is probably the more conservative. You may never get it kind of entry. Like it may never come down to this area for a while. 54.15, let's call it. Huge level of support. Really strong breakout at this point previously. I like the SPX at 54.15 more than I like 55.50. The thing is, this is my perspective. I'm not telling you to do this. If I wasn't in this trade, I would buy at 55.50. Again, please hear me out. This is not financial advice ever on this stream. This is my opinion. If I didn't have a trade, my rules would tell me, okay, pick up a position here at 55.50. But actually, I don't know that I would. Here's the NASDAQ's probably more bullish right now on the Edgefinder. So actually, I might do the same idea on the NASDAQ. In fact, maybe, yeah, I'd probably actually buy the NASDAQ. If I wasn't in a position, I'm not in that state right now because I'm very long indices already. I'd be looking at probably 19,500 on the NASDAQ. That's probably what I would look to buy. Now, again, I am not here telling you what to do because hear me very clearly. I would take that trade with full willingness that if it crashed through it, I'm just taking a loss. I'm taking a loss so fast. I accept that as a distinct possibility. A lot of traders do not think that way. A lot of they think they'll hear someone like me or someone on YouTube say, oh, 19.5 looks interesting. And they'll just be an idiot with it. I'm not telling you to buy this at all. But if I was to buy it, it's going to be a small risk, and it's going to be a hit on the head, soft hit on the head if I lose money on that trade. Does that make sense? Anyways, Alan, you're messing with me. Please be responsible, guys, especially with Jackson Hole right around the corner. And also let me check our stream schedule here because I believe we have Chris Pulver coming on in just a moment. I'd like to say hey to him before we chat later. Just want to check the schedule really quick. So we got Chris coming on in 2 minutes. James is on at 11:30. Oh, Chris is taking Chris, you're marathoning today. Let's go. This is awesome. We got a long day ahead of us together for our meeting minutes day. Should be fun. So real quick, guys, we're going to just take a quick break, and then I'll say hey to Chris for a few minutes, and we'll go from there. So stick around. We'll be right back. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, we're back with Chris. Hey, Chris, how's it going, man?
Good, Nick. What's happening, man?
Not a lot. I'm fighting off these crazy comments from people like Ivan, who says, Nick, can I take a loan to buy gold? And he is totally messing with us. Everyone who is new to trading in the stream, please do never do that. People make that mistake. They lose a lot of money. We're here practicing, slow and steady, stable risk management trading. But in all seriousness, Chris, the NASDAQ, the S&P 500, they just keep ripping higher ahead of the Jackson Hole meeting. And it makes me a little bit nervous that this market is pulling forward the optimism a little bit too much. Makes me wonder if I should really start getting a little tighter on my stop losses here on the positions that I do have. What are your thoughts on the indices right now?
I think that's not a bad play. I pulled this up. We've had an interesting rotation here where the equal weighted S&P, equal weighted NASDAQ is actually caught up for these last couple of weeks.
Oh, interesting.
So Mag 7 has doubled the returns of the S&P over the last year. So 53% on the Mag 7 and then 27.8 on the S&P. But we're looking at the broader S&P on pace to beat the Mag 7 for the first time since 2022, and it's barely doing it. The Mag 7 is up 1.4% for Q3, and the broader market's up 3.8%. So you can see just massive outperformance by the Mag 7. But I mean, look at the amount of market cap that the Mag 7 has lost and then also gained back in the last 2 or 3 weeks of trading. But big thing for me as we're getting right back up towards all-time highs is, what does September typically look like for the stock market?
It's not great.
It's not great. This is 70 plus years of data shows the average move at -7. So,
and at 70 years, Chris, there's no room for, at 70 years at that much data, it's not enigma, it's not luck, it's not,
right,
compiled data. That is a lot of data to still have a negative month on something that historically goes up over time.
Agree. So I do think that as we get to these highs, I wouldn't be shocked. Like if we test them, okay, fine. But I don't think that we have it's different this time. I sent you that I sent you that info on the non-farm payroll revisions.
Mm-hmm.
I'm curious what that number reads. Let's see if we actually get a print for that. I don't see a print for it. Let me look if there's anything on financialjuice.com. So if we have a print for NFP or non-farm, let's see if it says anything here. I've never seen this on a calendar until, I think it only comes out every 6 months to 12 months. It's not a frequent print. I don't see anything due Wednesday could wipe out. So that's what I was reading, is from 600,000 to 1 million jobs could be revised lower. Oops, we didn't actually make 1 million jobs. That's our fault. That's a little oversight by our economists. That would turn this market, I think, pretty aggressively going into Jackson Hole if somehow that data on top of FOMC minutes this afternoon on top of Jackson Hole, that's how the topsy-turvy, wild and crazy August volatility kicks in. September, I think 70 plus years of data is pretty accurate. I don't expect September to be all-time highs and still pushing. I think we might reach all-time highs, but I can see September giving some gains back.
Yeah, I totally see that as a possibility too, especially, again, you can't argue with 70 years of data. Now, again, to just put a little bit of a pause in that, when you have 70 years of data that says September is historically bearish, it doesn't mean that every September in the 70-year period has been bearish.
Right.
It just means that if you were to flip a coin here, on any given month, you might get to 50-50, but or not. On most months, you would actually get a slight lean, maybe 55-45, but then September gets reversed. Let's just say anecdotally, let's say it's a 55% chance that September is down. Mm-hmm. I mean, you're talking about a meaningful difference in whether or not, that comes down. Not to mention, Chris, we have an election right around the corner, and I don't know who's going to win the election. I don't think I think it's very close. It was different, to be honest, when it was Biden Trump, I thought it was just going to be Trump. And most people did too. Most
Right.
people said Biden's, presentation was not, didn't induce a lot of confidence from the Democrat side of things. And then, Trump looked like he was going to run away with it. Now I'm not so sure. I don't know who's going to win. And I think that consensus in the market, regardless of your political opinions or whatever, the market does not like not knowing who the president's going to be. We just saw, a bit of a carry trade unwind. There's enough stewing underneath the surface to where when you see a absolute rip like this in a few weeks period,
Mm-hmm.
maybe it's worth just taking a little bit off, or in my case, trailing a stop a little bit more, which I'm doing, by the way. For anybody who's in the Discord, I am currently updating my positioning as we speak. So Chris, walk us through. Jackson Hole is on Friday, or it's on Thursday, but the real kind of delivery is on Friday.
Yep.
What's your plan between now and then? Are you for trades that maybe you're in? What are you thinking about doing with them? Are you looking to get into anything between now and then? What's your kind of focus?
Yeah, I have some stabs of the index. Overnight, I had a good win on Target. Frank and I talked about this one
Oh, nice.
yesterday. So
Yeah.
Target had positive earnings on top and bottom. So EPS and revenue beat, and we went well beyond the expected move.
Oh, I
And
didn't see that, and I love that for the consumer state, by the way.
yeah, so Macy's had earnings as well. So but this was the opposite, right? So M is down.
Oh, okay.
Target is up. And I think Target was a big positive because the concern was that your Target type consumer is moving on to Walmart or moving lower, where
Yes.
it's like they want to go to
Yes.
more affordable retailers, and so they're like scaling down in those type of spends.
Mm-hmm.
So anyway, I mean, I took the trade. We put it on yesterday during the session. It was $7.97 debit, and I got out today for $13. So it was a nice little gain, about $5.03 credit per contract. So that works out pretty well. I'm taking it now and being done with it. The other trade that I had on from Monday, I've been tracking this one all week. I got out of the trade. Early. I mean, by Tuesday morning, I had a bit of a ramp up in here in profit, and so I closed out for about $1.50 profit. Right now, I'd be up about $3.50. So I did sacrifice a little bit of profit, but I was thinking ahead of Jackson Hole and thinking ahead of FOMC minutes and possibly market drama that might be backloaded this week. And so I'm just tracking this. Like, I love this trade. It's a little complex to put it on, but the fact that Monday to Tuesday this thing paid me. Tuesday to Wednesday, this thing's paying more. If we are still going to inch up higher, this just gets better. This will probably be trading for like $22 to $23 by if we get into this profit trap. But at the same time, like, if we go beyond it, I still make money. We go beyond it, I still make money. So anyway, this stuff like this, and then on the shorter term, I also have a couple levels out here. So I do have a I have two trades here, Nick. I'm kind of managing both for the end of the week. This is the QQQ. I have a 485 long call and I have a 475 long put. I'm going to see which one pays out. They're just longs. So like the long call, defined risk, long put, defined risk. If this one gets paid, I'll lose a little bit here, but net some profit. Hopefully, if we hit this one by Friday, and vice versa. I mean, if we dump to the downside, what's interesting about this is like this downside move with the implied volatility spiking. This will probably pay a lot more than losing on the call side. So I'm just neutral, man. Like, I don't know what the market wants to do. I could see that we're so close to the all-time highs that the market's like, come on, let's test it. Let's get there.
Yeah.
But I think that's also the sign of like, I want to take profit, dude. I want to take profit and I've got broke wing butterflies over the place, trying to look at some traps. But yeah, I mean, I'm just trading like any other week,
Yep, playing the volatility a little bit there. I think you have definitely a lot of that possibility this week, but we'll see. I mean, when it comes to the currency world too, a lot of our audience also, of course, pays attention to currencies. Taking a look at the U.S. dollar really quick, guys. I'm gonna pull that up for us. U.S. dollar has been really making a continued push lower, and what this signals to me is that the market feels pretty confident that Fed is going to start cutting rates. That has been a pretty historically controversial thing, but I've been trying to say this over and over, Chris, every time I bring up rates and the impact on the stock market specifically. Rates don't cause the market to, the interest rate cut activity is not the catalyst for the market to crash or rip. It is the state of the economy when the Fed begins cutting interest rates. And right now, you got a decent looking economy, especially when you just pulled up, Target's earnings looking pretty good. That being said, though, I think where this is hindsight 101, it looked a lot better when we were at the lows here. But now that we've ripped so much like this and optimism is so strong, earning valuations are right back up there again. Makes me a little bit like, okay, when everybody is expecting this soft landing, I do get a little bit nervous too. So
absolutely.
Back here, I was in the soft landing camp and it was almost contrarian. I mean, it was contrarian. People are like, the economy's going to fall out. And that's where I like to be. I've said that to you like 100 times, Chris. I like feeling like there's a bear case out there when I'm buying indices. I don't like to feel like there's no bear case in sight when I'm buying indices, because I feel like, I could be the sucker that buys the end. And yeah,
two things on that, dude. So look at if we go back to CPI numbers, and this goes back to 2002, 2003. We've spent a lot of time. I mean, inflation was never a thing in the U.S., right? It was always this like hidden 2% move that nobody really cared about because it never was a problem. And COVID, it magnified that to, like a 400% degree, because usually we've been operating at 2.5% inflation. I think it's interesting with all the cuts. And I mean, we had deflation in 2008, 2009, a little bit in 2015, but we've always operated like 2 to 2.5%, 2.5%. And we're having the same conversation. Like, we're right here, like sticky 12 months inflation. Does the Fed think that we're just going to be like, okay, around that that 2.5 to 3%? Maybe it doesn't go any higher. But look, man, the Fed can't control inflation, and the Fed can't control jobs. And I mean, I'm sitting here looking at this, stupid non-farm payroll revision. It's like, I want to see what the number is, because if we somehow overstated 1 million jobs, that's a big deal. And also a couple things on, when the Fed cuts, usually cut cycle is a sign of slowing. And also, I listened to an interesting study yesterday with Tasty Trade, and they just did a study on V bottoms. And all it is if you take an index like the S&P, and you have the market, sell off in a certain day and then recover in full, do you think that these V bottoms are short-term or longer-term recoveries? Like, do you think they're short-term or long-term? What do you think?
Let me think. So
this is 20 years of data, by the way.
So V-shaped recoveries as in like a single intraday move, or are you talking about
basically if we had a 5%, 10%, or 15% sell-off, and it is a giant like fall, and then we kind of bottom hard, but then how long does it take to overcome? So if we started, let's say, we'll look at the S&P. Let's do this. Let's do the futures feed. This is technically our V right here. So this high to this low was our drop.
Yep.
And then this is our recovery. Okay, so this is a successful V bottom recovery. Okay. Now, how often do you think this happens? Number one. And so this is 20 years. And how often does it happen? And number two, how many days does it typically take to get that recovery? Just random question.
So, okay, I'm just going to guess because I don't have a stat. I'm going to assume that does not happen very often, that you do not get those sorts of moves too frequently, where you're getting like a 10+% down leg and then a 10% rally leg. When it does happen, that seems like, just anecdotally, more of like a bear market rip or bear rally. So I don't know. I mean, to be honest, my reaction would be bullish. Like if you get like a sharp recovery, the idea for me would be like, oh, okay, if it's ripping right back in, that shows the bulls, reversed course and they came back and bought it. But it sounds like you're telling me maybe it's not that simple.
So in the last 20 years, we've seen a 5 or 10% V bottom only happen about 42 times in 20 years.
Okay.
So not that common. The average recovery time is almost a year. So the fact that we've only taken 14 or 15 trading days in this particular example,
Yes.
it almost, and I heard Tom Sosnoff say this yesterday, it gives him even a little bit more confidence that he wants to fade this move. Now,
Interesting.
to what degree, I don't know. I mean, Tom's a short-term strangle guy, so he might just be fading and just doing his typical mechanical stuff. But I also think that this high to this low is going to have some type of influence on where these technicals go, maybe over the next 30 to 60 days, where if we get to this high, it would make sense that, that gets faded a little bit, unless it just gets stupid, where it's like, I guess the September effect isn't a thing. 75 years of data doesn't mean anything. The market wants to go up. Look, anything can happen, as we know, but this doesn't happen very often. That's my point. Is it's
Yeah.
it's not very common, number one, and having a 5+% or 10+% sell off. The average recovery is usually a year. It's not like this. And so to what we've talked about, I mean, here, anytime you get the market on a discount at 10%, 15%, 20%, it's proven in the long run to be very, very lucrative and very, very profitable. But the study that they did yesterday, they talked about this V bottom in 2022, and you and I obviously experienced a lot in 2022. This was a V bottom that, guess what?
Mhm.
It took time to recover, and this was a V bottom that took time to recover. That's your
Interesting.
your
Yeah.
typical V. Like, this drop of 5 to 10%, it took all this time to recover, and that's
Okay.
more of the
Yeah, I'm
average
seeing
V
where it's
bottom.
kind of factoring in here is when you
Yeah.
get these big kind of bear legs,
Yep.
they do not usually, it takes a long time, especially 2022 is a really easy example. You get all
Absolutely. Yep.
these kind of big down moves, and then where's the recovery? It's not for, I think it's like 1,800 days or something. Hold on. I don't think it's that long. Hold on. So from peak to trough,
I think it was
took
like
us,
3 or 400 days, I thought, right?
yeah, so 280 days to get down to the bottom. And then the total, if you had bought the S&P 500, that is 750 days, almost
Yep.
746 days approximately, to get back to break even.
Yeah.
So, yeah, I mean, to your point, usually you don't see snapback recoveries. We saw one in 2020, but that was a very anomaly sort of time in the market. And that was where
Sure.
the Fed
Well, that
just
was bazooka,
printed.
man. Yeah.
Yeah,
The
Fed
whole global
bazooka went
economy.
off.
Yep.
And so then, you saw the inflation problem, and this was more, I would say, of a real, this is probably the last few years, a standard looking bear market. I mean,
Yeah.
it
Yeah.
was probably like a cookie cutter example of a bear market, even,
That
inflation concerns.
That
Yeah.
might have been one of the I don't know if it ever feels easy, but it might have been one of the easiest bear markets, simply because it was down and up and down and up and down and up. And that was easy structurally to follow. It wasn't fall off a cliff. It's ripping 20,
Yeah.
25, 30% to the downside. That's the bear market
Structurally.
that nobody wants to be participating in, because,
Yeah.
the buy the dip is just getting absolutely murdered out there.
Yes.
And then you're just trying to guess, and it's like, we could be 30% off the highs. We could be 40, 50. I mean, worst case is what we're all thinking here. What if 2008, 2009 happens, or 2007, 2008 happens all over again? We got a 56% drop from high to low, and we're sitting here at these all-time highs where we've ripped. And I said this, man, there was a point of frustration this week where, if you look at what the market's been doing since 2018, when we had that volatility expansion in 2018 January, after that like low steady 2017, that's the closest thing I found was what we just dealt with. That
Yeah.
vol event we had in August
Yes.
5th, August 2nd, August 5th. 2018 to now, these markets have not been, other than booms and busts. That's all the market's been doing for the last 6 years.
Yeah. Just
You
these.
know?
Yeah. We've talked about that, the trendiness nature. I want to add one point too, also, while we're on the subject of
Yeah.
2022, guys. One thing for aspiring fundamentalists who may have been trading during this time, if you were like me, this year, or 2022, was an absolute challenge, because 2022 had a unique nature, even so, compared to like 2008. In 2008, you had stocks get absolutely devastated, but you had bonds like TLT, they actually did okay. The tricky part about 2022, and we've talked about this like 17 times together, Chris, but 2022, for the audience, 2022 was a year where it didn't matter. The only thing
Yeah.
that did well in 2022 was the US freaking dollar. That's the only thing that went up.
Yep.
Everything else, oil, gold, silver, stocks, bonds. It was such an enigma year. And the reason, if you want to ask why did in 2008 bonds go up, traditional risk off assets did okay in 2008. Gold, TLT, those things did okay. Why? Well, because 2022 was this really weird year. It was the post-pandemic effect where you had inflation coming in, but the economy wasn't crashing, right? The economy wasn't like crashing in 2022, but it was seeing inflation going off the rails, and people were saying, oh, the economy's not crashing yet, but it's about to melt up into a horrible crash. That was what was happening. So in that environment, if you remember, some of you who are listening to the bond story I was telling at the beginning of today's show, bonds do well when inflation is cooling, when the Fed is cutting rates. They had no intentions to cut rates in 2022. They were raising rates. So bonds got killed. Stocks got killed because the idea was, yeah, the economy's okay now, but all this inflation is going to kill us. And now, picking up the pieces since then, we have not seen the economy crash. And now we're back to the same old debate. At some point, the bears of 2022, maybe they're going to get their reckoning. Maybe they're going to say all this money that was printed, all this inflation, all the Fed's effects of raising rates so fast, maybe everybody thought it was going to happen in 2023. Maybe everybody thought it was going to happen in 2024. But maybe once everybody's fully convinced that it's never going to happen, it happens in 2025. Maybe that's the market loves to do these sort of big dab moments where it's like, got every freaking person on the entire Wall Street wrong. So I don't know. I'm not.
I mean, the Bears are going to be right. Once every 4 years or so, right?
Yeah,
give or take. So, and I don't think there's, however it shakes out, there's no reason to celebrate it. It's like you're either right or you're wrong, and you're either trading it properly or you're not. You're either, running for cover and hoping that things like, hey, wake me up at the end of the election. Let me hibernate for the next couple of years and let's see if the market dumps 50%. I'm in all cash, Nick, and nothing's gonna. I want to wait for that 50% pullback and I'll buy. It's like I'm gonna trade it all the way through it, regardless of what happens. Yeah. And the way that I trade it is what I share all the time, which is I like trades like this. I like trades that I don't have to pick a direction, dude. I can pick a trade for 1 or 2 weeks out, let the thing do what it wants to do, have a high percentage of profit. If the market goes way past one way or the other, I still make money. The one thing I do expect is that this market will move, and we know in a bear market, the market moves typically faster. So I just hope that if we have a bear market, I'm more on like the tactical side, where it's like those are the type of trades that I'm putting in my portfolio a lot more than just buying and holding. Because 2022 is that, like, my inflation plays in 2022 for the first 3-4 months did really, really well. And then it was all about currencies and FX in the second half of the year, because my stock portfolio that I was liking and holding, and they were just trash. Like bonds were bad, everything was down. So it was a crappy second half of 2022 outside of Forex kind of allow me to maintain some of the gains I'd taken earlier in the stock market. So I still can't find the stupid revision, dude. If anybody gets a revision on this non-farm payroll benchmark, let's get the number and give us a source, because I'm checking on this is FX Street. I looked at my FX book. I'm not seeing anything here. Employment rose 1.3%. So U.S. employment rose. Is this it? Oil surges, significant inflows in gold, Fed minutes. I mean, I'm not seeing it, man.
Yeah, but if anybody finds it, please let us know. Chris, I'm gonna back out, give you the floor here for a little bit. Before I do that, Chris was just talking about something kind of interesting to some of you guys. If you are interested in learning more about options, where you don't necessarily have to pick directions all the time, you can make money just kind of if the market goes sideways, slightly up, slightly down. If you're a seller, there's a lot of different ways you can trade the markets. You don't always have to be so focused on direction. If that's something you're interested in, I'd encourage you to follow Chris Pulver on his YouTube channel. We just dropped a link to his in the chat right now. And last thing I will say, we've got 3 days left, everybody who's listening. 3 days left. If you have not, heads up, three days are left for the Edgefinder free event this week. Anybody who would like to try out the tool, it is open to the public. All you have to do is apply for the Edgefinder free week using the link that just got dropped in the chat. So take advantage. 3 days left. That closes down Friday. So Chris, you got it from here, man. And thanks for taking over.
Of course. All right. See you, Nick.
All right,
Thanks.
man. See ya.
All right. So to Nick's point, just in case I can reiterate, how nice it is to trade some options. This was an earnings play on TGT. I talked about this earlier this morning in the session. Frank and I discussed this trade in detail yesterday. Went through the whole process. What do I do? I look at the expected earnings for the week. I look to see what the average earnings reports have been the last 10 prints. It was a toss-up trade. It was 5 out of 10. Hit the expected move. This one was well beyond the expected move. We had a close here yesterday at 144, and we gapped up to 167. That is nearly a 2x move. I mean, I calculated, I think conservatively, about a $14 move. I was looking at 10%, and the average move is around 12.5. So I was fairly conservative, but turned roughly an $8 trade into a $13 credit. So I mean, I made $5 return on an $8 position, which percentage-wise, that's pretty darn good. I'm in the trade yesterday. I'm out of the trade this morning, and I have zero ownership of Target. I'm not interested in owning the stock. I don't care what direction it went. I'm just happy that price moves it. So there are earnings. There's earnings season during these quarters. They're easy to trade. I mean, I've got plenty of examples where I've taken plenty of trades with my groups in my trade rooms, and we've had majority of profits. You see a lot of green on this chart. That's what we do. We're trying to pick and choose like good stocks, good movements, good calculated mechanical setups, and it tends to work out pretty nicely. So anyway, that's that, and that goes to the same thing, not just individual stocks, but for the indexes. Right now, I do have a couple of option plays running. Let me check on a couple of things here. So I'm kind of break even on my QQQ right now. I do have an SPX trade from this morning. Let me do a spot check on that. Frank might hop in here with me a little bit, and we might go long-winded again today. SPX trade here. So already in profit. Okay, that trade's done. Perfect. So I needed 267 on the debit side. I got it. It's down to 230. So it was a 315 credit. And grabbed about $50 profit out of that this morning. So profit, and it's only 1027. So by 10. Excellent. That is, here's another trade tracker for you. So the last how many days? So look, it's not surprising that during all the drama we saw like August 1st through the 5th. Okay, I did take a couple of small losses there, but that is 2 losses. And then we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So I have 14 winners, and I have 2 losses in the last, 16 trading days. And then beyond that, there's a lot more winners than there are losers. I think this now marks around 30. I think this is 38 or 39 out of 45 or 46 trades. So win percentage is up there, like mid 80s, high 80s. And that's the trade that I expect. So there's opportunities all over the place for, daily income, weekly income, monthly income. That's why I like options trading. I'm way more active in that than I am in any other asset class. I trade options on stocks. I trade options on ETF and indexes. I trade options on futures. I even trade currency options when it's appropriate. I mean, everyone's talking about what's the dollar going to do. I trade gold options. I trade silver options. I trade Bitcoin and Ethereum options. I trade all these instruments because you don't have to necessarily be right directionally. Okay. The nice thing about options is you can define your risk. You can take a trade knowing like this is my probability, this is my line in the sand. So again, I can deep dive into all this stuff. I do a lot of private sessions, a lot of private workshops with small groups. That's always open. I mean, on my Discord channel, everyone knows how to contact me through my Discord channel. So I do a lot of private instruction in that regard. Again, I love to teach this stuff. I've been doing it for years. I just think it's nice to see like I see this like light bulb moment go off in these traders' minds when it's something they've never thought about trading. But it's like, just think about what you want to do to trade. So as an example, I'll just pose a question to all you out there. Okay. How many of you are bullish on gold? Just type in bull if you're bullish on gold. If you're bearish on gold, type in bear. But let's look at gold. All right. And I'll just talk through this scenario. Okay. There's ways to trade this where you don't have to be allocating tons and tons and tons of capital to I'm bullish on gold right now at all-time highs. All right. Okay. Nimmer's bullish on gold. Lauda, Lavinia, bullish. All right. A lot of people are bullish on gold. All right. Should I be a contrarian and sell it now? Just kidding. No. So like I said, it's hard for me to justify being bullish at all-time highs, but at the same time, I do think that just like we saw back in late 2023, we ran up here, we had some consolidation, and we're going higher. We ran up here, we had some consolidation, we're going higher. If we run up here and we have some consolidation, this might just continue to be a pretty steady bull market. Okay. Pretty steady bull market. Now, rather than just straight up buying gold or even speculating on gold at these prices and trying to get it right directionally, here's what I can do with options. I believe that if I say, look, 2270 is my line in the sand, I can take a trade that generates profit for me as long as gold just stays above 2270. And if we have this level and all of a sudden a floor becomes like 2470, I can do the same thing here and say, as long as price stays above 2470, I can make money. And time can be on my side. I can extract premium for the market. I can get paid to just basically make a trade where it's like, look, I can risk, let's say, $100 here, and I can make $100 here, and I can stagger this out over months and months and months and generate very similar returns. Like, here's the nice thing. Let's say gold doesn't just rip to 3,000 and it stays sideways in like a 50 to 100 point range. If it does this, I could generate income month after month after month with gold actually going nowhere. As long as it doesn't go down, and if it does go down, I can reposition. If I took one contract here and I take two contracts here, I can always size in to get the trade that I want and get money back if I take a small loss. So to the same way that you would look at buying something, putting a stop loss in, and hopefully it goes to your profit target if it goes higher. What I love about options is you can make money if price goes up a little, price goes sideways, price goes down a little. I can make money on all those scenarios and still get paid, right? So directionally and time-wise, I don't have to do any of that. I just have to decide if this level is where I think price won't go to or won't go past, I can get paid on that. So that's how options can work, is you can construct these trades where there's 4 directions and time that can all work in your favor. And to me, that is kind of stacking the odds in your favor a lot more so than what's a directional play for most, right? A directional play for most is I get in, it's a 50-50 shot of whether it goes up or down, right? And yes, it can be based on technicals, and yes, it's based on this chart pattern, and yes, it's based on this. There is still a huge amount of randomness in the market that we will never know all of the infinite amount of nuances in the market ever. Never. So all we can do is trade and be prepared. So if I trade any asset class, I have a plan. There's usually defined risk, and I just take lots of trades. I mean, I'm probably a trader that I probably do close to 1,000 trades a year, maybe more. Just in options alone, I probably do more than that, honestly, because a lot of my legs are four to 8 legs. So if you count each one of those, I'm probably taking thousands of trades a year. But they all serve a purpose. And then in Forex, I'm a little bit more passive. I tend to be an investor in Forex where it takes me, 3, 6, 9 months to invest in trades, and price goes my way and I kind of build positions towards profit targets. And then individual stocks. I mean, I like to own the indexes. I have certain stocks I'm willing to own in my portfolio. I like to trade gold and silver. I've been a lot more involved in crypto since 2016, 2017, way more active the last 3-4 years, especially as crypto's become more mainstream. I have it now for some of my managed accounts as well. Okay, so anyway, that's just story time. Just throwing it out there. If anybody's interested in learning more, I'm happy to share, and I will give you, from the simplest strategy that I can give you to the most complex. It doesn't matter to me. Like, if you're willing to learn it, I will teach it. Okay. All right. Revision lowered 800,000 in March. Ooh, okay. Where's that source at there, Alan? Where's that source? I want to see if it popped up. Is it real? There we go. Okay, so we had a revision would cut March 2024 levels of employment by 818,000 or 0.5%. Well, let's see if that's a market reaction. It might just be, I mean, this is a news thing I've never really paid attention to. The only reason I'm even thinking about it today is I heard it on a couple podcasts over the weekend. And it was maybe this like sneaky little fact that it's like, yeah, we've fluffed the numbers by 800,000 jobs. And okay, does that mean there's an immediate reaction? Does this mean that the Fed is actually behind the curve, that they need to cut? Does this change the CME watch tool for the Fed? Now all of a sudden it's like, well, the Fed's likely going to cut in September. Are they going to cut more because they realize like, oh my gosh, the labor market's way worse than we thought? Or is the market going to be, making the drop? So anyway, I'm watching the Qs, muted reaction right now. It's 10:35. We're an hour and 5 minutes into opening bell. I don't really see a lot happening here yet, but we have FOMC minutes today. I do want to go back to the seasonality of the market for a moment. Okay. So we have stocks push higher in positive corporate news and M&A activity. That's another thing. Like, let's chat for just a quick second on how else does this market go higher? Okay. So has everyone heard the term? Has everyone heard the term positive drift? Type in a wire yes if you've heard the term positive drift. Okay. So basically that is an instrument that by design goes up. Okay. You can go back 70 years and there is an actual edge in the market if all you did was traded the S&P as a buyer. Most of the time the S&P goes up. And in the long run, you've seen that, yes, we're at all-time highs. We've gone higher and higher and higher. We survived all these things, from wars to, inflation cycles to deflation cycles to recessions to expansions to whatever, all that stuff. But the market just keeps going higher. Now, we're sitting here now talking like when the end comes next, it's never going to be the same. And it's going to be this. I mean, that's bear porn stuff, right? That's not what we trade. We just keep trading. We navigate the markets. But positive drift means the S&P by design is supposed to go higher. All right. Why is that the case? Because if we see a strong economy, whether we're in a recession that we're coming out of, whether we're in an expansion that we grow and it goes way further than people think, maybe we're at this like Goldilocks environment where everything is good, the market is supposed to go higher. And the S&P, for example, you're taking 500 of the largest companies in the world. And what we've seen over the last couple of years, especially, is that the biggest companies, so 10, right? The top 10, the top 50, they have been big enough and strong enough and successful enough that they are carrying this market cap weighted index higher. And so right now we're looking at this positive drift is also led by this very narrow concentration of the biggest companies are carrying most of the weight. That's why I showed this Mag 7 stat earlier. Okay. But what else do we have that keeps this party going? Okay, right now there's a reaction to QQQ. I'm looking at the 5-minute chart. We're up about $1.70 in the last couple of minutes here. Here's SPX, making a nice little rip. This is another reason I like that little daily strangle trade. That was out within the first like 30 to 45 minutes of trading. Now directionally, the market's looking to make a run. We're not that far away from all-time highs. If I go to the SPY 561, I'm looking at a 565. I have a long call out here to 565 this week. Let's see if that gets me paid. So let me check this real quick. If I go here, I think everyone has this SPY trade in. And I'll get back to the positive drift here in just a moment. Pan West was another one for earnings. We're at 367. This stock is actually pissing me off right now. So I took the trade at 710. Right now it's showing a debit of 561. I just want to get the heck out of this trade for a win. I'm going to try to take it at $6. This should give me a $1.10 profit. But the bid mid ask is just absolutely garbage. So let me try this stock here. It won't freaking fill, man. I mean, I could just sit on it by the end of the week, which is Friday. If we stay above 365, I'm gonna make $3.55, or no, 355. Yeah, that's right, 355 on one trade, and then lose $1.45 on the other. So I'll make around $2 and change. But I can't believe for a stock that has 3.2 million average shares that I can't get a freaking fill on a mid price. So anyway, I'm expressing some frustration. What was I going to talk about? The SPY right here. There's my 565, which right now, if I look to close it, I got in here with a 90-cent debit. Okay. And I'm up $114 right now and climbing. So I'm still looking at the Qs. I'm still looking at the SPY. Let me see if my gamma squeeze levels are getting any bigger. Let me float this out here. So this is the level that I'm watching. This is starting to fill up. I think we're gonna magnetically, head up towards 565. I'll probably take some profit in this one today to be on the safer side. So let's see if we get a nice little push to the upside. Come on, man, give me some nice little runs. We're at 55 to 19, call option over put option. Let's get a push. So I'm in some profit. I think here's what I'm gonna do, and I'm not losing my thoughts here, right? I'm just multitasking, I guess. I'm in some profit. I paid this trade initially. My trade price was $1.10, and I'm going to go ahead and move my stop loss to break even or better. So if I go to close in full, I'm just going to turn this into a stop loss. So what my paid price is $1.10, is trading for $1.47. I'm going to go ahead and move my stop loss to $1.15 and make it break even. I don't have to worry about it anymore. So review and send. Okay, so I'm break even at 115. Let me do this for all my accounts really quickly. So SPY 565, trade price at 110. Put in that stop market at $1.15. Up a couple of bucks there. All right, so I just got to get this in for everybody. So close position, stop market, $1.15. Okay. So that way I lock in at least a break even. I don't want to lose on the trade. I'm going to give the market a chance to run maybe another 50 cents or $1. If we hit 565 today, then I'll probably close this out for several $100, which is pretty good. So let me see here, close in full, stop market, and $1.15. There we are. Okay, so just bear with me while I try to get these stop losses in. Okay, got a couple more accounts to do. What up, Frank?
Chris,
I hear you breathing. What's up, man?
you can hear me breathing?
You just came in. I just heard it.
Oh, that's
That's creepy, right?
yeah, it's a little creepy. Now,
All right,
I'm thinking about my breathing.
Yep, you got to think about punching that keyboard and breathing, man. I hear all with this headset. It's really just it magnifies everything.
Do you hear me before I get into this room?
When the audio picks up, I can hear it. Yeah.
Oh, that's funny. Yeah,
right,
I let it all out before I get on the stream. I scream.
Just pillow scream before you jump on the stream.
Breathe really heavily.
Yep.
That's why I'm so calm on the stream.
I know. You got nothing left, man. Just that pillow yell.
Yeah.
All right, 115. All right, so this is the last stop loss I need to throw in here. All right, so P&L wise, I'm up around 175 bucks on that contract. I'm willing to sacrifice it, but I'm not going to lose on the trade. So that's the main point. Is I'm just looking to see. So now directionally, if I go to this, so this is SPY. I think we're going to make a run today, Frank. This gamma level's been called out since yesterday. 565 is looking pretty good. The market's reacting to the upside. There's not a lot of bears right now, and this call option volume is looking good, and this magnet's at 564 or 565. On the day, we opened up around 558. We're currently up around it's 558.60. We're up to 562, so that's like a $3.50 move. I think this market can give us a $4 to $5 move. If it's a directional play, I'm going to try to close out and manage that SPY call option as we get into like this 564, 565. So this could turn out to be a pretty good trade, man. I've got a couple contracts long. Hopefully.
So they're just calls. They're nothing. They're no spread.
Calls. Nope, no spread. This is just it was actually an out of the money call option. I bought the 565 for Friday expiration, and today's Wednesday, so I still have a little bit of time left in it, which is nice, and that helps me in this position. So if this 565 level is hit, let's go to the 23rd. So right now, 565, I took this trade for $1.10. If we get at the money today, this is what's kind of nice. I'm ballparking this, but if we get at the money, I can tell you approximately what my trade's going to be trading for. So at the money is around $3, which means if I wanted to go ahead and put in like a $3 limit, that's about where I would be at right now. But I can give you a more exact calculation. So we're trading at 561.96. Let's just say 562. So that gives us a $3 move, and my delta is currently a 34 delta. So if I have a $3 move at a 34 delta, that's another $1.02 on top of this $1.60. So if I want to put in a credit, I paid $1.10.
Okay.
So if I close this thing out for 263 and I take away my payment of $1.10, that would be 139% return on capital in 2 days trading.
Yeah,
So
it's
not
nice.
too bad.
I like taking out of the money calls and puts when you think there's gonna be volatility.
I use this style a lot during the week when I see these levels light up. So when I see these big gamma squeeze levels lighting up, I will typically what I don't do is and this was early learning curves in like 2022 when I was doing some zero DT experimentation. I don't necessarily do zero DTE because I think that's the hardest thing to be right today. Plus the time decay, it totally works against you if you're long those options. But if I'm willing to just pay a little bit more, like go to Friday, give it a week, and usually within a couple of days it hits those gamma levels and you're profitable. So I might pay a little bit more for it, but for me to pay a little bit more for it and see it, probability of profit is higher, I still generate 80% return on capital, 100+% return on capital. I would do that a lot more. So I love that trade. And this was spotted yesterday. I had you can see if it shows the date that I took the trade. Well, it's I tracked it in my Streamwise account, but I don't know if it shows the date here. But I took this trade, I'm pretty sure yesterday morning I took this trade.
Nice.
So nice thing is it's break even. I can't lose on it. So that's fine. But obviously I don't want to get stopped out at 115. I want to try to get this thing up to $2, $2.10 and change, and let's hopefully grab a few extra bucks.
Nice.
So
My
dude, I meant to message you on Discord, but did you do anything with Target with me or no?
No, I didn't take any earnings plays, but I was gonna say that the SPY butterfly right now, I had the broken wing butterfly, but there were puts
Yes.
above.
Yep.
Price. So those right now are reading. I have one Thursday and one Friday.
Okay.
And
What's Thursday?
They're both the same. Both. Well, I think
Okay.
the one on Friday is a leg higher. But
give me the strikes for Thursday. I want to look at it right now. What's the Thursday one?
Thursday is 55, 65, 70.
All right. Just give me the
56, 65. Or
you're doing SPX. SPX?
Yeah.
Okay, yeah, SPX. Gotcha.
So 56, 55.
Okay, so 56.65, 56.65. Is that the sell price?
The sell price is 56.65.
Okay,
that was,
and then we're doing this. Is that correct? 56.65 sell, and then you did the skip strike, so you've got the 56.70 on the long and the 56.55 on the long.
Mm-hmm.
Okay, so you took the trade for $4, right?
Yeah, so now it's at 340.
Okay.
The one for Friday is 330, now trading at 265.
Okay.
But I'm
so
wondering,
you're getting some quick decay out of that, which is interesting.
Can you? I mean, you could just close it even if it's not there yet, right?
You could. I notice this though. This is the mid price. Okay. The ask versus the bid. If you're closing at the mid, like I'm seeing this number jump quite a bit. If you can close it, I would just be conscious of, you took it for a credit of $4. If you can close it down for 350 or less, or obviously you're trying to close it out for a net credit. So yeah, it would be doable, but I am seeing some wider spreads, which I don't love, man. This is the SPX. Like, why the heck is this thing so wide? This should be trading within, my gosh, within like 20 to 30 cents, and we're sitting here like $2-3 apart in these spreads.
Well, the NDX is worse.
I know it is. I know.
So I think maybe it's just going to have to be in the money for you to sort of get better spreads.
Possibly. But it's like, I certainly don't love trading options with it's not like this market's illiquid, but I don't like trading spreads when if I can't get filled in the mid price. I mean, I was talking about this morning and I was complaining slightly. Palo Alto, I mean, we're trading at 366. I have a 365. And all of my trades on Palo Alto are showing like a $5 debit, and I can't close the darn thing down. Look at this. So if I take my Palo Alto credit spreads, it's showing. So I got in for a 710 credit. It's showing a mid price of 627. It was showing a $5 debit earlier. I can't close this thing down at all. It won't fill. So I'm going to take my chances on this one, and fingers crossed that we stay above 365. Because if that's the case, then I close out for about fudge. Dang it. I just got hit on that stupid SPY trade for break even. That sucks.
Wait, you're talking about the call?
Yeah, the long call. So I was in at $1.10. It just, I mean, look at the SPY. It just reversed from 562 back down to 560. So I was up. It was up $1.60, $1.70. It just dipped back down to $1.10. So I got triggered there at $1.10, $1.15.
Yeah, this market has not been fun the past couple days. It's just been honestly no big moves, like overall. I guess no direction, but intraday there's just big swings.
There's chop, yeah. $2-3 swings are. I mean, that's not big swings, but it's just noisy, right? Like yesterday, we started out with a move up, move down, and it just went sideways. Started out quiet this morning, leg up, leg down.
I mean,
it makes sense. It's noise, right? It's noise.
It's big if you're trading options, because these couple dollar moves are just ruining your profit.
Yeah, I mean, I had $200 profit that just turned to zero. So yeah, that sucks.
Yeah, but I think it's just gonna be a lot of back and forth. Because like, what is Powell gonna say today?
Nothing. He's not speaking today. It's minutes today. So
Powell's
Friday.
Which one is the interview?
His speech for Jackson Hole is going to be Friday morning at 10 a.m.
I know that, but there's one where he's got a one-on-one interview with someone.
I don't know about that.
I don't know. Maybe it's like 60 minutes or something. Is what I'm thinking of.
Really? Yeah. Maybe Elon Musk will interview him.
But that would be
on
interesting.
Twitter. So I'm actually, so in addition to this is kind of cool. In addition to a break-even trade that just took on the SPY, this thing is picking up some steam here in a little bit. Now, I'm not super convinced, but I will say this, Frank, if you and I are looking at this SPY and we're taking out this low, if we are taking out this low from yesterday, there is a chance that taking out this low from yesterday has some more potential downside to it. I'm looking at the Qs. I also have, which has dropped, by the way, from 484 to 480. We've just had a $4 drop in the Qs. Again, I'm not saying this is bearish, but if we take out this low from yesterday, I do have a 477 and a 475 long put on the Qs. And so if IV is cranking here, let me take a look. This might actually be looking a little bit more attractive right now. So the SPY just got stopped out. That trade got stopped out. That's zeroed out. I go to the QQQ. I have a 477 long put. That's right now break even. If we move down to that level, let me check my SPY trade. That's done for now. QQQ. This is my 475 gamma level, and I have the 477 long put. So if that is, gonna hit, like if it's gonna hit 475, I can calculate about what my profit would be, and I paid $212 for the long put option. Right now it's trading at this is a 23 expiration. I paid $220. It should be break even or better now, which is good. We're trading at a 33 delta, and we're looking at about a $3.80 move. So if I go 3.80 times 33 delta, that's $1.25 on top of the $212 that I paid. So right now I should be able to close out, if we hit my strike price, I should be able to close this thing out for about $3.35 roughly. Now, if it goes aggressively down to 477, then I get that extra kind of gamma squeeze, and then my deltas change and all the stuff with the Greeks. But this maybe trades at 350, 360. I'll treat it the same way, dude. If this is going down in my favor, I'm going to try to get this thing at break even or better. So right now, there's my trade. 212 price. If I look at this, oh, that's because it'd be if I took the fresh trade now. It should be trading for 240. What the fudge?
You know what I
All
think
right.
is going to happen?
What's going to happen?
Say it goes down to 477,
Okay.
creates that lower low, I guess, and breaks the support.
Okay.
I think that's going to lead to a higher high after.
Think so?
Yeah,
You think so?
I think the way it goes in what we've seen like the past couple months is that when the data is not out yet, or there's some volatile event, or the data is mixed or whatever, the market runs really hot, then comes down really hard, forms a lower low, which seems like a break in support, only to come back and form a higher high. And then that keeps going back and forth, and we get this megaphone pattern, and then eventually it breaks out higher.
You like that? So you're talking like this style where like it gets really nasty, but ultimately this is.
I'm talking on lower time frames. I'm
Lower
talking
time
like
frames, okay.
5-minute, 15-minute. You see these like patterns form where it goes up intraday, comes down really hard, forms a new low for the day, then it comes back up, makes a high for the day.
You want to know what I want to see, Frank? I want to see my 477 get profitable, and I want to take some profit. That's all I want to see.
It's going to have to move down there fast.
I mean, I've got till Friday. So if it happens today, tomorrow, cool. If it happens during Powell's speech on Friday, fine. Ideally, today is better. I mean, if we're actually getting this to be like the flavor of the day, but something tells me that this is noise, man. I mean, we're up, we're down. We can probably do a little bit of nothing. I'm not surprised if the market decides not to do anything today. There's no major data. Yes, we have FOMC minutes this afternoon. But look, I'm saying the gamma level's there. I see those levels get hit all the time. It's typically a magnet to price. It's starting to fill up and the contract size gets bigger. So we'll see. But worst case is like, okay, what's $200? Okay, out of $250,000. Less than 1/10 of 1%. It's like it's no big deal. So it's just a trade. If it pays out, cool. If it doesn't, I'll move on. But I'd like to see it. I think there's something to be said about the software I've used for the last couple of years, and this thing finds a way to like give me accuracy. And right now, the only thing that I see is the bears. Oops, let me get this color. The bears are showing slightly more power when it comes to this 475 level, as opposed to what the bulls had up here at 485. Now we tried, but if that's a hedge level too, I don't know, man. I mean, we can see there's still intraday support from yesterday. And we look at today, it's like maybe that is still kind of choppy, and it's going to have to be a level that maybe maybe Jackson Hole is not the breakout trade. I did want to show you from my, let's get that one up here, from this trade that I took on Monday, this wild and crazy thing. So price has really gone from my center price here, Frank. It's only gone up about 35 points. And I'm seeing over $3 of profit on this trade. So another reason to kind of, again, I'm justifying it in my own head here, but another reason to look at this trade as it's preserving its value. It's number one, it's gaining in value. Number two, it's preserving in value. I mean, I closed this thing out for like $19. Now it's up at another $1.80, $1.90. And price hasn't gone any further. Like we're just kind of at the same price that I closed, but actually, a little bit of time in has helped quite a bit. So anyway, I think it's awesome, man. I mean, I'm just a little bit more convinced that all the potential, like what's the market going to do? We're going to be at higher highs or lower lows. We're going to have chop suey. Look, choppy markets. I think choppy markets can still give us like 50 to 100 point moves on the SPX. That's all I need, right? I calculate this type of trade with like a 40 to 50 point move one way or the other. It still pays me. So I think this is going to be a little bit of my bread and butter here the next, probably 30 to 60 days, maybe forever. But yeah, I like it.
I think it has potential next week.
It does.
But this week is probably just going to be a lot of back and forth.
But I made profit on it this week.
Which is good.
Yeah, I'll take it.
Are you going to close it? Is that what you're saying?
Yeah, I closed it. I opened it for 1750. I closed it at 19. So I was out on, I took the trade Monday and I closed it Tuesday morning. So it was pretty easy.
That's a good trade, but Is it? It seems like a lot to put up 17 and make like $1 something off of it.
I agree. That's why it's not like my favorite, but if I put up 17 to make $3, that's a little bit better, right? Making a 17% return on capital over 8% return on capital, it's a big difference. But it's still a profit. I could have done nothing and let the thing just manage itself for the week. The only reason that trade is a little cumbersome to me is it's a lot of trades, dude. I mean, it's all calls, all puts. It's 8 legs. It's 10 accounts. It's freaking 80 trades. More than that, actually, right? 8. Yeah, it's 80 trades. So I've got to manage, 80 positions. And granted, it's like groups of 4, but it's like I've got to go in and do a lot of opening, a lot of closing, a lot of comparisons, make sure the bid mid ask is accurate, try to get everyone filled around the same prices. But worst case scenario is like, okay, I put in a limit order and I let price kind of, finesse that limit order for the day instead of trying to be like, I need to get out right now. That's why I'm tracking it so closely this week, is because what I'm noticing is price hasn't necessarily gone anywhere outside of the 30-40 point move that I calculated early in the week. And it's actually in more profit by Wednesday than it was on Tuesday. So that's promising. And if we went further up, it'd be in more profit. It'd be trading for like $23, $24 right now. My max profit on that trade, by the way. So my max profit's around a 2-to-1. So it can get up here. Like if I hit this trap or this trap here, I would be trading for probably like $32.50 to $35 in this profit trap. In price to do that, if it was centered here, that would have been up around 100 and I don't know. Let me see what the legs were. They'd be 100 points. If we went up 100 points in direction, then I would pretty much max this thing out with profit. Which means I take a $17.50 debit, I turn it into a $32 to $33, $34 credit. That's an awesome win, and price can do that too. We go to the downside. It also gets really great. Like if we have a giant bear market, or not bear market, but a giant crash, and we have a nasty 1, 2, 3% sell off, that's enough to get the bear side to pay out really quickly. So anyway, point is, you're going to see me do a lot more of this trade. That's it. Really quickly, I want to get your thoughts on the dollar index. I talked about this morning in my trading room. Are you convinced that the dollar is going to continue to plummet? I'm thinking the dollar is going to bounce here pretty hard around 101. I don't know, man. I don't think that the market's going to just rip this dollar a new one down to 199. Part of me thinks that this 101 handle is going to bounce like it did back here in December, like we did back here in July. April and February 2023. We're also getting some oversold conditions on the dollar, so I was curious what you had in your technicals.
I'm dollar bearish because I don't see improvement in the economy really, and labor market stinks, and then inflation is stubborn. So I think if that continues, the rate cut either way is not going to be like relief for. I mean, it's going to make the dollar weaker, but you would think that business would pick up. I don't think a 25 basis point cut is going to do much for the labor market or business. So,
you're looking at weaker dollar. Are you looking at, so what happens with weaker dollar with a weaker stock market? That's the only reason I'm looking for a bounce, is if we have a bit of a top in the stock market, I don't think the dollar necessarily just plummets with a weaker stock market. The one thing that dollar, and so on this, by the way, this has been one thing that's been frustrating. The dollar drop here from highs at 106 down to currently 101 and change. The euro dollar is about the only currency pair that has reflected this move, like correlation wise. It's been really easy on the euro dollar to see that we had a wedge. Euro dollar did the same thing, but we had higher lows and we've broken out of this wedge, and now the euro dollar is in some open space. So anybody that got a chance to be long euro dollar, this is a great spot right there where it was break, retest, and go, and now you just be trapping some profit. I again, we can agree to disagree. I think the dollar is going to bounce at least notably at 101. If it doesn't, I'd be surprised. I think this is the market pricing in the rate cut, not necessarily making it worse. If we get a rate cut, sure, it's been priced in. That's my thoughts on the dollar.
Yeah, I do I mean, obviously, yeah, they are pricing in.
Mm-hmm.
That's why it's moving lower. But I think future-wise, I don't necessarily think the economy is going to be better in 2025.
Agree. But is
So
whose economy is going to be better than the U.S. in 2025? ECB? Is European economy
Brazil,
going to be better? The UK, are they going to be better?
Brazil, Korea, Japan.
Okay. Well, I mean, sure. So I'll stay long FXY and I'll stay long Japanese yen futures. That's fine. But the Japanese yen is its own island, man. Like there's if you want to talk about trading at random, just trade the Japanese yen. Like if you want to follow, flows and the BOJ, and good luck. Like you'll get one great trade a year, and it'll move 1,000 pips, and then the rest of it's going to be who knows. But I think there's
That's the only trade you need.
It's the only trade you need, I guess. Yeah.
No, I don't know. I
right.
really don't know what's going to be better, but I don't necessarily think it matters because if the U.S. is going down, everything else comes down.
Yep.
Just because it's a better deal than the other economies doesn't mean that the dollar's not going to lose value.
Well, yeah, I mean, we lose value every day with purchasing power, right? But no,
I'm
just looking at it
thinking
technically.
gold still. Like I think
Gold's great, man.
gold's going to be better for the rest of this year and 2025. The dollar's not going to be as strong, in my opinion, and the stock market's probably going to start to catch some headwinds, I would say, in 2025.
XAU, XAG. Let me see. So I'm kind of liking this one too. This is XAU, XAG, which is gold versus silver. I would love to see that silver can kind of step up and outperform here in the next maybe couple of months. If this ticker goes lower, this is why I'm still long on gold. I'm long on silver. I did add some extra exposure. I built a workspace yesterday that I wanted to share. Gold and silver, pretty much on the nose. So this is gold, this is silver, this is GLD, this is SLV, this is PHYS, which is a gold bullion buy, and then this is CEF, which is actually a gold and silver trust. I'm not quite in the miner space. I don't know enough, nor do I pretend to know enough about like junior, senior miners. I know there's still a catch-up trade there because they've been kind of underperforming, and with the spot price where it is. But the problem with miners is that the overhead is still it's really, really high, and they spend so much money to build a project that may or may not pay out. It's like I might be, I hope I'm not like underestimating this, but I think like it's 1 in 70 projects that actually have like a payout.
Yeah.
So that's why I'm like, I don't know, man. It just seems like if the miners have like gold on their balance sheet, sure, it's at all-time highs, and gold's looking pretty good and still great for the next foreseeable future. But my point is, I added in, so PHYS is not expensive, CEF is not expensive. I added about 1% on each to add my total gold to about 5% of my portfolio. So Bitcoin's around 3%, gold and silver around 5%. Actually, with gold and silver, it's probably around 7 or 8%. Also, interesting statistic. Question for you. You've heard of the 60-40 portfolio, right?
Is that like be 60% in the market, 40% cash or something?
60-40 is traditionally 60% equities and 40% bonds. It's supposed to be considered the balanced portfolio because if the stock market dips, you got your 40% bonds that if they're non-correlated, it's supposed to be like that risk off, to kind of save you. Historically, it's worked. Sometimes it does, sometimes it doesn't. But what I thought interesting, I heard this in a podcast this last weekend. If you replaced the bond portfolio with gold, it's the exact same performance over the history of the stock market, which I think is fascinating because to me personally, I'd much rather own gold than bonds. Because if we ever had a credit event, if we have these like widening credit spreads and all of a sudden we have like a downgrade in the US debt, I'd rather own gold, So I'm way more in the camp of if I was even, and I don't have a 60-40 portfolio. I'm not even close to that. I'm like, 99% options and 1% everything else. But still, it's like I balance the portfolio in a way that exposure-wise, I have a little bit in bonds, but not a lot. I mean, I'm probably sitting
Right.
about 5% in bonds, and TLT is my main focus. But I think gold is a good spot where it's like, that's a big chunk, dude. Can you imagine like 40% of my portfolio is just gold? That's a heck of a hedge, dude.
Wasn't
mean-
like 10% of your account Bitcoin?
Personally, yes. Yeah.
Personal account?
Personal account. 3% for managed accounts, 10% for me personally, yeah.
Okay.
Yep. But I also have 10% in gold. Like I'm 10% Bitcoin. I've got 10% gold and silver mix. And then the rest is just tradable. I'm still cash too. I've got probably 25, 30% cash, and the rest invested in mostly just heavy options.
Yeah.
So
I
it's a mix.
wonder what's going to happen with Bitcoin this year.
Well, it's resilient, but I mean, I think that the Bitcoin, the Bitcoin Q's correlation, I think that has to be either we have to break that correlation or we have to see that it's still a tech play, even though nobody says it. All the maximalists out there say like Bitcoin's the greatest thing ever, and I get it, but I'm not an all eggs in one basket person. And so I like Bitcoin for what it is. I think it's good to have. I think it's been nice that it's been widely adopted now. I feel a lot more comfortable having, managed account exposure to it simply because it's not at zero and it's hanging in there. But the issue that I see is we have gone to all-time highs from March to July in the indexes, including the NASDAQ, and Bitcoin has not. That's my problem, is like there's clearly a disconnect here where Bitcoin is just hovering. And maybe all this is here, Frank, is just a massive accumulation. But I would be frustrated to see that if we make all-time highs again and again and again, if Bitcoin's not doing the same thing, that's going to bother me a little bit. Because typically we've seen good runs in the stock market with good runs in Bitcoin. I don't know. I mean, I think it's a good accumulation phase. If anybody's out there having zero exposure to Bitcoin, it's not a bad place to start. I still look at it as an asymmetric trade where 59,000 with the potential spot price of 125, 150, or all the way up to $1 million for the pie in the sky number. It's a crazy upside. I mean, 2-to-1 is still freaking great. Like 100% gain is awesome. A 10x gain or 20x gain is just unreal. So
Yeah.
I think that's what it stands for me, and that's why I'm willing to kind of have an allocation to it.
So this could be a little controversial, but
Okay.
I've been staking Ethereum since like 2021.
Okay.
Um,
Is that paying? Is that paying anything?
yeah, so it's like I only have like $200 in it.
Okay.
So it's not a lot, but I'm getting paid like 4 or 5 cents a day. And I mean that's not bad.
Yeah.
But I'm I'm just thinking, so this APY is 2%.
Okay.
I haven't been able to touch it though because Ethereum 2 has not
Right.
been done.
Right.
So I don't know. I wouldn't recommend it, but I'm stuck in it now, so we'll see.
Well, it could be worse, dude. I mean, I've got a couple of buddies that got into mining. They were mining Ethereum, mining Bitcoin. They were into the tune of 6 figures that they haven't seen a return on investment yet. So could be way worse.
Yeah.
I was not at all interested in that. So I had there was a guy that I talked to out here in Utah that he has 4 or 5 properties around the world. He and his wife, they live here in Utah. They go to, I think, Puerto Rico for a little bit. They go to Portugal for a little bit. They have another spot as well. I don't know. But he and his, I think, sister had 150 machines or something like that over the last couple of years. They were probably in for $2 or $3 million, and they've returned 0.
Yeah.
That would suck.
Because it costs so much.
Costs so much. Yep. So that's not what I'm interested in at all. I'm just like, look, it's a trade. I like the asymmetry. I like the risk capital that I'm willing to throw at it. See if it works out. Great. If it does, it offers a lot of alpha to my portfolio, and I don't have to do anything outside to hold it. I'll throw China out there for that potential dark horse alpha. If we start to see some better, I don't know, maybe better animal spirits out of China. I still like the top 4 that I trade a lot. I saw the question come in for oil. I was just circling a couple things. I mean, oil's been pretty steady around like this 72.50 handle. I do think that oil is vulnerable to the thought of like global demand is slowing, Output is up, like US is producing oil and natural gas at record levels. I know OPEC still comes in and they try to jawbone it, or they try to cut production and things like that. I think oil is pretty well supported in the 65 to 67 zone. So I'm a bull on oil when it comes to bouncing off those levels. I was fortunate to grab a couple profits here with that turn. That was last week's expiration on crude light, and now I went out a little bit further. So my trade is I just have CL futures running. So this is crude oil, and I have a 51 by 31 and a 65 by 64. This is a 222, which is essentially, Frank, you and I talked about this. This is like one of those. I have a naked put at 51. I'm hedging at 31, and I've got a bear trap from 65 to 64. This overall position right here, I collected 24 cents if I repeat this trade. So the max profit here would be my trap around $2,200. But if it stays where it is, let me get rid of this hedge for a second. If I get rid of the hedge here, so my max profit would be, if you can see my screen, like if oil drops below $64, okay, it drops below $64, but stays, so I've got to be greater than 51, less than 64, and then I make about $2,200 on the trade. So there's a profit trap for me that kind of maximizes. If we stay above 65 and 64, I generate my credit here. 61 cents on a futures contract, it would look something like this. So let me see what this is trading for. 15 cents right now. So right now this is, let's go 300 times. I got in for 60 cents. So that'd be times 4. Oops, 300 times. So $1,200. I can make $1,200 on oil. If it just does nothing other than stay where it is, I'll make $1,200. If it gets into a profit trap, I'll make some money. So point is, on the charts, I like this area as a bounce. I don't think we're necessarily dropping to $51 in oil. I've got a hedge in case we do. I've got a profit trap in here, but if it stays where it is, I make $1,200. If it drops into that profit trap, I make about $2,400. And if it drops, way down here, I've got a long hedge that has, kind of not infinite, but like, 10, 15, 20 grand worth of hedge profit. So I like oil from that standpoint. I'm not really doing anything much more shorter term than that, because this $72 zone keeps getting tested. So I think we need to be careful of
that. I am not trading oil, so I'm not very much looking at it, but I was wondering, are you going to take any more earnings trades?
Let's take a look at them. So I think that, I don't have anything running. I did take a trade on Baidu. Baidu's trading at 89.61. This has earnings on Thursday morning. I believe Thursday morning. Let me double check this. Right here. Thursday morning, Baidu. And I look at this today with you for the time we have left. Baidu and BJ's Wholesale Club. I would look to see, what these are doing. So Baidu does not have a big move. I think there's a lot of potential here to be bullish. I own shares of Baidu personally. When we had this rip to the upside, I own shares around $92. Let me change the color here. I own shares around $92. So right around here. And I haven't added anything else to it outside of, I've got a covered call all the way up to 130, because that's really where it's like, I think 150 is where I want to get rid of the stock. I'm pretty darn bullish on this one, medium to long term. I think the technicals look pretty good. I might still have another leg lower on Baidu, but if you see this daily time frame, we are oversold with divergence. What I'd like to see is, I will get way more bullish on this, Frank, if Baidu comes up and takes out one of these highs. If we take out one of these highs, to me, this is a really nice looking falling wedge. And two things: it's either a double bottom that I'm going to get pretty bullish on down here, or it's going to be a move up here that's an open space, and we start looking at a rally back up. So right now I'm just kind of waiting, not trying to get in the way. I've got a 130 covered call that's probably decaying just fine. But if I'm going to get more aggressive, I like this $75 to $80 zone. And so my exposure on Baidu is the following. So I have the shares, and I don't know if this is everyone's account. Yeah, so mostly options for some. I think my margin accounts have ownership. Yep. So my margin shares have ownership and have options. My IRA accounts just have options. So I have I know I have a ratio spread in here, which I'll kind of dissect this all in a second. So I've got an 80 by 50. That's a wide open credit spread that I'm willing to take the shares on. I have a 90 by 80. That is a bull put spread as well. And then I have a 90 by 70 bull put spread as well. So for these in total, I have $1.82. Let me just, this is all one contract stuff. So I have $1.82 plus 250 plus 4.11. So if nothing fudge, 843. If nothing happens on Baidu, my fat fingers are all right. If nothing happens on Baidu and it just stays where it is, all these trades are profitable. I make about $843 by December. If that's, all three trades, and it's staggered profit in. But I will say this, if we have an earnings print tomorrow that is lower, the shares that I do have, I'm still willing to own more below $80, and I will probably make this one of my more important holdings as far as ownership goes, because to me, if this is a double bottom, I love the stock up to 155 or 157. I realize that I might be early, and I know that's not always the best feeling, but if this is just going to be grinding, I'd love to see something that just gets this ready to go. So if it's primed and ready to rip, dude, I want to be pretty darn bullish.
I think you're right about it. I just wonder when that time frame would be, though.
I know. And I don't know. I mean, it could be the U.S. has to kind of take a dip, and maybe China steps in and kind of preserves the global economy stability. Maybe this is a big play to non-U.S. gains, where the U.S. has outperformed the entire world for a long time. I mean, certainly the last 20 years, the U.S. has been the best market to be in. But I do think that if we have a rotation into non-U.S. earnings or non-U.S. growth, China's a big player, man. I mean, they're world number 2. And I know that nobody trusts China. I know that nobody wants to be in China, and everyone says it's uninvestable. But, dude, it's defined risk, man. If I own the shares, I'll have a long put. I'll have a collar trade. I'll trade options around it. Worst case is it gets delisted, and it'll be, okay, so I lose 1% of my account. Worst case scenario. But the upside would be, I mean, I could probably generate 4, 5, 6% on Baidu, 4, 5, 6% on Alibaba, KWeb, same thing, FXI, same thing. All those stocks to me look like, if, this is a big if, but if China is ever going to try to do something to lift animal spirits and see the support that it's had in the past, a run to the upside is technically so good. So it's one of the few spots I could look at right now, from a country to growth to stocks to technicals and even fundamentals. I mean, here's another thing for you. Why do I like the stock? I'll show you. Just do a simple snowflake analysis here. So let's go Baidu, which has earnings on Thursday. From a discounted cash flow model, we're trading at 11x PE ratio, and our fair value on a discounted cash flow model is $227. If I buy a stock right now at $87, that has a valuation and revenue growth to forecast it out to $227. I like that stock. And it makes money a lot, actually. It has huge cash positions. It has tons of margin. So, yeah, I mean, again, I don't have to convince anybody of it. If you like it or you don't, I don't care. But I like Baidu. So to answer your question of what am I doing for earnings, I would say that I want to trade Baidu for earnings, but I already have all this exposure. All I'm trying to do is make sure that if it comes down, I've got trades in to catch me at the lows and try to get some staggered trades in.
When do you have it out to? How far?
September. I've got September, December, September, December, and then I've got June of next year. So I'm staggered quite a bit out there. But what's going to happen? Let's say this: if Baidu drops back down to the $80 lows or the $75 lows, more than likely what I will do is, these are defined risk trades. I might take a loss on one, and then close out the other one for profit with a long put. So if I have sell put here, long put here, and price is trading lower, I'll probably take the long put, cash it out for profit, lower my cost basis, I'll wait for assignment, and then take the assignment and then just repair the trade as long as I can, and just repair it to the upside if we actually get that turn and go north. So I do intend to own Baidu, and even for the IRA accounts that I have, I mean, owning 100 shares at $80 is not going to break the bank on any of these stocks. I mean, I'm going to set aside $8,000 for an IRA account with a stock that has 300% upside. So,
do you think it would be worth holding Chinese stocks in your retirement account? Like if I were to buy it for my Roth IRA?
I do. I've got it. I've got Baidu and Baba in my IRAs. I got my 401k, my IRAs with China stocks. Yeah, for sure. That's me.
Because I just have only US based stuff.
Yeah, and because it's an ADR, it's a depository, right? So it's like essentially it's what US traders can do to trade non-US stocks. So it's easy to trade. I mean, if I type it in here, let's go to Baba. Okay, so you can see that it's still an NYSE ticker, right? I'm not trading this like straight out of China. Like it's a huge company. And here's another one fundamentally, forecast earnings to grow, good value. What's the PE? Price to sales 19.7, which are by the way, our PE ratios are obscenely high in the US. Alibaba's a tech company. Baidu's a tech company. And current price 81, fair value 136. Same thing. 40% undervalued, 60% undervalued. I like them. And I just think that on top of that, technically, there's a reason I want to be in them. So, for me, the allocation is pretty simple. I have a dollar amount that I'm comfortable with percent. This is probably another 3 to 5% of my portfolio for me personally.
So why is it so muted then?
Because China's quiet, man. Like China, from what I can gather, China is not going full debt like we are to fuel our growth. So China is like jawboning the animal spirits as opposed to actually putting money into their property markets, and they're trying to they're not backstopping stuff like we do, right? We have a bank crisis in 2023, we backstop it. We have a liquidity concern, we backstop it. Like the Fed just prints more money. China's not doing that. So I'm not saying it's the right answer, but if you look at the Chinese yuan against the dollar, the Chinese yuan has been dropping, right? So I mean the yuan is getting I take that back. The yuan is getting stronger compared to the dollar, but I think that's mostly because the dollar's been dropping. But there's a heavy amount of manipulation with this currency, and it's always been said like, oh, it's manipulation. It's like, so is every other central bank. But I don't know if the yuan, I don't think it necessarily breaks. I mean, but all the rumors of the digital yuan and becoming part of the what's the the IMF has the special drawing rights. Is that what it is? Like the SDRs, where it's a world reserve currency. They're trying to get into that fray of everyone has to borrow in dollars and convert in dollars. Well, if Chinese yuan was into that special drawing rights, they would have a lot more. That'd be a big seat at the table, similar to what they did when they joined the WTO back in the 90s or early 2000s. So I don't know, man. I mean, it's a big gray area, but just from a trader's perspective, I think the trade looks good, the technicals look good, the fundamentals are decent, and I'm trusting the fact that I can take a trade, it's going to stay listed, and it's defined risk. So if you're comfortable with that, I mean, look, if we all sign the dotted line for risk disclaimers, there's my risk disclaimer. It's just like any other trade to me. It's not the greatest thing ever. If you want to, for purposes of I'm only US, or I'm, it's got to be an ESG thing. It's then don't trade it. I mean, I don't know, if you've got an ethical problem with, China's labor situation, then don't trade China. But if I make money on China, just like anything else, man, I'm just trying to make a good trade.
I always hear the argument that the government can step in at any time. They own these companies, I guess.
Yep.
So the stock could get delisted. You can lose everything.
True. But, and I keep going back to this, okay? Do you think that China, as the world number 2, would want to do something that disruptive to their economy? I mean, think about how much Western money they would love to have, because it makes them a bigger power.
Yeah.
And if they turn that faucet off, everything changes. Like
I don't know what extreme scenario would have to happen for that.
China, Taiwan would probably be this extreme situation.
I guess
I
if
mean,
they
you
need
talk about
money to
we
fund the
would
war,
sanction
right?
we would sanction the living crap out of them if something like that happened. And again, I don't know if that's good or bad because then you talk about the alignments of like Western countries or first world countries versus it's BRICS versus US essentially. But like Europe is our ally, US. I mean, it's us versus them type thing. But you'd have to wonder. It's like China's one of the biggest producers in gold. They have like reserves and natural resources all over the place. They are like pillaging Africa for natural resources. I mean, they're world number 2 and they're there for a reason. And part of me also wonders with a regime that is absolute power, they can also play the long game, dude. We can't. Like our political cycles are 2 and 4 years. So everything that we do and build is changed, and it's like that was the worst administration, we're better. That was the worst administration, we're better. We got this plan. It's like constant gridlock in our political system, which I hate. But I'm not a communist, So I mean, to have absolute power, it's like they don't have to do anything. Maybe their long game is they'll just watch the U.S. rip itself apart from the inside, and then just step in and be like, well, we're number 1 now. Maybe. And that's maybe it's scary, dude. That could be a whole different conversation.
Yeah.
So
Well,
we'll save that for another day.
Yeah, we've run out of time talking about all this.
Yep.
Crazy theories and predictions.
We'll see where it goes. But at the end of the day, man, it's just a trade. Everything I do is just a trade. So that is it.
But
cool.
Yeah, I guess we can continue this.
Okay. So I told James that I've got to run to an appointment. I'm trying to get my elbow all fixed up. Trying some radical therapy today, but hopefully I'm back for the FOMC minutes this afternoon, and I can if you're going to be on, we can do a little bit more of the marathon or dissect some of those FOMC minutes today.
We'll see. Well, I don't know.
You might need a nap, right?
Yeah. Might have to go to sleep.
That's fine. All right, dude.
But, good luck today. I hope everything goes well.
All good, man. All right, dude. I'll talk to you later. Thanks, Frank. Thanks, everybody. See you soon.
Bye.
Bye.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hey guys, how's everyone doing? Hope you're all having a great week. It's Wednesday, hump day, almost the end of the week. So the markets are pretty interesting, really. I mean, the dollar is just running off a cliff. It's just waterfalling at the moment. So we have a strong level of support down here at, where is this, sort of around the 100 level. We have the next one down here. So we can see we've broken through the supporting trend line that we had running up since, when was this? Since July 2023. So this was quite a major level that's been broken. Now it was, pretty common consensus that once this level breaks, it wouldn't be unexpected to see price start dropping down. That's general trend line theory. So yeah, nothing too crazy. But my idea on what's coming in terms of Fed cuts and pricing in and things, I think the markets are ahead of themselves. To be perfectly honest, I think that the 50 basis point cut idea was very drilled in, and now it's starting to become much less of a expectation. So let's have a look at the Fed Watch tool. Here we go. So we've got a 67.5% expectation of 25 and 32.5% expectation of 50. So yeah, markets are expecting a cut. I think that's quite obvious by now, but it's by how much. And what I mean by the markets are ahead of themselves there's an article here on investing.com, and this is discussing Federal Reserve Governor Bauman. So she said on Tuesday she remains cautious on interest rate cuts and warned against overreacting to recent data showing easing inflation as upside risks remain a threat. Now, I won't read this whole article. You can go and Google this for yourself if you want to read the full thing. But it's interesting. Like I said, I think the markets are a little ahead of themselves. So it'll be interesting to see what happens in FOMC and into September. So yeah, not really too happy with where the dollar is. I think it's a little bit oversold at the moment, to be quite honest. Still bearish on the yen. Let me pull up the yen here. So I still expect lower prices on the yen. I don't think this level is going to be sustained for very long that we see here. I think we might see consolidation throughout this area for a while, mainly until we get the result of if they are cutting, and if they are cutting, by how much. That might signal potential moves on the yen. But if they do cut by 50, then we could expect yen to start heading further to the upside. So yeah, something to keep in mind. I have taken a short position on dollar yen this morning, right here. So this is on the copy trading account. So the capital is really small on this one. But yeah, you can see I entered here. So nothing too crazy, just looking for a potential move back down to the previous low at around 142-ish. So we'll see how that goes. Let's see what else is going on. Stopped out of dollar Mexican peso this afternoon, which is a little unfortunate, but that's how it goes. One of those things. I have been watching gold quite closely this morning as well. So I was looking for a 50% retracement. So let me just clear this up actually. There we go. So you can see we very clearly got a level of resistance through here. Now, we also have the 50% pullback level that lines up almost perfectly with this level of previous resistance. So if any of you guys watch my content regularly, you'll know I like break and retests. So I'm looking for a pullback. I also really like fib pullbacks as well. So this 50% level is really nice. So yeah, looking for some sort of retracement on gold to this previous level of resistance to show a break and retest pattern, and then I will be entering. However, there's a slight difference with gold than how I normally trade. So normally I go for set targets. So I'll go for a set 1 to 2, 1 to 3, whatever it may be. However, on gold, wouldn't surprise me if eventually we do get to 3,000. I mean, I think it's pretty obvious we'll get to 3,000 at some point, in the next 10 to 15 years. However, I wouldn't be opposed to targeting 3,000 and just letting this trade run. So it'd be a case of entering potentially something like this, so going for a 1 to 10 and taking a stab. I'm more than happy to take this risk if we can end up getting this trade to work out. And the method behind this would to just be trail stops as price goes up. And then, if we do end up reaching 3,000, then great. But if not, then I'll be watching sort of the round number levels on gold. So, 2,600, 2,800, things such as that. So that's sort of my plan of action on gold. But yeah, we'll see how this one plays out. Not really seeing too much movement today. Did look like we were going to get this pullback this morning. So you can see right here, we did start heading to the downside on gold, but it just wasn't sustained at all, really. So we're now seeing the H4 candle continue with quite strong bullish momentum. So yeah, we'll see about gold. So what else do we have? Oil. I'm still watching oil. I was mentioning yesterday that I wanted to see oil come down to this level of support again. So at the time we were, I think price was right here. And I said, I really wanted to see oil come back down. I didn't think that these bullish H4 candles were going to be sustained. I thought it was just a very natural pullback. So yeah, looking for this level to get hit and then potentially along. Again, I still need to conduct some research on this to actually back up this trade idea. It's more at the moment just looking at a strong level of support because this is on the daily as well. Let's see here. So you can see it looks a lot stronger on the daily. It's quite nice. So yeah, we'll see. But yeah, I mean, oil can be affected quite a lot by what happens in the US. So yeah, we'll see. Dollar CAD. So dollar CAD has run off without me. I was looking, you can see sort of around this area here, I was looking for a pullback, which we've just not got. I think we are due for a pullback on dollar CAD. Although the fundamentals fully support a lower price on dollar CAD, it's just very extended now. I mean, look at the RSI on the daily time frame is very oversold. And that's a way to just gauge if we are due a pullback. And when I say a pullback, I don't mean anything huge. It's not necessarily that we're going to pull back to previous highs. It's more just a correction that we need to see. So some sort of pullback, potentially to somewhere around here before we head to the head lower down. Pound dollar heading up, so we're almost at the target I mentioned, around the 1315. So let's see. Yeah, so I was looking to go long. Unfortunately, we just haven't had much of an opportunity here. We didn't really see much of a slowdown at this resistance. I kind of thought we would, to be honest. I thought we would have some sort of pullback from here. So I was looking for some sort of, just movement to the downside to then let me get in long, which clearly hasn't happened, which is a bit unfortunate. So sitting on the sidelines, looking a little bit salty, unfortunately. Sorry, the 135 levels up here that I was talking about. So yeah, next thing I'm looking for on the pound dollar is a break and retest of this level of resistance up here at the 1314. Off the previous day, previous daily high up here. But yeah, not too much going on at the moment. It's like if you're not already in a lot of these trends, you're kind of sat on the sidelines, like I am, which is a bit unfortunate. Inventory news pushed up. Abdul, yes, true. Hi James, which fundamentals to look for when trading oil? A lot of import-export and supply and demand. I mean, oil is essentially just supply and demand. So you should be looking at OPEC. You should be looking at inventories. And at the moment, you should also be heavily paying attention to what's going on in the Middle East. Middle East is heavy exporters. So, if there's wars there, it can disrupt supply chains. So something to keep in mind as we are seeing Middle Eastern tensions in the world at the moment. So pound Canadian, actually, let's see. This was one of the top. Yeah, this still is the top scoring asset or pair on Edgefinder. Let me pull up the data for you in a second. Here. Yeah, so you can see everything on pound Canadian is actually in favor of buying. COT data is flat. Services, retail, inflation, and interest rates are flat. However, there's nothing essentially against this trade, really. So yeah, I think we could look for a trade here. And I was looking for a trade, but unfortunately, no entry. It's really hard to gauge pullbacks in the markets at the moment. I'm just not finding anything. However, saying that, this daily candle is lacking some momentum. We've not broken past the previous day's candle. Yesterday's candle had quite a nice wick to the upside. So potentially we could be looking at some sort of pullback here. In a perfect world, if we do get this, I'd be looking for a 50% pullback into sort of the previous highs, relatively tight stop, something like this. The only issue is obviously we're looking for quite a significant pullback on a daily time frame, and I'm not sure there's any data to really push the market down to that level. So yeah, we'll have to keep an eye on this one, but I think we may have missed this move, unfortunately, at least for now. The Australian dollar also heading towards the target I mentioned. So this is from the ING bank report. So their target was 0.68, and this was for it was a 1 month target. So I think it was roughly for the 19th of September that this was the expiry date. So we're still in time for this. So I'm looking, if we can get some sort of pullback here, to potentially get in and target the 0.618. I think the only option really to try and get these pullbacks is later with the FOMC. I think if we don't really see much then, we might have to just, cut the ideas and move on to some pairs outside of the dollar, unfortunately. Now, euro pound. I was mentioning this one yesterday because I was bearish for quite a while, mainly due to a lot of momentum with the pound, a lot of political stability. However, I think we've kind of run out of that steam now. I think we're now heading into the out of the honeymoon phase, if you will. So when Labour was elected in the UK, there was a lot of general hope in the markets of things getting fixed, such as public services and the economy in general, which clearly isn't going to happen. And I said that when they were elected, I'd said that, yeah, we might see some strength, but overall I'm still bearish. So this might be my first stab at going short on the pound. Now let me pull up some analysis for you. I read this out yesterday, so apologies if you guys are hearing this for a second time. So here we can see the euro is expected to strengthen as the Fed's easing cycle progresses, while the British pound faces challenges from the Bank of England's cautious stance and potential economic headwinds in the UK, with the euro likely to benefit from improved global risk sentiment and the pound facing downside risks. The short position on GBP EUR, this is inversed, aligns with broader market expectations of the euro strengthening as the pound weakens. So yeah, looks pretty solid to me to potentially head to the upside. The only problem is we've not seen much confirmation in terms of technicals here. We are at the 50% pullback, which I do quite like. The only real problem I'm seeing is the weekly time frame looks really bearish. And this is excuse me, this was one of the reasons I was so bearish at the time, was because we had this level of weekly resistance along with the 200 weekly moving average getting rejected, followed by a weekly bearish candle. So it's a little bit of a difficult one to try and gauge at the moment, because technicals are bearish, but the economics are bullish. So yeah, it's a case of sort of waiting. I really need to see a bullish engulfing candle from this level, and then maybe I'll get in from here. So something potentially like this. So yeah, we'll have to see. USD CHF, I'll cover that in a moment. I was short euro pound out at break even after EU stable core inflation report. Yeah, exactly. So yeah, the euro pound looks pretty good to the upside, really. NOK SEK still looking for the upside. I mean, I won't go into this one too much because this is more of a position trade that I want to hold into 2025. But yeah, nothing really there yet. The dollar NOK, now again, I've mentioned this so many times, but I'm really upset about this. I had an alert up here that was triggered, but I didn't catch it. So waiting, and just really want some sort of pullback here so I can get into a position. I was saying the dollar NOK, I've been talking about this pair for months, and I was saying that I want to take this short position, and I want to take it in sort of Q2 to Q3 of 2025, because I think it has a lot of room to go to the downside as the NOK starts gaining some value. It's been really oversold, and a lot of institutions have now flipped bullish. So yeah, it's possibly one to keep on your watch list, so if you're interested. I'm not in NOK SEK yet. I want to get into NOK SEK soon. The issue is, again, it's similar to euro pound. The technicals are really bearish. So if we look, we're in a huge downtrend on the daily time frame. We've got really strong supports as well. So the only two options I have here really are a long position from this support or a break and retest of the trend line. Now, I don't think we're close to either of these happening, really, to be honest. We're kind of just sat in no man's land. So yeah, it's just a case of waiting to see where we go from here and if we can get an entry. Yeah, Norwegian caught your attention as well. Good stuff. So dollar Swiss, someone wanted to look at. So I'll take a look at dollar Swiss here. Yeah, so falling off a cliff. Let's see the daily. Yeah, it's funny. Again, I was saying, I mean, it's always easy to say that you were saying something, but at the time I was saying during this period here, we were saying that the dollar Swiss might not see a full correction. Because obviously we did have a huge risk off move in the markets when, you know, the stocks sold off, the yen started gaining strength, and we saw the Swiss gain a lot of strength as well. So yeah, the point stands. We did see this 50% pullback. I think actually I did see this and I was tempted, but I just wasn't convinced at the time. And now in hindsight, it's one of those things where, you know, I should have taken it, but there you go. That's just what it is. So in terms of trading, how do we go about this? I would stay away. If you're not in this market right now, I wouldn't be looking to trade it, because the only target I can really see at the moment is this previous low. And unless you want to go in for, you know, some day trades or scalps, you're not really going to find too much, I don't think. You know, the sort of risk you would have to take to get 120 pips, you'd need a stop really above this previous high. If you want to be super aggressive, you could go in sort of like this, but for me, that's not going to happen. So yeah, that's just my view. I think the dollar is going to continue to head to the downside, really, at least until FOMC, and then we'll get a bit more of an idea of where the Fed's going. But then once the Fed speaks and once we get more of an idea, then we'll sort of continue that trend until we actually get potential rate cuts. Dragon, yeah, we've spoken about crude. Feel free to rewind. I'll go back to crude after I've taken some of the other requests. So the Euro Australian. So yeah, here. So I was looking at this one, and I'm kind of on the sidelines. I'm a bit cautious here. So I really wanted to see a closure below this neckline. I guess we kind of did with this candle, but it didn't enter, unfortunately. Well, actually, fortunately, because I'd be in drawdown now. But yeah, so technically, you know, we've got this head and shoulders. I don't trade head and shoulders, but it was really obvious, so I drew it up. So yeah, head and shoulders, we've got this neckline or support here. We've not managed to break through. We've also got the H4 200 moving average that has come up and swept price. We had the oversold RSI. So it just wasn't really an optimal time to go short. Along with the euro doing pretty well for itself and the Australian dollar that's holding its ground as well, it's kind of trading two strengths against each other. Which isn't really the idea of trading. Generally speaking, the idea of trading is you take the weakest currency and the strongest currency and you trade those, rather than trying to just get into two strong currencies and fight the way through. It's kind of counterintuitive. And that's the way I see Euro Australian at the moment. So again, we've covered gold. I can recap some of them afterwards. I think I'll go through some of the other charts people want, and then if we've got time at the end, I'll go through previous ones again. So yeah, I mean, to be honest, I hate dollar yen at the moment. So I'm still in my two initial buy positions all the way up here at 158 and 156. I also added in down here at 142. Is it 142? 143.5. And these are long-term positions. So if you're not, in fact, no, just don't really pay attention to those. If you're not sort of queued into the markets and you don't have a large amount of capital, buying dollar yen is probably not the great idea, really. So this is on my corporate account or business account, so it's more of a long-term play with large amounts of capital behind it. I am short dollar yen on a different account, which is what I showed earlier. So this is a very small account that I use for copy trading. I took a short position off here. We can see the H4 in a downtrend. We created a lower high. Dollars jumping off a cliff. The yen was gaining strength. So overall, it was great for sort of an intraday position. Targeting really the previous low down here at where is this, 142. But to be quite honest, if the Fed comes out and it sounds quite dovish, or it sounds like they are going to be cutting rates aggressively, I'm just going to have to cut losses on dollar yen, my dollar yen long positions, because the idea will just be out the window by then, unfortunately. So yeah, I would really like to see the Fed come out and say they're either not going to cut rates, or they'll be cutting very, very small and steadily. which is what I actually expect. So yeah, we'll see about that. What is your drawing tool name? I'm not sure what you mean by my drawing tool. Do you mean this software's trading view? And I just use the built-in squares and rectangles and things. Other than that, I don't really know what you're referring to. I don't use a drawing tool. Thoughts on Australia, New Zealand? Yes. So I am actually in long Australia, New Zealand. Not looking too healthy right now, actually. We do still have this supporting trend line, which, you know, might be useful about now, but yeah, I'm not really a trend line trader. It was just, again, it was there, so I drew it. It's quite obvious. So yeah, this one was taken due to at the time, a 50% pullback from low to high. Decided to execute on this one, but clearly not working out right now. The analysis behind it is still there. So we can see the Australian dollar is expected to outperform the New Zealand dollar due to the divergence in central bank policies. The RBA's hawkish stance sorry, get my words mixed up. Contrasts with the RBNZ's dovish approach, with the latter expected to cut rates further in response to weak economic conditions. This long position on AUD/NZD is supported by strong labour market data in Australia and the expectation of continued AUD strength relative to the New Zealand dollar. So the thesis behind it makes sense in my eyes. But yeah, at the moment, a little bit rough. So maybe the entry was too early. Maybe we are coming down for a full correction of this move here, which, wouldn't surprise me, to be quite honest. But if we do get that, then I might be looking for another long position to re-enter off this level of support down here. But yeah, we'll see. Because at the moment, the open position is looking a little bit unhealthy, a little bit rough. What do you think about FOMC? Dollar bearish or bullish? I don't know. I mean, the way I see it, I think that investors have been very aggressive in expecting rate cuts, and aggressively at that, in terms of it was common word to hear that we'd have a 50 basis point cut. It's like 30% expectation or above at the moment, which I don't really see happening. I think it's too aggressive for the Fed. So yeah, I think, very loosely, I think we'll see the Fed not be as aggressive, or not want to be as aggressive as investors currently expect. And that might give the dollar some strength. But yeah, I mean, take that with a grain of salt. Yeah, I can't see the future. I might be completely wrong. Maybe we will get a super aggressive cut, and I'll be wrong and dollar will dump. I don't know. Yeah, we can do gold again, I guess, seeing as you guys like gold. Oops. So yeah, I was saying on gold, I want to see a 50% pullback. So I want to see this level of resistance get retested. So we can see if we draw the fib from low to high, this level of resistance lines up with the 50% pullback almost perfectly. Now, the issue is, are we going to get this? We did see some selling pressure this morning, but it's clearly not being sustained, with the current H4 candle looking quite bullish. So are we going to come back down from this high and retest and continue up, which is, that's what I'd really like to see. But yeah, I don't know. If we look at the past, when we've reached new all-time highs or nominal all-time highs, we fade to the downside quite heavily. This was a 5% move to the downside. Previously, we had another move here of 6.5% to the downside. So we've created a new all-time high here. Are we now going to head another 5% to the downside and potentially test this level of support around here? Very possible. I mean, I don't know. It's of course driven heavily by profit taking, really. There's not really much to suggest that gold should be bearish. In terms of targets, I'm looking first at 2,600, then at 3,000. Now, 3,000 sounds like a lot, and it definitely is. I'm not saying that 3,000 is going to be reached anytime soon or easily necessarily. However, the way I would take this trade is essentially trailing stop loss and just letting the trade run, which isn't something I do too often. I normally trade with hard stops, hard take profits. However, with gold, I think there's a lot of room to the upside if you can sit through some pullbacks and happy to wait, which I am. I have no issue holding trades for a long period of time. So, yeah, that's essentially the view I have on gold right now. I'd take one position here. If this is stopped out, then I'll wait potentially, as I said earlier, for this level of support to get hit, and I'll take one more attempt. Do you think FOMC is going to be bullish or bearish? I told you, I don't know. I think the Fed won't be as aggressive as market participants are expecting, which may lead to people closing out some of the dollar positions or dollar short positions, which may help. But yeah, we'll see. I could be completely wrong. No one really knows. Let's see. Actually, I've just realized I think I'm out of time. So I had yeah. Okay, cool. Yeah. All right. So guys, I think I'm going to end my segment here. I appreciate you all for being here and having a chat. Be safe during FOMC. Remember not to gamble. You will more than likely not make money. Take calculated positions. So yeah, that's it from me. Yeah, stay safe, and I will see you all later. Thank you for joining me.
All right, folks. I hope you guys are enjoying the show. We got many more guests on the way. We're going to take a quick break, and then Nick's going to return for a moment, and then I think we're going to see Ivan. We got Kenzo on the way, so we're going to take a quick break, and then we'll be right back after this message.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
Hey, Kenzo, we're having some technical difficulties on our end, so if you want to just go, that would be awesome.
Going live. Oh,
Yes.
that will be fine.
Yep.
Okay.
Yep, you're all set. We had some technical difficulties, so we figured, all right, just send Kenzo on his way because we're trying to fix things.
Okay,
on
that's
our
good.
side. All right, have
That's
a good
good.
show.
Thank you. Good evening, guys. I hope everyone is doing great. So now we can just actually go check what's really happening on the market. I hope everyone is doing great. So let me know on the comment section which pairs do you want me to check. Then I will go straight to that and actually check. So now we are on dollar index, guys. It seems like the dollar is still actually melting. We see that it's still struggling, and we can confirm that, you know what, the market shows us that we are still on a bearish. It seems like the market is still digesting it's now digesting the fact that they are going to cut the rates. So I heard that they might cut 3 times this year, actually with 25 basis points for 3 times. That will actually add up to 75 basis points. That is actually great. And I think the market took time to respond to that. But at the moment, we can easily see that now we can easily see that the market or the dollar is losing that momentum. Already we saw how employment change went. It was like seriously weak. And yeah, this is what we see at the moment. So the dollar is losing that momentum. It means it's going to be way too easier for us to buy other pairs, whether maybe it's Euro USD, GBP USDs, then we can actually check them, you see. So dollar index shows us that we are no longer on that bullish move. We are going down. So when we do the analysis with a pair that goes with the dollar, we will know that, okay, we're expecting to see a weaker dollar. So someone said, Kenzo, check Euro USD. I think here we're going to have a positive correlation. You can see that the dollar is losing some momentum on the other side, and Europe it's actually going down. It's going up. As we are coming from this nice downtrend structure. The market was on this nice downtrend structure. So now we are no longer on that type of a structure. So which means the market is actually on a very nice trend. The market is actually willing to go even higher as we are no longer on that downtrend structure. So now we expect the market to go higher. So at the moment, we had few structures that we were going to use as our resistance, and the market actually is moving away from that. So which means this area is going to work as a potential support. Let me remove that. That is going to work as a potential support. But at the moment, we can't just jump on the market and start to buy because there is a chance for the market to reverse. So once the market reverses, I think we will use a structure that is going to be a potential support. And from there, we can say, you know what, it's a good time for us to look for that or buy. Or maybe the market will try to create something like a resistance that we can use there. But at the moment, I think it's a clear breakout, but we can't just jump in if you missed the market around this area. So you better wait for a proper retest. You see. So which pair do you want me to check? Also, I will be going to other pairs. Let me just start from a Nasdaq. I saw Nasdaq, it was quite selling. It was like seriously selling. So on Nasdaq, we can see that yes, the market tried to reverse very nice as we are coming from this nice bullish move. The market was actually pushing up very nice, but it seems like the market is trying to reverse. So I'll start here on Nasdaq and trying to go down. You will tell me which pairs do you want me to check. I can see USD JPY, YTI. Okay, I will be checking that. So on Nasdaq here, we have this nice structure here. You can see that we are coming from this aggressive sell that we had a few days ago. So after that, we saw a very proper breakout. So now we expect the market to continue going even higher. And we never had a proper reversal. Yes, you can see that the market is coming from this aggressive bearish move or downtrend structure. But since the market started to go higher, we never had a proper reversal. I think maybe the market might give us something here. Maybe the market might reverse before we get that proper move. I think the market will be giving us something around this level. I'm expecting to see a proper push to the upside. I'm expecting to see a proper push to the upside. I think everyone is expecting the rates to go a little bit lower. One way or another, the market might still struggle along the way, but we know that at the end of the day, the market will end up going even higher. Yes, that's one we expect. So at the end of the day, we will have to draw a nice support area. But at the moment, we can't draw that. We can't actually have that support area as this is still very fresh structure after the breakout. So which means the market will still have to mature along the way before we have a proper support that we can use. But at the moment, we will just rely on this resistance and support. So now at the moment, we can easily see that the market is actually just playing around. So there's nothing that we can do around that. There is nothing that we can do. The market is just playing around. Yes, we are still bullish, but the market is playing games. So let's stay out of the market unless if the market breaks out this resistance, or maybe the market comes around this support area. It's where we can think about buying. So US oil, I will check US oil and then I will go on USD JPY. US oil has been selling, guys. US oil has been actually selling. So with my structure here, I think I had a very nice structure. This is what we have actually. So we are coming from a very nice structure, which it was a proper sell. You can see that the market was on very nice. Then after that, we saw this type of a breakout. I thought maybe the market was changing the trend and we're expecting to see the market going even higher. But the market did not really do that. The market is now going even lower. And it seems like we are reaching this important area around 70 something. Let's see, 71.50. So I think once the market reaches this level, if the market reaches that level, I'm expecting to see maybe a proper reversal. Do you see that? And another thing is, this oil, when it's going down like that, it's a very good thing because also inflation will be going down. That will be good. So it seems like everything is aligning very well for the rates cuts. You see, we see the dollar is going down. We see employment is going down. Oil or crude oil is going down. It's like everything that fuels the inflation, it's now cooling off. And that is actually a very good thing. You see, we never had them at the same time where employment is going down, oil is going down, prices are going down. So retail sales are going down. So everything is just coming together at the moment. So which means next month we are forced to see federal or Fed to cut the rates. And that will be good. That will be good. But I think on top of that, the market will end up price itself to that because we expect the rate cuts. I think the market will end up pricing itself for those rate cuts. So once they start to cut those rates, I don't really expect to see a crazy push to the upside because already the market will be pricing itself for the future cuts. You see. So now on US oil, we expecting this nice push, a nice touch here. Then I will be expecting maybe to see a reversal, unless if maybe the market breaks out. If the market breaks out, that will be good. It means we will see a nice sell going further. I mean, going down. If the market breaks this level, that is the last hope that we have. I thought maybe this area was going to be a proper support. The market did touch that, but now we are going lower. So this area is going to be very important. If it breaks, that's fine. It means we are going to see a nice sell on US oil. So another one, it's actually gold. Let's see, USD JPY. Let me go on gold before I go on USD JPY because gold is quite closer here. So what's really happening on gold? I think gold structure is quite straightforward, guys. It's very clean. We saw that we are coming from a very nice uptrend structure, and still the market is still continuing with that. So you can see that the market is still actually on a very nice bullish move. So, and we've been expecting that, obviously. So you can see on the downside here, the market was touching this support area. So we're expecting to see that. And along the way, we did have a proper resistance there, which it was very stronger, and the market did break out of that. The market broke out of that structure. Let's do this. That is actually our resistance. The market broke out of that structure. So now it's easier to see that, you know what, the market actually is trying to continue going to the upside. We did smash that. So, but let's go on 4 hours time frame so that you can see nicely what's really happening. So the market broke out of this nice resistance. Since the market broke out of that nice resistance, the market created an area that we can call a proper resistance. So with that, since we have this area of of a resistance. I think the market will be trying to come and retest this area or to touch this level before going higher again. That it's possible, and I think the market was trying to do that. I think the market reversed along the way, but I'm expecting a proper touch before we see a nice push to the upside. Or maybe the market might come around this level again, and it might try to break that. If the market tries to break that level, it's also fine. We'll see maybe the market continuing to go to the upside. At the moment, dollar is losing the momentum, or it's weaker. We expect the rate cuts. Obviously, we're expecting to see gold to go even higher, but slowly that will actually happen. So at the moment, I will just say I'm just waiting for the market to reach 2480 around this level before we have a very proper buy. Simple as that. So now let's go on USD JPY. USD JPY. Yeah, I will also check Euro. GBP CHF. Oh, that is not okay. I will also check that and see what's really happening. So now we are on USD JPY. Let's see what's really happening. So we can see that, yeah, this structure here, it's showing us that, you know what, on a bigger time frame, like daily time frame, the market actually gave us something. The market gave us something here. And I can confirm that, yeah, we are actually on still this nice uptrend structure. So it's up to the market to break this level before going even lower. So I was expecting to see the market reversing around this level, but it shows us that the dollar, it's not really that strong. Yes, maybe on a smaller time frame, you can say, but the structure, it was like that. Yes, the structure, it was like that. If maybe we check the trend on a 4 hours time frame, but if we go on a bigger time frame, this is something that we have now. So for us to look for a aggressive sell, I think we'll have to wait for the market to break this level of a support before we look for that sell below that level, as the market has been showing us that it's respecting this zone. And we can easily see that even a few days ago, the market respected that level before going up. So now the question is the market trying to test this area again before going up? Or maybe the market will be breaking out. So we'll have to wait and see if maybe the market is breaking out before we jump maybe on a sell or maybe on a buy. If the market will be respecting this support, we'll be looking for a buy. If it breaks, it's obvious that we will try to look for that sell. You see. So let me check another pair that you want me to check. Euro JPY. I did check that. Let me see if maybe there is something that I can check for you. Or let me just continue with this. Oh, I see GBP USD there. I think that can also be a very nice structure. So on GBP USD, we also have a very proper structure. On the daily time frame, I think these structures, they look very nice because the market is creating these bigger swings. Sometimes they might not really look nice on smaller time frames. But now this is what we have. We can see that the market is continuing going higher. So we can see that, no, this is a proper uptrend. But on top of that, we can easily see that the market created a very nice resistance area. But the market is breaking out of that. And you can see that the market is trying to continue going even higher. Because USD, it's actually going even lower, you see. So I think there are some high impact news that I've seen on CNBC that there is almost 800,000 revised job actually. So it means there were in 12 months there were jobs that I think these guys who actually report the jobs, I think they overstated the jobs and actually they were lying. So which means the jobs that they were presenting, they were actually over or more than what it was actually the actual number. So which means the number was always a little bit higher, but the actual number, it was a little bit lower. Maybe that is the reason why we see USD today selling a little bit aggressive. You should check that, I think, on CNBC. I don't know if maybe I can able to show you this, but I think this will make my PC to be quite slower. So yeah, any pair that you want me to check, I will be checking that. So on GBP USD, we can easily see that the market already is above our resistance area. So that is an obvious buy, especially when we are on this uptrend. So we just continuing with the trend. So I think the market will be going up like that. Do you see that? So I will be trying to check other pairs while you still may be thinking which pairs should I check. US 30, I think I did not really check US 30. US 30, it was also going up last week. This week, it seems like things are not really going the way the market wants. Things are quite slower, but I like the structure. The structure is quite straightforward. So you can see that slowly, this is a very nice trend, and the market did respect this level. The market went higher, but when we check these areas, they make a very proper resistance area. So which means we're just waiting for the market to give us a proper structure before we jump in. But sorry, because already the market broke out. So which means we're just waiting for the market to continue going up so that we can actually continue buying as the market is no longer on that, or it's no longer respecting that resistance. You see, so on 4 hours time frame, I think this is also quite visible. You can see that. So the market broke out. So after the market breaks out there, we expect maybe, it seems like the market was just consolidating around this level. Maybe the market just wants to retest here before going higher. But this number of employment change, guys, I think that it's actually a very bad thing. So which means this is also not really good for the stock market, because if maybe there are few people who are working, it means there are going to be very, very, very few sales, and that means CPI might start to do what? CPI might start to go down, which is good, but it seems like it's aggressive. And at the end of the day, the economy is not going to benefit much. That it's actually going to lead to recession. You see. So let me check that, if I can easily check that very quick. I don't want to overload this. Let's see if maybe we can get something. I just wanted to show you that that breaking news is no longer there. It was a breaking news a few minutes ago. So let me see if I can get that very quick. Nope, it's no longer there. Anyways, it's fine. You can try to check that on, I think, any platform that actually update you with some economic news and stuff. You will actually see that. So on on US 30, I'm still expecting to see a very nice buy here as the market broke out of the structure. So I'm expecting to see a nice reversal. Yes, the market might play around. Remember, later today, maybe the market is waiting for FOMC meeting later today. So if maybe the market is waiting for that, if the news are good, maybe we will see the market starting to go even higher, because when we say the good news, we're talking about rate cuts. If that is going to be the case, we will start to see the market trying to go even higher. You see. So let me check the comments very quick. Please say GBP tonight will FOMC. So FOMC later today. It's actually the meeting. They're not gonna release the numbers and stuff like that. So sometimes it's difficult just to know what will happen. The market might just move the way it wants, but already that is a different story, because it's just a meeting. It's not like they release the figures, you see. But if they say negative things that seems to boost the dollar, it means the dollar is gonna be positive, and other stocks or other pairs will be weaker, and vice versa, you see. So on this one, I can't just say during FOMC things will be negative or positive. You see, it's different from saying interest rate or or maybe NFP, because those are numbers. They release the numbers. So on the meeting or speeches or speech, it's a different thing, because it means people, they will, or investors, they will try to digest whatever that they're saying, and they will just see those type of moves. But most likely we don't really get those type of moves during the meetings, you see. But at the moment, since things are not really good in the market, yes, we might get some type of moves that will actually make the market to go crazy, because it seems like things are volatile at the moment. So for FOMC in gold, will it go up or down? Yes, I think, let me answer that question again. I think Assad on top there did ask that. So for FOMC, it's a meeting, guys. It's not like it's not Federal Reserve rates where they release the rates. So which means it's going to be dependent on their tone that they're going to use, or their answers, or how they are going to actually release their speech. So if their speech is too bearish, it means, yeah, the dollar is going to be bearish. If it's going to be bullish, it means it's going to be bullish. Or maybe you can just call that dovish or hawkish, you see. So on that one, obviously, at the moment, if maybe I can try to guess, if we can try to guess, I can say, at the moment, it seems like it's obvious that they're going to cut the rates. I think the tone is going to go towards that. I think that is going to be the case most of the time, because now we expect them to cut the rates. It's like every event that we got for a few weeks up to now, they were all cooling off, or they were all going down. That is a good thing to say. They have actually, they don't really have enough choice to say something else. But what we know is they won't just they won't just make it obvious, but we can say, yes, there is a chance that after the speech we might start to see a continuation of that bearish on the dollar, which is already bearish at the moment, you see. But on this one, is quite difficult, because they will try to encrypt their message, you see. So it's difficult just sometimes to say, oh, the market will buy or will sell. I hope maybe that makes sense. So let's see. Okay, let me see if maybe New Zealand dollar. Let me see if maybe there is New Zealand dollar. Let me see what's really happening on that, and then we can see. Let's go on a daily time frame before, so that we can get proper structures. Let's see. Okay, this is what we have on New Zealand dollar. On my side, the market is actually on a on a downtrend structure, but it shows us that this aggressive push to the upside, it shows us that the market, guys, or the dollar, it's a bit weaker against New Zealand. So you can see that the market has been going down, and from this area to that, you can see that the market has been showing us this is a sell, or let's say a downtrend. The market was actually downtrending, but we reached a level where we can call it a resistant area. So which means there is a chance for the market to do what? To reverse there, or maybe to respect that level. If maybe the market seems like it's a good thing to respect that, because there is a chance for the market to break out of that. And at the moment, the dollar is weaker, so there is a chance that the market can just break out of that. Or if maybe, as you are a day trader, we can even go closer and say we can still have something like this, but still that resistance is still very stronger. Even though maybe you were going to count this mostly on 4 hours time frame, you were going to use this as a downtrend structure, but still this resistant area still makes sense here. So there is a room for the market to sell there, or maybe the market to break. So at the moment, you should use these two options, because I think all the structures, they still make sense, and it shows that the market has been respecting this zone for quite some time. You can see from top there, the market has been going down quite slower. So which means at the end of the day, the market is actually on a downtrend. You can see that. So the market is downtrending. So be extra careful. Yes, we know that the dollar is it's weaker, but sometimes the market will tend to respect our technical or the trend that we have. I hope that makes sense. I hope that makes sense. So any pair that you want me to check, I will check the other one. I think I wanted to check USD Canada. I saw it was like seriously on the lowest side. I think a support area. So I don't know if maybe it's breaking out of that structure or not. Whoa. Okay, it seems to be breaking out. So this is what we have on USD CAD. So the structures were very straightforward. We were on this nice trend structure. And after that, we started to see this type of a breakout. You can see, even if I remove this, you can see that that was what we had before. You can see from this areas, that area, and here it's where we can see that the market is breaking out. So I thought maybe, as the market also respected this area, you see that for quite some time, I thought maybe the market was going to respect that level, but it seems like the market is breaking out. Let me draw that resistance or support. If I can draw it from here, you can see that we have something there. You see that? So by the moment, it shows me that it's actually breaking out. So yes, the dollar is weaker, but with this type of moves, it's possible that the market can reverse aggressively, especially when we have FOMC later on. I think maybe in less than, let's say, 1 hour and 20 minutes. Yeah, something like that. So because it's around 8, so let's just say within 2 hours, so we're gonna have that. So I'm expecting to see some very nice moves here, but the overall structure, it was an uptrend, so we can easily see that the market is no longer on that nice uptrend structure. So which means maybe the market wants to continue going down, and if the market does that, it means we will be on a downtrend structure at the moment. So on this structure, I can't recommend selling here, but I can say sell below that structure, because that will be showing us that it's breaking everything that we had before as some stronger structures. I hope that makes sense. You see, so yeah, can we check COT? Which one is that one, my brother? Unfortunately, I don't really check stocks that much, but let me see if I can get that. GBP AUD. Yes, it's actually on a daily. Even if I go on 4 hours time frame, I think we're still gonna get quite similar structures. I think we're still gonna get quite similar structures, but you can see this. This is 4 hours time frame. I'm just using this daily so that you can see some very nice candlesticks or thicker candlesticks. You see that. So even on 4 hours time frame, we can see that the market is trying to break out of this level. So yeah, I'm using daily time frame so that we can see proper candlesticks, but the structures most likely it's just the same. Even if you go on 1 hour, you will still find the same trends, the same lines. So let me try to check GBP AUD. I don't think I have that. I think I'll have to add it. GBPA. Any pairs that you want me to check, I will check that. So let's see. GBP. Okay. Yeah, on GBPs, this is what we had actually. I think I had this analysis for quite some time. So we can see that we had this downtrend structure. I think this was quite obvious. You can see this was moving. Let me use this. This was moving very nice going down until we had that breakout. So which means now we are no longer on that downtrend structure. You see. I think this actually it's very nice breakout structure. So we can see that this area, we can just call that our support area. I think we did have a buy around that level. Let me remove that. So after this, you can see, oh, the market was moving crazy. Just look at that area. But I can use this as a proper resistance. It's where the market or 90% of the candlesticks was actually respecting. So I'm going to use that as a proper resistance that I can use. Just if maybe you were trading this, you just missed a very nice buy there, and the market might actually end up continuing to go even higher. So something like that. I'm expecting to see maybe the market continuing to go even higher, because after we broke out of this downtrend structure, it shows us that the market is trying to do what? The market is trying to create an uptrend. This is just a change of a trend from a downtrend to an uptrend. I hope that makes sense. I hope that makes sense. So let me check the other one. Let me check the other one. Euro CHF. Let me check this one. Let me check this Euro CHF. Do you think FOMC minutes could differ on the forecast? Minutes. I don't think there is a forecast on FOMC at the moment. So yeah, I think my time is up, guys. So yeah, how you doing, man?
Hey, Kenzo, I'm doing well. Good to have you on the show, and thanks for taking over for a little bit to help us kind of wind down as we get closer into the FOMC meeting minutes dropping in about an hour and a half. Thank you for coming on,
Yes.
and for anybody who enjoyed the commentary there from Kenzo, we're going to be dropping the link to his channel here. There it is in the chat. So if you'd like to subscribe to Kenzo, check him out. Do us a big favor here in the A1 Trading Show. We bring on guests from all over the world to help do different analysis and hear different thoughts. So Kenzo comes on every week talking a good mix of fundamentals, technicals, and strategy. So Kenzo, thank you very much for coming on and sharing your thoughts.
Thank you very much, and your viewers, man.
All right. See you next time, Kenzo. Thanks so much. And guys, I am just here for a second. We're going to be passing the show to Ivan next, who's going to be going through more stuff as we get going into the central bank drama this week. I do want to just mention, if you're a regular stream viewer, remember the Edge Finder free week is ending soon. You got 3 days left to access the Edge Finder 100% free. All you have to do is you have to apply using the link being dropped in the chat right now. So just apply using that link, fill out that form, and someone from our staff will be hooking you up with a copy of the Edge Finder totally free. It is public access until the end of the day on Friday. So check it out. It's a great week to do so with Jackson Hole Symposium, Fed meetings, all good stuff. Good time to try out the tool. So check it out. Again, free access. We're going to take a quick break, reset, and we're going to get Ivan in here, aka Yen Man, to take over the show for a little bit. So stick around, Yen Man, just after this. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello, everyone. I don't think it left the building, but it doesn't really matter, does it? I had a meeting earlier today, and with the Discord people, mentorship class, and I said that we are going a bit lower on the end pairs before we go higher, and that's like my opening statement, isn't it? Because I try to help you guys out, and this is going to be a bit different because Kenzo is technical and fundamentals. I can do fundamentals and technicals and and all of those things, but I really want us to have a bit of a tap into: do you actually believe in yourself? Do you actually believe that what you're actually doing currently is actually working? Because you can say that, okay, for those who's asked for pound Aussie, can you do Euro Swissy? Can you do pound Swissy? Like, in as much as you ask for feedback and help from gurus like me, and I'm not a guru. I suck at trading anyways. Is that it's like, where do you come in as the expert? Where do you start to believe in yourself, and you do your own thing, and you do your own analysis, and you don't buy signals, and you don't make other people be responsible for your trading. And in that sense, well, welcome. And the other one is, well, I'm just here, and we are just here to help you along the way. Like, for example, if you ask me, do pound Swissy? Okay, I can tell you that. Okay, pound Swissy is it's overall bullish. I think it's going to go higher. I think next week is going to be a fantastic week on pound Swissy. It just needs to mature a bit, marinate a bit. It's not a straightforward thing, and I don't know why it is the last week of August or whatever that thing is that from 26th to 2nd, why that makes the stock market, the yen pairs, the Swiss pair, not necessarily with dollar pairs, why that all of a sudden goes into a risk on mode. So I'm here to prepare you and tell you, when you're going into those weeks, and you're able to, and you find it very interesting that it's actually going to go very quickly in a direction. Now that's just a theory, and it doesn't need to happen, and they can just do whatever. But going over to what I'm trying to tell you is, where is your plan? Where's your accountability? And where's your belief that something is going to happen? Because if I sit down today and I say, S&P 500, I think it's going to go to, let's say 5,650 by, let's call it 2nd of September. If I think we are going to go, another 3% higher, Nick and Chris and Kenzo will all laugh at me and say, what are you talking about? Well, I can tell you for free that that's how you need to start. In my world, you need to have a plan. And it doesn't need to be a fantastic plan. It doesn't need to be correct even. But the only way for you to start getting out of the gutter, getting out of your own mental, getting out of your own sad thoughts, and getting out of your, I don't know, whatever, what else you're going through, the only way to do is actually doing. So you need to, in my world, and I don't know if that's kind of you in many sense, but I want you to be happy trading. I don't want you to be sad or angry or frustrated or be like, oh, what's going on? I don't know what's going on. I really want you to succeed. So this is not a success thing. I'm going to analyze the market. I'm going to say that, S&P 500 is very high at the moment. And I jokingly said earlier to Nick that I actually, okay, can I buy this one? And I'm like, and of course it was a joke and all those, but there is a thing here. There is a point with what I did was, yes, I'm provoking Nick and making him laugh. Ha 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 ha. I mean, you can't buy a higher high. But it also proves that when things goes in a direction too far for too long, you kind of lose vision, and you're like, okay, I think this is too high. I don't think this is a good value anymore. But what you're actually saying is, you're saying that the risk is too high for the reward that is currently there. Okay, that is actually objective. That is actually something we can work on. But if you say, I don't know what's going on here, I think if I buy now, if I put my stop loss at 5,449, I think that's a good place. If you fumble, if you put emotions into what you're doing, right? Yes, yes, Chandler, you should get a loan to buy to trade. During FOMC, are we buying or selling? Baby Rose, Thomas, I think that. Thank you for saying that. Your plan should be already started before that. And I can say to you that market's already very low. So is it going to continue lowering? Are you going to sell our lows? The question is then, in your strategy, in your testing, is that a profitable way of doing things? And for me, it is not a profitable way of doing things. And if I were to buy, I would have to have a reversal, which takes a couple of 2 days. So at the moment, on dollar, I want to see it push either S&P 500 higher or lower, so that I can get in to a better position. So right now, the positions are too high, but I'm looking for it. So Mr. E Success says, my technical analysis is your Swissy will pull back to 90.89. Okay. Where is it? 9. What do you mean, sir? 90 euro Swissy. Okay, so that is far. Or am I missing something? 90.89, which is down here. Right? Close in this area, and I was looking at fib levels. Okay. I don't think that Euro Swissy, my personal opinion, by the way, but not financial advice, I believe that Swissy pairs are going to go higher next week, and currently we're just making pullbacks for a continuation higher. We are seeing some new lows on different pairs, on Aussie Swissy, CAD Swissy, New Zealand Swissy, which is again Swissy. But against Euro Swissy, I think that a brand new lower low is a bit out of the question. That might happen. That might happen more like in September, probably. But I'll never say never. But yeah. So yeah, cool. So where are you? Do you believe in yourself? Do you believe that whatever you're doing currently is actually working? Okay, that's kind of my way of doing things today. And I believe, I have confidence, too much confidence, that I believe that yen pairs next week is going to go higher. Currently is actually going exactly how I wanted it to go. I want to see new lows or something in this direction on the yen pairs. And I can go to dollar yen. On dollar yen, I don't foresee or forecast. I'm saying I want 144 to be hit so that if that happens, I'll look for a trade. So my trading is based upon conditions. I look for A, B, C, D, E. I look for if those conditions are met, because as much as you, we need to have a vision before we enter the charts. And then there was this person today that said that, Ivan, what did the person say? The person said that it is like a dollar yen is in a position that it looks like it's going to drop far. Gareth says, I just closed my GU at 2-1 rather than risking getting stopped at a break even after FOMC. Okay, good. Boom. You're getting a fist bump by me because, taking profits is better than nothing. I don't know what your plan is. If you can send me your plan, or that would be great. And by the way, I don't know if you're in Discord, if you are in A1 Trading Discord, where I am, or if you're in other Discords that I'm in. But if you guys want me to go through your trade history, I'll do it. And I will critique it in a positive way, meaning I'll see Why did you do that? I will say, why did you do this? Can you give me a reason for that so that you can learn more from what you're doing? So if that's something that's interesting to you, please hit me up. That would be very. I don't know why I love that, but I had like a time, like I think last year, every Saturday I would go through trade histories. Every Saturday I would go through trade histories, and every time I have my meetings, I ask for trade histories. I think that's the single most important thing, going through somebody that understands you, that goes or understand what you're trying to achieve at least. And as much as you can explain your strategy and might be different from mine, doesn't really matter. It's just that I just need you to tell me why you did what you did, so that you can do the same process again in the future. It doesn't matter if it is if you're only going to trade when the moon and the wolf and the elk is all shouting towards the stars at the same time. I don't really care what you call it, what your strategy is, or what. You need to be able to describe it. You need to be able to tell. You need to be able to give your reasons for why. Because when you're trading and when you're putting on a trade, you're just putting on a trade just for fun. Eden? Yeah. Cool. You do that. Can you show gold for the FOMC meetings? We'll do gold. Don't worry. But what I'm trying to get across is it doesn't matter your strategy. It doesn't matter what you're doing. For me, as your what do you call it? Your unpaid mentor for the moment, is that you have to be responsible for what you're doing. Not in a bad way, not being like, oh, you're going to be cleaning your rooms. No, not that way. But you are your best enemy and your worst enemy. You know that, right? You can get a tunnel vision and you can get confirmation buys and you can trick your brain to believing that buying dollar yen at the moment is the best single trade you've ever done in your entire life. But objectively, it's probably the worst. It's probably not going to make you any money whatsoever. But that's why we have reasons. That's why we have reversals. That's why we have this. This is, there's a reason why we trade gold, right? Why would you trade gold? What is the reason? Can you give me a reason? Give me a 2-page analysis and reasonings behind why we should trade gold. Please explain, if the Fed cuts with 25 basis points, does that mean dollar could be bearish since the market are pricing in 50? Says 10. Karibosana. Now, the thing is that if the market is expecting 25, expecting 50, and the market is and Fed gives only 25, the dollar will then be bullish because it has to price out. And it's not, so it doesn't increase bearishness. It doesn't either increase bullishness, it's just that it just less bearishness. It's kind of like, instead of saying that, you wanted to buy, let's say you wanted to buy something for 25 something, but then it only costed 20, you got positive 5. You got positive 5, right? So you have more money. So dollar becomes more valuable. It wasn't as bad as market was pricing in. So please explain if Fed could it mean that, a bit bearish. Now, it's not a lot. For 25 basis points is maybe 50 pips move on euro dollar. So it's not like it's going to catastrophically change everything, but yeah, it's a bit of adjustment for the market, I would argue. So nothing crazy you can expect, but you can expect some change, some 50 pips or 100 pips maybe. 100 pips is quite a lot, but it's not going to change everything. But if it goes to 100 pips, it is also because the consecutive meetings are also being priced lower. Because if you're looking, let's see, currently we are pricing in, I don't really know at the moment we're pricing in. We're pricing in what for December? We're pricing 4 rate cuts by December. That means that one of these meetings need to be 50. And currently the market is pricing in 1 rate cut, only 1 now for September. And for November, it is pricing in. That is 1. That is 2. So 2 rate cuts. Oh, okay, actually, it's actually 1 rate cut again. So 1. That means that 2 needs to be in December. So yeah, that's kind of where the story is at the moment. Richard says, I could also do with a loan to trade up. And what interest rates do you offer? Well, yeah, I offer not financial advice whatsoever, but I offer I only want a hotel stay in Oslo. If you can pay for me a hotel stay in Oslo, that's your interest. Whatever that is. Is that 1,000? Is that $100 maybe? I don't know. It's just a flat fee, not even percentage even. Of course, it depends. It depends how much you're going to loan them. For everyone who's not getting it, it's not serious. So for gold, I would argue that I'll even book a spot. Thank you. I need that. My back hurts. So for gold, what was the question, by the way? You're in a sell on gold. Okay, cool. That is very interesting. It's just that I am fundamentally disagreeing with you when you sell gold. I am not in a position to say, okay, you should actually do something about it. But it is your kind of way of doing things, I guess. So you enjoy that. I just want to say that for the month of August, we have slightly less profit to be made. This is, in my opinion, slight opinion, not financial advice, is actually a good place. But the problem is if it starts falling. So can you buy here? I mean, if does your strategy allows you to do that? For me, it doesn't. I need a bit more lower. I need it a bit down here at least. So if FOMC for me minutes it's a bit more bullish dollar, I'll be much happier person today. That's just the difference between what do you expect the market to do and what does the market actually giving you. The gold has been very tough. Yeah, also I can tell you for free that one of the more, I'm just going to tell you, what the most difficult thing you can do as a trader is to trade gold. Maybe euro pound is probably better, probably worse, and euro Swiss is probably worse. But gold. When I look at your trading histories, you as a group, I see people losing money left, right, and center on gold. It doesn't matter who you are. It doesn't matter if you come from a rich family, a poor family, or if you come from Africa, or if you come from North Pole, if you come from the moon. Doesn't really matter. 70% of losses is generally gold. And other trades and other assets is actually what keeping you afloat. So when you do like a performance review, you'll find out that gold is a stealer and it's also a lover. And who doesn't love people and who doesn't love gold in good and bad? So in my scenario, I just want gold to go a bit lower, and then probably that's a better place to be, rather than buying high, which may spike you out and then it goes higher. And then how far is it? It is 20 ounces. Yeah, okay. That's a bit much stop loss. So I'll have to wait. Penny! I'll do oil. 2 seconds. In September, seasonality shows bearishness, but since FOMC meeting is in September, has it a chance to going up? Has it a chance of going up? It's like yin yang at the same time. Let me explain what I'm thinking here. I think that what you're saying is correct, but your head is, or your knowledge needs to be a bit changed. What I mean by that is that the FOMC meeting doesn't dictate where gold is going to go. Future interest rates and future monetary policy does. So what is the current future monetary policy in America and the rest of the world is that they're going to cut interest rates. And why does that make gold go higher is because when you cut interest rates, because lack of demand is because economy is going bad. It might even be because it may turn into a recession. You need to then secure your money. So gold will be highly bought and highly demanded. That means that it's quite volatile and it makes it a bit more difficult to trade it because there's so much more extra money in it. But that's what depends. That's what drives it. So, okay. Penny, do you have any direction on oil, by the way? And in the meantime, I'm just checking yen pairs. Oh, there is a pullback on pound yen. And the Aussie yen, New Zealand yen is falling. New Zealand is falling. Okay, that's all right. Cool. That is all I wanted. I want this one to fall today, and then I want it to fall tomorrow. And then it can make a high on Friday. Mustafa says, I agree with the analysis, but I think it might dip to half by the news. In as much as I would like something to dip or gold to dip, for that matter, I also need to see it dipping. Kind of. That's why. But anyways, as your mentor today, I want you to only to trade what you actually can trade, or what you're able to trade, and what you understand, and what you are able to work yourself into. And if you need more knowledge, there is more knowledge. I am here to answer for you. Just joking. Okay, cool. So, what was it supposed to do?
Hey, Ivan.
Yeah, hi, Nick.
How are you, Yen Man?
Good.
Where did Yen Man come from? The nickname Yen Man. See, he's got the tag Yen Man.
I don't
Is
know.
that what they call you? The world calls you Yen Man now?
No, I think it's self-inflicted. But we are going into a yen season. I'm going to talk about yen every single day. I will even speak about this yen in sleep now.
That's kind of interesting. Do you dream about the yen also?
Wet dreams, yeah.
All right, Ivan, you've been on here too long. We're kicking you off. But before we kick Ivan off, guys, Ivan was also on a more serious note. He was talking about, being a mentor to traders who are trying to improve. He does offer one-on-one coaching. If that is something that you are looking for or would be beneficial to you, if you'd like to work closer with somebody, I highly recommend it. A lot of traders would really benefit from something like that. And Ivan is the guy. He's, worked with a lot of different traders from all over the world. So if you're looking for some help, he does offer one-on-one coaching. You can find him inside of our Discord channel, or if you're not in there already, you can find him on YouTube and connect with him there. He's got all of the socials and stuff there for you to find. So we'll drop the link to Ivan's YouTube channel in the chat here, and you guys can go follow him there. Ivan, Yen Man, thank you for coming on and helping us out, and have a good rest of your evening.
Thank you very much. Thank you for having me.
See you, man. All right. Ivan is one of the longest running contributors to our goal here of running the A1 trading show. Also, check out the QR code. Wait, that's so cool. I'm going to try it on my phone really quick. Hold on. That is awesome. Wait, okay. I'm losing my bearings. That is so cool. James got the QR code going, and look at that. Popped open. Guys, scan the QR code. Heck yeah, guys. That is awesome. And there's so much free stuff on there. Scan the QR code for a bunch of free stuff. Why not? Dang. Nice job, guys. That's really cool. I got my LaCroix, and we're settling in for the next hour here. As we get closer to the Fed meeting minutes, there's some stuff I wanted to chat with you guys about. Why is the dollar dropping? Why are yields dropping? And why is good old Russell making a comeback today? Our friend Russell is making a little bit of a push to the upside. I'm going to talk about that, and should be interesting. So first of all, I want to talk about the news. There was something that came out today, some revisions on labor statistics. So jobs came in. There were some revisions here that were pretty big revisions downward. And basically what that is that, you know, they came out and they said that there are certain jobs being created, a certain amount of jobs being created. We talk about this regularly on the show. Let me just pull this up. Dang, I love that QR code. That is so awesome. So QR code right below me. If you scan that, guys, there's like a bunch of free stuff that you get. That is so sick. Sorry, my Apple Watch wanted to chime in. So anyways, what I was saying is when we look at the jobs data points that come out, it is very normal for revisions to follow the following month. And I don't know the extreme specifics of it, but revisions in jobs data, there's some on paper jobs get created, and then there's the finalization, and that is why there's some differential between actual and revisions. But they came out with more revisions today that showed a lot less jobs got added. I think it was like $800,000+ jobs that did not get added that were counted. And so that caused some movement in the market this morning. If you took a look at the S&P 500, drop it down to a 15-minute chart, this big whipsaw move was the jobs situation, right? So jobs were revised much lower, and that caused the stock market to go down because, you know, that may indicate that the U.S. economy is in a bit more of a slump than what may have been previously thought. So why does the Russell react positively to that? I am long the Russell, and part of the reason for the outperformance, I would say, on the Russell, this is the first thing I thought. When I saw that data point, the first thing I thought was, oh, the Russell likes that. And the reason I say that is because why doesn't the S&P, why doesn't the NASDAQ like that as much? The Russell, it is made up of smaller businesses. Let me give you just a quick, because it's relative to this conversation, example with A1 Trading. A1 Trading is a small business in the trading space that builds software tools for traders, right? Now, I can tell you that the economy does weigh on us, but not substantially. We have, you know, this business has been growing for, you know, year after year. And yes, the economy plays into what we do, but we're not directly correlated to the economy. In fact, A1 Trading typically does well when things are kind of chaotic in markets because inevitably, just being transparent with you guys, views go up a lot. And that ends up meaning we usually sell more software. Now, that's just a anecdotal evidence or example of a small business not necessarily being super correlated to the economy. But let's just say for a second, let's use our example of A1 Trading. Okay. A1 Trading. Why did I put two ones? We're not A11. We're A1 Trading Co. All right. Let's just say, for example, A1 Trading does not have any debt, but let's assume that we did. Let's say to build the Edge Finder, A1 Trading borrowed money. We needed to borrow money, right? So we borrowed money and we're paying that back plus a little bit extra for interest. That little bit extra that we're paying back the lender, as an example, again, we're a debt-free company, which is awesome. If we were paying down debt, if the interest rates out there went down, this number would go down. What does that mean for A1 trading? That means A1 trading would make more money. So my point is, for smaller businesses of America, which typically borrow more money in an effort to grow, if small businesses in America see interest rate cuts, they will disproportionately be benefited as opposed to larger companies, which may not be so subject to interest, but they certainly are very subject to the economy. Now, don't get me wrong, the Russell is also hurt or helped by the economy. But on a relative basis, if you ask me, if the economy is going to be either not great or it's going to be great, it being great really favors the big mega companies, which can just really make tons of money. But if the economy is poor, then these big companies like Costco and Apple and Amazon, they'll do well if they'll do okay if they'll still make money if the economy goes cooler, but it hurts them a lot more. So my point with trying to get at this is that if you are somebody saying, the economy is looking like it's cooling off, but they're going to cut rates, and you don't see the economy crashing, that's where you would find me kind of being bullish on the Russell. All that to say, guys, that the jobs data that came out this morning showing revisions, I would actually have argued was pretty good for the Russell. It indicates a larger backdrop of interest rate cuts coming in the US. If anything, job revisions down like that secures most likely there are more interest rate cuts coming. I'm not going to lie, guys. Of the 3 indices right now, if you asked me, or the 4 indices, the S&P 500, which is the most diversified of the 4, the NASDAQ, which is the most tech-heavy side of it, the US 30, which is the Dow Jones, which is mostly, safe/dividend type companies, or the Russell, which is small companies of America, where do I think the best risk to reward is out of those 4? I'm picking the Russell. Now, let me specify something. I'm not saying that this is the safest bet. The Russell is not the safest bet. In fact, it's probably the riskiest. The options market would tell you by implied volatility that the Russell is the most risky of the 4 main indices here that we're talking about out of the US. So I'm not saying it's the safest. I'm saying that on a risk to reward basis, I think there is a lot more upside than downside for the Russell. And even if I'm wrong, like if the Russell crashes, then, obviously the other ones will probably be down too. But in terms of let's say we get a good, let's assume for a second that the Fed has some sort of soft landing and that things go well. Of the 3, which one are you going to get the most bang for your buck? Definitely the Russell. Well, not definitely, but likely the Russell, right? So my point with saying that too is that if we take a look at the Russell on a weekly chart basis, let's do a quick study. From the highs, the Russell is still, well, let's do it the other way. If we were to buy the Russell, and let's just assume, again, another dangerous assumption, let's assume we went back to highs. It's a 14% gain if you were to buy the Russell and it were to return to the highs right now. What about the NASDAQ? 14%. That's what we're working with the Russell. The NASDAQ, you're working with a 5% gain if it goes back to the highs. And the S&P 500, you were talking about a 1% gain. So you are potentially going to make more money if the Russell were to rally to the highs than the other ones. However, you pay for that risk, or you pay for that reward with increased risk. When you're working with smaller companies, they are more fragile to, a recession. They are more fragile to interest rates not coming down, etc. But I keep coming back to this. I know that a lot of, my viewers, they're very interested in trading gold or trading currency pairs. But right now, the interest for me is in the indices. Now, if I'm looking at currencies, the dollar looks really weak, but how can I join the euro? I can't, right? Even though I am bullish, I believe. Let me check. I haven't even been looking at the currency market because so many of the currencies that I trade are just not quite at levels where I can enter them. So here's pound US dollar, right? I already know because I was just doing a podcast about this. Pound US dollar looks great for longs in my view, but only if we can get a pullback into the support. So 1.30 right now on the pound looks really, really attractive to me. But it's not quite setting up right now. Let's take a look at some more. So I also saw platinum showed up on the top setups page. The NASDAQ is getting a bullish rating. Pound US dollar. The DAX. I'd like to take a look at the DAX. And let's look at gold together. NZD USD and 10-year treasury bonds. And platinum, by the way. Platinum, all these things are getting, these are our bullish possible setups right now. Okay, so based on this, how do we take this information? How do we, make any decisions off it? Are you live? Yes. Good afternoon from Scotland. What's up? What FOMC news is that? We've got meeting minutes, which is notes from the Federal Reserve coming out in 45 minutes from now. What's your take on oil? Oil's down today because jobs data got revised lower, showing weaker economic outlook or weaker jobs market stuff for the U.S. So doesn't look particularly promising for oil right now. I'm neutral on oil. I'm neutral on a lot of commodities. To be honest, gold is the only one I like, but it's not for its industrial commodity status, which it's not. It's for its risk adversity status, like the risk off status. The economies of the world look like they're cooling. There's going to be a lot of money printing, which means a lot of printing of currency, which is strong for the gold market, but not particularly strong for commodities. Commodities, some of you guys might remember that at the beginning of the year when the US economy looked like undefeated, I was really bullish on commodities. And I'm just not quite there anymore. A lot of the trends that were so strong for commodities, like silver's been kind of a wash. Oil's just been in a range-bound market this year. We could take a look at copper, right? Look at copper. Copper's just been having a rough year. In fact, if we go, copper's pretty much almost flat. Look how much copper gave back. So here's copper to the beginning of this year. Copper went flying high. I remember everybody was talking about copper during this time. Copper's given back a lot of its gains because the economy of the world, or the global economy, seems to be really cooling off. So the demand for copper might be hurt by that. Anyways, I wanted to look at some charts here for setups. I've been talking about gold a lot on a possible pullback. So if we get a pullback into this area, I do like this. Also, I'm going to ask the audience something really quick. Is there anybody here in the audience that is a new stream viewer? If you've been here less than a week, if you've joined the stream for the first time or started watching the show for the first time in the last week, can you just type like me in the chat or let us know like I'm new or something like that? I just want to see how many new people have recently started watching these streams. Also, if you're enjoying the show and you're new, consider subscribing. We're here Monday through Friday dropping ideas, and we have different guests who come on from all over the world. Look at that. We got a bunch of new people here. Thanks for being here. Hope you're doing well and hope your trading is going all right. If this is your first stream ever, then it's nice to meet you. Nice to have you here. One thing that if you're new to these shows, here's what you can kind of expect. We talk markets. We don't talk fancy cars or stacks of cash. We don't do the lifestyle nonsense. We don't, we're not here trying to just sell you something on, sell you a dream or anything like that. This is practical, realistic trading. Speaking of something, I don't even have anything to sell you today. I've got something free for you today, however, which if you're new to the streams and you've not seen this tool before, the Edge Finder, it usually is a tool that we try and sell you. Straight up, it's a really good software tool for traders that are looking to get into economic data, technical trading, sentiment-based trading. If you want to see what institutional money is doing, this is a really powerful tool. But I can't even sell it to you today because today the Edge Finder is free until Friday. So if you have not already taken advantage of our free trial week that we're doing, you've got 3 weeks. You got 3 days left to try out the Edge Finder totally free. On Friday, it closes down and it will be no longer available for free. But if you would like to try this tool, check this out. We got a link for you here in the chat. Try out the Edge Finder totally free. Use this link that's just been dropped in the chat. Now, just to walk you guys through this, because I know a lot of people are trying the Edge Finder for the first time ever this week, which is so exciting. Here's kind of what I would suggest you spend some time on. A lot of traders like to learn about the commitment of traders data, which will show you what institutional positioning is looking like on a week-to-week basis. You can see the latest weekly filing, what they bought, what they sold. Quick way to read this is, you can see that they added a lot of long contracts to the Japanese yen. They decreased short contracts. They, you can go through one by one here. If you're somebody who likes gold, right? They added a lot of long contracts to gold in the latest filing. They added just a little bit of short contracts. So you can study institutional money here. You can also study seasonality. This is personally one of my favorite things to study is seasonality. So this will show you the month-to-month breakdown. Month-to-month breakdown on the historical performance of a symbol that you select right here by month. So the way to read this is if you selected gold, which I know a lot of the audience loves trading gold, me too. September, which is the next month, we are actually slightly expected to see on a historical study of the last 10 years, we're expected to see a downwards month for September. So you can study this. You also are expected to see a negative month in October, so on and so forth. There's so many different tabs for you to explore. If you are not taking advantage, again, it is free until Friday. So please try this tool while it is available for free. We want to get some feedback. We want to hear from people. All I ask is that if you do choose to apply for access, please take this seriously. Consider purchasing it at the end of the week. And even if you don't purchase the tool at the end of the week, I'd love to personally ask you to just leave some feedback with the support rep that helps you with the trial. So we're doing trials this way. Basically, you apply for a trial. Someone from our staff will reach out to you and start a conversation with you, get you access to the tool, and try and walk you through the tool, help you out, answer any questions you might have. We're doing this on a one-on-one basis. Every single person that applies, we are working through applications all day long for the next 3 days. So again, take advantage of this. We've dedicated this week to making the Edge Finder free for everyone to use until the end of the week. Unfortunately, that is not how it will work the long term because this tool does not pay for itself. It is a very expensive tool to build, maintain, and support people on. But right now, if you're new to the stream, you picked a lucky time to start watching. You can access our tools totally for free until Friday. So again, take advantage. Link for that is in the chat. So I wanted to talk about gold here a little bit. So I discussed this earlier, but the idea being that gold, I made a video yesterday just talking about how the bulls are still in full control here in my personal view. It's hard to even dispute. Bulls are just in control here. Take a look at the moving average chart. You got all moving averages lined up. You have a break through the all-time highs to form new all-time highs. That does not mean that there can't be a couple days of red. But my personal bias would be that if you do see a pullback form, I'd be looking at that as an opportunity to get long for a potential next wave higher. And there could be a couple of pullback opportunities. There could be a deeper pullback. We may even go back to retest 2360. But here's how I think I would play this on gold, or how I am looking to potentially set up on gold. Let's take the moving averages off for a second and let's do this. So if price comes down on gold to this area here, 2470, just about. Yeah. 2470, I'd probably attempt at a long trade there. If that does not work, I'll consider, depending on in my own portfolio, like how much available cash I have to potentially buy gold. I don't trade CFDs. I personally trade on a stock margin account. So I trade GLD. I could trade options on there, ETFs on there. That's personally what I do. So if I, depending on my own, allocation to what I've got available at the time, I may choose to buy gold a second time if that doesn't work out. And if that doesn't work out, I think my third attempt would probably be around 2360. But I don't think that, actually, let's do this. I'm just curious. Yeah, so if that happens, if you get down to like 2360, you're probably looking at like a 200-day moving average. Like if that sort of move happens, it's 200-day moving average might not even be there yet. But that's kind of where I lean on gold. Is I have no interest in sells. If we top out around here, then we may start to go back, may start to retest some areas of structure. And I actually like gold better if we do get that move. If we get something like this, sure, I'll probably still take a buy or attempt at a buy with a relatively tight stop. If the market doesn't work, I like this, or if that setup doesn't work, I like this setup more. I like the idea of getting a deeper retracement on gold, because then I feel like I'm getting a better price. Also, not to mention, so why am I not in a rush to buy gold, and why am I happy to take more than one attempt? Because currently right now, where I see the best risk reward in this market, which I've talked about over and over, is things like the Russell, things like the NASDAQ, things like the S&P 500, which I'm currently positioned on myself. So here's some of my current positioning. I'm long the S&P 500. I'm long semiconductors. I'm long IWM. And this is actually a record for me in terms of floating P&L. I don't think I've ever had that much floating P&L. That being said, I had a really rough couple weeks, the last few weeks, trying to catch the buy the dip opportunity. So I can't sit here and act like I played this perfectly, because I lost a good bit of money on some of my attempts to get long on the markets. So I was definitely early to the idea, but it's okay, because it still ended up working out, and I've got a nice trade going on the S&P 500 with stops trailed into profit. Can you tell us about what this meeting is after 30 minutes? The FOMC meeting minutes is not a speech. We're not going to see Jerome Powell step up on the stand. We're not going to get a speech like that. It is going to be a release of a document which shows some thoughts from the Fed. It's basically like a scribe notes being released. So scribe notes being released from the Fed shortly. Can it cause the markets to move a lot? Yes, it certainly could, if there's something in there that is surprising to the markets. Nick, when would you start taking profits on the Russell trade? I'm in the trade with you, or are you going to let it play out for the big upside? For the Russell, so I don't usually take profits. I rarely ever just take profits on a trade. I personally just like to manage a trade, meaning, if So I entered the IWM long. And if we put in a higher low, which we kind of did here, I'd love to see this take out the highs. If that happens, I'll probably just trail a stop. And then if it corrects, I get out. If it keeps going, then I trail stops further. Also, guys, we're going to have Chris Pulver come on here in just a second to join the show. If it's cool, Chris, if you could take over the show for maybe just 5 minutes, I'm just going to run to the restroom, and then I'll be right back with you in just a second. Guys, remember, Edgefinder Free Week is ending in just a few days. Chris Pulver is going to be on here in just a second. We'll roll a quick break, and then I'll be back with Chris in just a few minutes. Check this out.
We have four brand new indicators built for TradingView. Introducing the momentum, extension zones, trend projections, and volume spikes indicators. All 4 indicators work on every TradingView chart and time frame. You can easily see shifts in bullish or bearish momentum. Look and see if price is being overbought or oversold, which could cause a quick reversal. Automatically get a trend line that shows the true trend, bullish trend, and bearish trend based on the most recent market data. Get notified instantly of big spikes in volume to help you find breakouts. All 4 are available now at a1trading.com and can get set up in just a few minutes. Go check out our brand new line of TradingView indicators today.
Hey everybody, we're back. It's 1:30 p.m., just a little bit before the FOMC minutes. So I did some reading. I just wrapped up a little doctor's appointment, and did some light reading in the waiting room. And we were talking about that non-farm payroll revision at 818,000, showing there's a softer labor market out there. Also, it's one data point that literally in my career I've never actually seen this be a thing that it's like, oh my gosh, what does this mean? I think it's just because of the heightened sensitivity to the employment news right now. If you look at the Edge Finder, we've seen that the higher, what's up, Benji? Oh boy, the dog's coming in to say hi. Let's go into, let me get into Edge Finder here. I've got it in another browser. There we go. So let's get into the labor market data. And, I do think this is important to watch the trend. Look, think about the market cycles. I know that the stock market itself acts like it's a child that's 5 years old that, you give it a ring pop and then take it away and then you see what happens. I mean, we're clearly seeing some very aggressive and fast, rotations and cycles, and it really is like the market's in this bit of a temper tantrum. As I was messing with Nick earlier today, I mean, watching Tasty Trade do a study on V bottoms for 20 plus years, and the reality is it takes over 1 year for a V bottom to actually get back to full profit. And the fact that we did it in 10, 11, 12 days of trading is really yet again like another outlier that we've seen here in the last couple of weeks. So quick story is really this year will be remembered for a great continuation from Q4 of 2023 into a really easy first half of the year if you were long. If you were long Mag 7, if you were long the indexes, if you were long gold, great first half of the year. Is it going to be that easy for the second half of the year? Maybe not. I'm happy I'm a trader because there's ways to navigate, sideways markets. There's ways to navigate up and down markets. And so I guess as I sit here for all of you today, I guess I want to ask this. I mean, how comfortable, confident are all of you out there that you are able to generate profits if this market decides to go here? How many of you are going to generate income if this happens over the next couple of months? How many of you are going to generate income if this happens over the next couple of months? How many of you generate income if this happens the next couple of months? That's what a trader is, right? If you are comfortable with whatever the market throws at us, finding ways to trade, then it doesn't matter. And all we're doing is we're talking, and it's optics and what the news says and what data we can listen or take away and discern. It's all the same. I mean, retail traders have so much at their fingertips now. I mean, you can see it with the Edge Finder. I mean, you have so much information there to make good, informed, data-driven decisions. but we don't know if that translates into price actually going anywhere. Maybe it translates into price going somewhere making absolutely no sense. Maybe it translates into like, oh my gosh, I'm so wrong in this trade. So traders, managers, right? My job is to make sure that whatever happens, the net result is I can find a way to generate income, right? So as long as all of you out there are comfortable doing that, keep doing what you're doing, and don't try to scrap up a strategy that's like, look, if you've had something working for you, keep doing it, right? And I've said this for a long time: if it's not broke, don't fix it. That's nothing new. You've all heard that saying before. But I would certainly say that when it comes to wins and losses, I expect to win my trades. Okay, what I've been comfortable with over the years is I expect to win my trades. When I don't win my trades, I don't let it bother me like it used to. Here's the story. Okay. My best winning percentages in trading, my best winning percentages as a Forex trader, when I was running a copier service and doing Forex trading, I mean, I had $7+ million under management with Forex alone. I took trades that I would trade really, really small. I dollar cost average into them, and I would build positions at supports and I'd build positions at resistance levels. I'd trade so small that my drawdowns were always really manageable. But I did have a couple. If I talked about my, we know, like, FX books and things like that. If I showed you in, let's say blue is going to be my actual account. Okay. So I would generate income pretty steady. I'd have these nice injections of profit. Okay. Now under the surface, I had pretty tight equity. I mean, I was carrying maybe like 2 to 5% drawdowns in my Forex accounts. But when I would have, let's say like this period, I'd have this like tight drawdown, tight drawdown, tight drawdown. I'd get a little bit worse off, and then I'd have everything kind of get back and tighten up when I get those big injections of profit. So this would get somewhere between like 8% and 10% drawdowns. Okay. But in order to get a risk adjusted return for me to have 15% gains, 20% gains, I have to take some type of risk, And so even if I started really small and kept single digit, they add up if I'm adding more trade sizes and kind of working through positions. So I made a pretty good career, pretty good living out of managing a portfolio that would take, single digit drawdowns that would get a little bit worse. But I did have 20% drawdowns during Brexit. I did have 23% drawdowns during COVID. During the Swiss National Bank crisis, I was actually fortunate to be on the right side of that trade, and then I got in after the Euro Swiss, settled at 98 or whatever the bottom was in 2015 in January. But I actually, that was very lucky, because before that I had a 12% drawdown on just the Swiss yen. I was short the Swiss yen early before we went up to these crazy highs, and then we crowned and we jumped all the way back down. Here's a fun story about managing drawdowns. I took a 12% drawdown and ended up generating 1% profit. I don't prescribe to that any longer. So summarize this. I know Nick's back on here, but point is, this needs to be tighter. This needs to be tighter. Right now I'm in the same boat. Like my equity portfolio this year, I've probably had about an 8 to 10% drawdown during our 10 to 15% correction that we saw in August. But I've watched a lot of that wipe away. I've had a lot of profits roll in the last couple of weeks. My P&L, my buying power is back to as high as it's been, and then I'm starting to reallocate. But like I said earlier, as long as you all are confident that whatever happens over the next 5 or let's say till the end of the year, whatever happens by the end of the year, I don't think anybody be surprised if the market is up to, let's say, 600, and I don't think anybody be surprised if the market is down to 500. Is that just me, Nick? What do you think? If we're at 600 by the end of the year on the SPY, or down to 500, would either of those numbers surprise you?
So actually, what would surprise me most, Chris, to go off of your point, would be if we're still at where we are in that time. I think you're right on with, we are not only would I not be surprised if we go to one of those directions? I'd be surprised if we didn't go to one of those extremes. Like the market right now with an election backdrop, here's the thing, here's the setup, Chris. We got what looks to be like lining up for landing a soft landing. Now, the reason that generates large swings is that could either come to fruition and the market rallies and rips and we see a risk on super cycle, or the disappointment, the strikeout happens. So that's where I'm thinking you get those big moves one way or the other. Also, I had a question for you because I was listening to what you said about, if the market goes up, market goes sideways, or market goes down, trying to, be as proactive as a manager as possible.
Mhm.
I have my own kind of strategy for how to navigate those times. But I'm curious for the listeners who are like, that sounds really good, but I'm a little, challenged on how I could reach that goal. What would you say to somebody who's like, well, I don't have absolute certainty where the market's going to go. How can I be kind of diversified like that to be positioned for multiple scenarios?
Yeah. So what do you want to trade? Do you want to trade Forex? Because if you want to trade Forex, I'll give you a really easy example.
Yeah,
If
let's go FX for starters.
So let's go to starters for FX. So if you've watched any of our trading battles, Nick, the one that you and I were on last time, that was a perfect example of what I would
Yes.
do in a currency
Yes.
environment, which is
Remember.
I would pairs trade. It's like if I don't have a direction, I can trade opposites and trade pretty wide areas. I mean, in FX, I mean, look, the Japanese yen is going to be pretty much on its own island doing whatever it wants to do. It's not really going to behave according to the dollar. It's not going to behave according to necessarily risk on, risk off. It is completely correlated with like whatever the Bank of Japan wants to do, kind of. I mean,
Yeah.
and even that's not guaranteed because and does anybody know what the Bank of Japan is going to do before they do it? Not really. It's like they raise rates by 25 basis points. I guess if you're negative 0.1, you get to 0.25. It's a 35 basis points increase, and it completely like it shifted the market into panic in 3 days. You know, so anyway, my point is there's probably going to be some good volatility on those yen pairs. We did have flash crashes on the 5th of August. I think that for me, example, I know you've been looking at short dollar Swiss, right?
Mm-hmm.
Okay, short dollar Swiss. So Nick is going to be Nick can short dollar Swiss, and at the same time, Nick could also go, let's say, long, CAD Swiss or Aussie Swiss or New Zealand Swiss. And the reason I would say those is because those aren't necessarily correlated with the dollar. If we see a weaker
Sure.
dollar, we should see a stronger Aussie. If we see a weaker dollar, we should see a stronger Kiwi. If we see a weaker dollar, we'll probably see a weaker Swiss because there's no reason for the Swiss to necessarily be strength or safe haven. So I think this could be, Nick can buy. So if you're long one of the commodity base crosses with the Swiss and you're short against dollar Swiss, I would say if you can think about the capital here, 1,000 pips for profit, okay, and a 500 pip stop, because that is not an immediate short-term trade. So if I was looking at, okay, look, I'm going to put in 1% risk for a 500 pip stop area, and my winner is going to be a 2% gain. If I win, I walk away profitable. I move my account. Now, obviously, this is big picture stuff. So for me, if I'm talking about this, I'd probably do this in FX account for maybe a 5% risk to go after a 10% gain.
Mm-hmm.
Because that to me moves the needle. Like if this takes 3 or 6 months, but I make 10% and I net 5, that at least moves the needle. If I do this, let's say 3-4 times a year, that's still making 15 to 20% return. And so I can pairs trade in Forex. And I don't look, man, I don't have a bunch of big directions in Forex right now. I mean, I'm trading so tactically in Forex. I'll give you the exact trades I'm in right now. So I'm Aussie CAD long, I'm Aussie Swiss long. Aussie, so yen crosses, I'll put JPY pairs. I'm looking for short-term swing scalps. That's what I call them. I'm following directions. I'm trying to get alignments from like 1 hour, 30 minute, 15 minute, and try to follow some directions there. I'm still looking at the big swing we just took from July into the bottom in April or August 5th. So if there's an opportunity for like some short-term, maybe 1 to 200 pip areas on the yens, that's probably what I'll end up trading. I'm trying to think. Aussie New Zealand nothing, Aussie dollar nothing, CAD Swiss I'm long. I did put in a trade today on the CAD yen short. It's a pending swing, so it's a pending. So I guess that'd be pending short. And then the Swiss yen, I put in a pending short. These are swing trades that haven't filled yet. Euro Aussie, I put in a pending short. I guess I don't need to type short twice, but whatever. Euro CAD, I'm watching and waiting. Euro pound, I'm long currently. Euro yen, waiting with the yen pairs. Euro New Zealand, this is also a pending short. Euro dollar, no trade right now, even though I've been watching the dollar freaking fall for 3 months, and the euro dollar is the only thing that correlates, and it makes me mad that all the other dollar pairs aren't the same way. Pound Aussie, nothing. Pound CAD, nothing. Pound Swiss, I'm long. Pound yen, waiting with the other yen crosses. Pound New Zealand, looking at a potential short. So pending short. Now, I will say this. I want to summarize this when I'm done. Pound dollar, no trade. Actually, pound dollar, if we see 1.3150 resistance, I might look at a short with confirmation. I don't have the trade yet, but that's something I can align and look at that trade. New Zealand CAD, I'm long. And New Zealand Swiss, I'm long. New Zealand yen, nothing. New Zealand dollar, nothing yet. I like the New Zealand yen if we get some open spaces. Dollar CAD, I'm looking to short. I'm not in yet. That's pending. So that's a pending short. And dollar Swiss, I'm long. Now I'm long dollar Swiss because I'm an idiot looking for carry trade. And the dollar yen short term. So if you talk about pairs trading here, Nick, you could switch any of these trades. Like if I'm short CAD yen, short Swiss yen, I could go long on one, short on the other, have the one that wins be a bigger win than the other. There's my net gain, right?
Yep.
So all these that like Euro New Zealand, Euro Aussie, they correlate. If Euro New Zealand's down, most likely Euro New Zealand and Euro Aussie are down at the same time. Pound Aussie, Pound New Zealand, most likely down at the same time. You can pair trade those. I could go long Euro Aussie, short Pound Aussie, and most likely have one trade win, one trade lose if I give it a wide enough space.
Yeah,
So,
and Chris, I've got just on my screen. Well, let me share my screen
Yeah,
for a second. I got to add it here. 1 second, guys. I just wanted to mark up an example of what Chris is talking about. So if you are somebody who, let's say you do think that we are expected to see some big swings in the coming months, what Chris is kind of outlining is in the options world kind of familiar, but maybe a lot of currency traders or futures traders have not thought about doing this. This pairs trading concept of going long and short, something that is kind of correlated, but not perfectly, right? Like,
Yep.
let's say what Chris is saying, like, let's say you short the dollar Swiss franc, but at the same time, you have a long on the Australian dollar against the Swiss franc as well. If you think that the Swiss franc is going to move violently one way or the other, you're going to make money on this if it does truly do that. Because let's just say that the Swiss franc gets really strong and both of these charts plummet.
Yep.
Right? In that case, you made money on this one, good bit of money on this one, and you lost some money on this one.
Right.
The overall result, you made money. On the flip side, if the Swiss franc gets very weak and the Australian dollar against the Swiss franc, rips, and let's say the dollar has a bit of a comeback, in that case, you still made money because in this case, you made a lot here. You gave back some. Where's the risk? Because there's never a free lunch. The risk would be that you get this, where you don't get anything decisively moving,
Yep.
but you get kind of back and forth and you get whipped out of both. But the point here is you could also, and what Chris and I are mapping out here is we're not necessarily saying this is what you should do or this is like what is going to happen. We're talking about ideas. There's also the opposite trade where you could do something as crazy as this. As crazy as this might sound, if you are somebody who does not think, let's say you want to short volatility in the currency world, one idea or way you could play that is just put a tight take profit. Remember, you have a short in one, a long in the other. In this case, let's say you get the whipsaw effect.
Mm-hmm.
Look what happens here. You made money because you lock in money here, you lock in money here, and the net kind of balances out with the rest of it. So
Right.
There's all different styles of, this is where trading just goes deeper and deeper. You can do whatever you want in the markets. It's just a matter of thinking up. But to your starting point here, how do you remain kind of unbiased to what the market is? You can pairs trade. I'll add one way that I do it, Chris. I've talked about it a lot on the show.
Mm-hmm.
For me, I am predominantly bullish on the indices, but there's a catch, which is, okay, I'm long the S&P 500, but, and I know you are also in this camp, it's not in my brokerage account, but it's in my bank account. I've got cash waiting.
Yeah.
So one way is that even if you are bullish, how do you make money if you're totally wrong about being bullish and the market plummets?
Mm-hmm.
You never go fully in. You have some cash to deploy, and then you're happy to see it fall. Now,
Right.
suddenly, even in a falling market, you can still technically make long-term money by
Right.
buying at a better price. So there's different strategies.
Yeah, and if you look out at it, look, anytime you've seen the market down, 10%, 15%, and you look out the next 1, 2, 3 years, it is way higher
Yes.
typically, right?
Yep. Just
So
massively majority of the time.
yeah, I mean, look, we can go back to the last 4 or 5 years and talk about 2018. If you bought the low in January 2018, and I'm not saying just the low. It's like obviously we're not like cherry picking and bottom picking here, like it's perfect. But if the market's at a discount, think of it this way: if the market's ever at a discount of 10%, you can buy it. Now, 10% could also become 20. It could
Yes.
also become 30. But if you discount at 10 and 15 and 20 and you're long, if you're an investor that is willing to look out maybe 3 to 5 years, you're going to be happy you bought at those prices.
Yep.
Otherwise, and talked to this about this before, Nick. There are proven studies that show if you buy the all-time highs, that actually tends to outperform as opposed to waiting for the dip. I think it was Peter Lynch that said more people like lose money waiting for the correction than actually
Yep.
getting the correction, because they're either
That is so
missing
true.
out and not participating, or they're trying to sit there and short the darn correction that's supposed to happen that never does.
And the crazy thing about shorting the correction, I mean, we not to dive down the same path that we did before. We talked about how difficult shorting actually even is on the indices, even when it is going down, because the rip backs are so powerful. The bull bounces even in bear markets can be
Case in point.
very, very aggressive. So
Yeah.
lots to talk about there. Chris, we've talked a lot about the indices. I want to ask on behalf of the audience, let's talk gold and silver for a second. I know you
Yeah, for
talked
sure.
to Frank about this earlier. So
Yep.
Gold is near an all-time high. Do the same principles apply for gold at all-time highs? Is it best to, employ the same strategy, be actively looking to participate in the rally at all-time highs, or is it better to wait for a discount on gold to be a buyer? Or are you bearish on gold? What are your thoughts on gold right now?
Is it just me, or is gold like the sneaky? Like, I don't know why. I mean, I
Dude,
think
it's
we're talking to
outperforming the S&P.
Yeah, I mean, I think, look, I think we're talking to a fairly intelligent audience here, and everyone that comes in and tunes in gets tons of great data and information every single day. And look, traders learn how to survive, or they learn the hard way. I mean,
Mm.
we can make all these mistakes and they just become like lessons of don't do that, manage money better, manage my equity better, my risk better, or they make a bunch of money. I mean, we're just trying to survive here. But I'm just curious on the gold thing. Like, why don't I hear like I guess if mainstream is talking about piling into gold, then I'd be a little bit more concerned at these all-time highs. But I don't hear about it. I don't hear anybody on CNBC or Squawk Box or Bloomberg. Like, I don't hear about anybody talking about gold other than central banks are buying a lot of gold.
Chris, that might be why we have an audience. You know that? Because CNBC and all these traditional television things, they won't talk about gold. I'm actually so same thing as you. I'm so weirded out by that I wonder if it is purposefully done, that they even on like gold will reach like a big, huge, monumental all-time high, breaking out 2% up, and the S&P 500 the other day, 2% up for stocks or gold. Stocks were flat. I turn on CNBC. They didn't say a word about it. And I'm like, this has to be calculated,
know.
because I know you want to talk about gold, but you just, anyways, not to go down conspiracy land. The other side of that is that gold is a threat to, traditional.
Maybe that's why,
finance
right?
system. I don't know.
It's the fiat threat. It's the standard that we went away from in the 1970s. That's probably going to come back and bite us in
The
the ass
OG
at some point.
Bitcoin.
Yeah, it is.
Well,
It's the
Bitcoin's
real
just the
digital.
new, yeah.
It's the real digital. It's the real gold instead of a digital gold.
Yeah.
Anyway, look, at all-time highs, I just think that this is in a way, I think this is a self-fulfilling trend where I just still like the structure of it. I mean, I don't see gold as like we're crazy overbought. Look, when I saw overbought conditions here, we fell. If we see another run higher, Nick, and we get overbought conditions, I'll look for a little bit of a pullback. But if this becomes resistance to become support, like that's a good spot to add. So I think technically, if we stay here, and even if we pull back, now I'm still looking for support. Even if we pull back later, I'm looking for support. But I have my sights set on 3,000. I mean, you and I talked really early in the year, and I had this projected move all the way up towards 2250, and it got there way faster than I thought, dude. This was like March and April that I was protecting those calendar spreads that I did. I was long January, and by March, April, I was like, holy crap, this is like a 300% gain for me. That was way better than I thought. And then looking out further, I mean, let's take I don't know. I mean, let me go weekly chart here. Is it possible that I guess, I mean, if I don't know, this is crazy stuff here, but if I started way the heck down here, and let's say this is like the final, if this is all like wave one, and this is like very rough, like wave analysis here, but if it's all wave one, this is two, and then like, would this be like the 3-ish, or was this 3 to 4 to 5? And I like I said, that's super rough. I don't really like that because we're going back to like 2003. But I would say that this rip that we had here, when this started the trend, 1, 2, 3. If we get a little bit of consolidation on gold, Nick, to me, this still has a wave 5 to go, and I would project that move out. Let me take one swing. I know I got a ton of garbage on my chart right now, but as always, I can see through it. If we go to here, I mean, I'm looking at gold to 3,500. If I'm looking at this is a 1618 because this was a 382% pullback. If again, this number means nothing if it doesn't hit. But if I have a target, I would say 3,000 is very doable. 3,500 to be like capitulation type crazy. My gosh, gold is cocoa futures all of a sudden.
Yeah.
Maybe 3,500. But how fun is that run going to be if gold just starts to erupt? If it starts to erupt, it'd be pretty cool.
I got a cool chart to show you, Chris.
Yeah, let me see it.
We need to get this on the Edge Finder because this is so fun.
Okay.
So, this is a chart showing the average home price relative to ounces of gold. So throughout history, gold can be quoted in dollars, but it's not a great, in my view, not an actually great way to denote the price of gold, the value of gold, because gold has been around for thousands of years as a store of value. It's as old as the ancient peoples used gold. So how's the best way to actually price gold? You can do it in dollars, but
do it in gold, man.
Do it in something. Yeah, you could do things like what could you actually use gold and what are some more staple things that you could compare it to? A really obvious one that everyone kind of hopes and dreams to have nowadays is a home, right? So the average home, I thought this was kind of interesting. On a basis of real estate, gold is not particularly expensive or particularly weak. So, what this is saying is that basically right now, the average home in America would cost you, not using dollars, 226 ounces of gold. So if you took the price of gold, 2,500, let's call it, times 226, I think that's supposed to come out. The idea is that it comes out to the average home price. That got to as low as in 2011, 153 ounces of gold to get a house price. That was, of course, when the real estate market was falling apart. And it gets like really high when, real estate is going crazy. So when real estate is very expensive, you need a lot more gold to buy a house. So what is this telling us? Well, this is telling us that if a couple things could happen, real estate could balloon up in price or gold could balloon up in price, but just something to think about. On a long-term basis, we would call gold kind of relatively expensive when it reaches these extremes and relatively cheap when it reaches these extremes. So based on real estate, and there are other studies we could do because real estate is also kind of a fickle topic. You could look at it. You could look at, the gold to silver ratio. We could look at gold to the Dow ratio. That's another really popular one. I bet you the gold Dow ratio, in fact, does this have it? Let's see. Real estate and gold. I'm just going to search it up.
I'm loving that website, by the way.
Yeah, that was a good site. Go Dow Jones ratio. Dow to gold ratio. Here you go. So let's see where we're at with this one. So this is telling you that there are times where when this line is very high, what is that telling you? Dow is expensive relative to gold. And then this is when gold is cheap. So it's kind of somewhere in the middle right now. But what that points out is we're not at all extremes. I was just trying to get to the point where, to your point about seeing gold go up to 3,500, it's entirely possible. The gold market is not extremely expensive, as sometimes people like to claim. There's more dollars printed every single day. So anyways, just wanted to share that. We got about 1 minute to go before meeting minutes drop. Chris, if you have any headlines that come across your way, I'll look for them too.
Will do.
That way we can hopefully maybe I'll just pull up the all markets view here so we can just keep an eye on everything as it's coming in.
Yep. And I don't really know what the minutes are going to show. It's probably going to be a reiteration of where the Fed is at. Maybe there's a little hint. I'm sure Powell will probably express more on Friday about maybe reassuring the market that there's going to be a cut or looking appropriate to cut in September. Let's see here.
You got going into it, of course, before meeting minutes get dropped, we got the S&P.
Yeah, I was going to take a look at that.
A little bit of back and forth today. Yeah, NASDAQ peaking back up. The Russell, by the way, doing really well today off of that slide in jobs that you had mentioned.
Yes.
That was good for the Russell. Dollar index, not so good for that. Dollar index down here today, continuing lower. You got the pound going up, the euro celebrating that, and oil falling off of that data that came out. The data I'm talking about is the revisions in jobs, guys, that came in earlier today. They revised a lot of numbers lower, and that caused a little bit of uncertainty in the dollar. So meeting minutes are dropping anytime now. We'll be looking for headlines that could be potentially market moving.
Let's see here. Bond yields fell as a large downward revision to the U.S. payrolls reinforced expectations that Fed were cut in September. 818,000. I mean, I think you had just stepped away, Nick, but I said in my career, I've never, ever had the U.S. non-farm payroll revision matter. I've never even known it was a thing. In fact, the calendar I look at typically is Forex Factory. It wasn't even on there. So I had to go to MyFX Book and FX Street, like some other calendars, to find it. And it's there. And obviously, it's a talking point, but I've never had this be a thing. But I think, again, why did this come up and why did I hear it in a podcast or two over the weekend? Because employment data is so sensitive right now, because the only thing that saved the market the last couple of weeks after a bottom and a buy the dip rip was that we had unemployment claims come in lower than forecast, which the market's just like, oh, great, we're fine now, which is crazy. But we still have to get through more inflation data. We still have to have non-farm payroll again. We still have to have unemployment claims for the next several weeks until we have that rate cut in September. So the Fed is not, like, their job is not done. And just really quickly, I know we talk about this all the time, but do you think that the Fed, when they cut in September, if you look at the CME watch tool, are they going to cut every single month that's on there for an actual FOMC rate decision plus press conference? Because that would be 1, 2, 3, 4, 5, 6, 7, 8. That'd be 9 cuts at 25 basis points until September next year. So 25 times 9, that's at 2.25% cut, which I think that's where we could get. But I'm wondering if this is how consistent the Fed's going to be and there's nothing to stop it. Or I don't know, man. I just feel like the Fed could just quickly stop the cut cycle because it's like inflation just cuts up. And
that would lean towards just my first reaction to that, Chris, would be that leans more towards like you want to stay with the Mag 7 if you're going to be long anything, because if interest rate cuts are really, if you think, for example, that they're not going to do that, you might want to stay more with the super value, high earning, predictable earnings companies. And if you're more like, I think they're just going to kind of trickle in rate cuts consistently throughout, no problem, that's probably the Russell trade, right? Those are the two dynamics there, is like steady rate cuts, Russell, unsteady, go back to what's been working the last few years, which is the Mag 7.
For sure. Yeah, it's hard to dethrone the Mag 7. I mean, the government can try with antitrust monopoly stuff, but it's like, I think in a way we have banks that are too big to fail. I think we have tech that's too big to fail as well. And I don't know. I mean, they can, again, the government, the SEC, the FTC as well. Like they can do all sorts of stuff where they can, try to put Google and crucify them to say they're too big and they're squashing competition. Okay. But how many people of the world are still pretty darn dependent on Google until there is like some type of small cap that's maybe gonna switch things up. Like, do you
Yep.
use DuckDuckGo for your browser? Do you use like, I mean, it's like most people are doing a Google search, and it's, you know, it's the brand name that, like, yeah, you're just typing in a Google search. But
Yeah, if you get some big stuff, big news on that, I'd probably buy some more Google, to be honest.
yeah, that's true.
Real quick, Chris, I got some stuff in front of us here for the Fed meeting minutes. First one is the Fed staff's outlook for economic growth in the second half of 2024 had been marked down largely in response to weaker than expected labor market conditions. Fed minutes, participants viewed the incoming data as enhancing their confidence that inflation was moving towards 2% objective. Next one here. The majority of participants said risks to employment goal had increased. Many noted risks to inflation goal had decreased. And then final one here. Several participants said recent progress on inflation and increases in the unemployment rate provided a plausible case for a 25 basis point rate cut at July's meeting, or that they could have supported such a move. So
why would you
even,
say that?
Yeah.
That was like part of the panic that the market even took in, was like, they should have cut in July. It's like, well, they go back in hindsight and say like, yeah, we could have,
Yeah, that's
but we
interesting.
didn't.
It's an
And we
interesting
allowed the
choice
market
that
to
they
dump
would.
10 and 15%. Awesome.
Yeah. Yeah. Right.
Did you see, so on that same vein here, several participants said reducing policy restraint too soon or too much could risk reversal progress of inflation. So
Yep.
yet again, same thing with minutes, same thing with Powell's comments. They're gonna talk out of both sides of their mouth,
Yes.
you know. So this to me, I don't know, man. This Fed feels like you got to be too transparent every single month, and it's going to make the market wait and wait and wait and wait every single month before there's big. Maybe that's the whole plan, dude. Maybe that is the plan, where it's like, you can't give the market too much, because look what the market will do. It'll rip on the most minor detail. It's like, if Powell on Friday, and this was interesting, there was something he said, I don't remember what it was, but there was some type of language that he omitted from his like 2022 Jackson Hole speech, or 2018 Jackson Hole speech, when we were raising rates in 2018. He omitted something that was like pretty consistent all year, and he omitted it at Jackson Hole, and the market was like all over the place for Jackson Hole week.
Yeah, I remember the 2022 meeting was
Was that the
devastating for the
transitory?
market.
When was transitory?
Transitory was like started in 2020.
That would have been like 2020, 2021.
Yeah.
Okay.
I can't remember what happened in 2022, but I do remember that just being like, there were so many, specifically, Chris, I remember like all the memes, people like, he shows up and just destroys the market with his mic drop. But speaking on things that are moving here, guys, we got yields. 2-year yield is down 2% today.
Nice.
I mean, you've just got, what does that signal? Does that signal that a 50 basis point cut is more likely? If they came in and said 25 could have worked in July, does that signal increased probabilities for 50 basis points in September? I don't know. I mean, I personally don't think they will do that. I think it also may look, I don't think 25 basis points will look political, but I think 50, some might say it would. I personally don't see it that way, but I know that that would probably cause drama. There would be people who'd be like, oh, 50 basis points, you're just trying to, but I don't know.
50 basis points doesn't seem like we're confident with the economy.
Yeah.
That's my biggest concern, is if we start slashing more than 25, 50 to 75 feels like we're cutting on the cusp of bad news, bad growth, super soft and weaker labor. That looks to me like the Fed is desperate to try to play catch up, and the market will immediately sniff that out. So
yeah, I agree.
This watch tool has dipped. I mean, we were at 76% this week. It dipped down to 63.5. So I mean, you're right, man. This is going to go back and forth for the next 3-4 weeks. But is there a chance that the 50 basis points probability goes up and this goes back down? And maybe, Nick, maybe we roll into September with a 50-50.
Yep.
And we don't know.
Yep. And tell you what, Chris, just to reiterate, the market sniffing that out. This is just everybody at home. Do you know why it's hard to beat the market? Because the market is freaking smart. It sniffed that out while Chris and I were talking about it. That they're indicating that July might have been a 25 basis point. We should maybe consider, and already gold is up, because again, let me just reiterate, with the 50 basis point scenario, if that were to happen, you'd want to be long gold. You
Yeah.
would rather be long. I would rather be long gold than long stocks. If you told me right now if there's going to be a 50 basis point cut in September, if that happens, I start immediately thinking, oh, gold is going to shape up, have a potentially 30% year. If you start looking at 50 basis points and then 50 after that, if you start talking that language, gold is going to rip. Now, again, just to reiterate, I don't necessarily think that's going to happen. I'm more in the 25 basis point range. So that's why I personally prefer stocks, but the line is thin, Chris, between staying bullish stocks or maybe you go more gold, more sensitive to rate stuff. I mean, just something to think about. The other thing to mention, you've got Dow Jones up 0% today, and the Russell is up 1. NASDAQ's up 0.5. So the Russell leading the charge today. What that's signaling right there is that the market thinks rate cuts are coming.
Yeah. And look, they are coming. I think they are coming. I mean, my gosh, man, we've literally gotten away with jawboning and free mileage out of talking through this for 9 months, right? I mean, from when did the market expect, like Q4 last year was a Fed pivot coming in, like, October of 2023. The market was ripping hard November, December of 2023. Why? Because the market's expecting rate cuts, and yet they didn't get it. They didn't get it. We're still sitting here at all-time highs. We're sitting just shy of the all-time highs, and yet we're just gonna get that first cut maybe in September. But it's like, it's coming, dude. Like, I just wonder if it comes, is it permanently here to stay, where now the Fed's just gonna cut? I don't know. And again, I go back to what I started saying at 1:30. I don't know what the market's going to do. I don't care. It doesn't really matter to me outside of, do I have good trades to get me by and get me through? And the answer is yes. I mean, I can take a trade like this every week for the rest of the year and figure out, like, right now, let me float this one out here. So this trade here, I can take this trade as an example, and I can do this every week. Okay, this trade cost me $17.50 with one contract. Well, if I do the same thing, let's say I lost this week. I lost. Okay, well, I'm not going to lose $17.50 because there's value on both sides of the trade. So one might be partial, one might be partial. Maybe I walk away with, like, $8 credit. So I lose about half the position. But if the next week I do the same trade for $17.50 and I do 2 trades and I do 1 contract to 2 contracts, and next week I can win, let's say what I'm up right now, which is around $4.50. So if I win $4.50 on 2 contracts, I make $9 compared to my $8 loss. And that would be like, that's like, doesn't happen very often. But in a week, I can flip around and be net positive. So, and here we are, like, this is profit peak 1. I'm up $4.50. I'd be taking profit all day. I already took the profit. I took it back here. I took it back here at 35, 40 points of movement. I was up $1.50 to $1.75. I just protected it because I knew we had a backloaded week with all this drama. All this is showing me is, like, this strategy is freaking great, and I don't have to care, nor do I have to know. And that's probably the best thing that helps me sleep at night, Nick, is I don't have to know what the market wants to do. All I know is that if the market's going to dump like it did with Nikkei and that awful 3, 4, 5% gaps we saw, I need to make sure that is not my blind spot. I need to make sure that, if the bond market implodes, where's my exposure? I'm long a call option on the TLT. It's like, I have defined risk. I can't risk more than what I paid for it. So you'll be fine.
I think it's especially important, especially as, we get into, as we go over the edge, to this rate cut concept. We don't know what's on the other side. I'm here. I have my opinion that I think that the market will like it. But what if the truth is not as rainbows and sunshine as I think, and I'm wrong about that? What am I going to do about it? We've discussed those strategies together a lot, and I think that the big August 5th thing was an eye opener for both of us, but for probably many, many listeners as well. That big movement that happened on August 5th, a lot of gaps and a lot of slippage for me. I took some big losses on slippage on that day, which really was absolutely no fun. But you learn from those and you say, as Chris just pointed out, like, what am I going to do next time around differently? How am I going to be positioned? And Chris does a lot of, you do a lot of like options dynamics to define risk, but also to make money in absolutely most scenarios. It's very easy for you to make money, very hard for you to lose it. I think that's a really strong, strong approach. Anyways, to continue on with what's happening here, guys, the dollar index is below 101. This is crazy.
Yeah.
And, the dollar index had 2 stops. It had one stop at 104. It had another stop at 102.5. As soon as it took out that 102, man, it was off to the races here. Bears really have stepped in. I do think that, it's hard to see it, but if you did get a retracement right now, 102.5 looks interesting for me, maybe a continuation play, but that dollar does not want to stop right now. Again, revisions earlier were bearish for the dollar. The dollar was green before that. It gave back all of its gains on the day here real quick as soon as the jobs data point revisions happened. And then now following through to the downside with what seems to be a slightly dovish leaning meeting minutes as we count down the days now to our Jackson Hole Symposium tomorrow and Friday, when we get to hear from Jerome Powell. Gold moving higher for all the gold bugs in the room. Again, we talked about this. Gold is loving the idea that there might be some more rate cuts than previously thought coming down the pipeline. And remember, gold thrives in a rocky rate cut environment, like speedy rate cuts, because things are looking a little shaky. Gold's going to love it. And maybe the gold bulls here today, maybe they're pointing out, hey, you guys said that you would have been okay with a rate cut in July, but you didn't do it. And now you're saying that to us now. Maybe that's a little bit of what they're sniffing out. Gold traders may say, if you were cool to cut in July, are you being overly patient to cut? And now you may need to cut 50 in September. So a little bit of a boost there for gold. That's the antics of this, the Game of Thrones of all this stuff. And, same thing being sniffed out by the Russell, which is, of course, going to celebrate as many rate cuts as possible, as long as the economy's not, dying. But I was making a point, Chris, just about how small companies, they have in a peculiar situation. They're very sensitive to borrowing costs because they're trying to grow. So the, interest rate cuts were very good for them. And they have, a lot of them have pretty predictable earnings growth, or some of them are not profitable. But like if you took profitable small caps, there's a lot of consistently profitable small caps that could do okay in a slowing economy. But they really, the known factors that if you cut interest rates on them, a lot of them are borrowing money. It really helps out their balance sheet right off the bat. So Russell's liking this. We'll see if that's the right call or a mistake based on how those rate cuts get delivered.
Yeah. Take a look at this. I think this is interesting. I'd like to see a little bit more of a difference here, but this is the U.S. money supply compared to the S&P. I don't know. I mean, maybe what we have when we call it QT or, quantitative tightening, it's probably fake, because usually we have lots of official QE where we print like crazy and add liquidity to the markets, and we fake QT by doing these like balance sheets runoffs, but we never tighten more than what we eased ever. So it's always this like game of we've just had increased money supply, US and globally. And so I just wonder, like, we've had a peak here. We've had a slightly like decline or slight decline in money supply. I just wonder if this goes higher, does that just still fuel the same thing on the markets? If this actually goes lower, does this actually shift? And maybe none of that happens until we actually have some type of like widening credit spreads or some type of credit risk. But I just had a chart on them go off. This is the currency pair that I've watched for a while. I lived in Singapore for a couple of years, and
You did? I had no idea you lived in Singapore.
I was in Vietnam for a couple of years and in Singapore for a couple of years.
Have you ever, is there anything you've not already done before, Chris? I don't, you're the world's most interesting man.
Renaissance man.
Yeah.
Well, it's just because I'm so old. I'm just old compared to you, dude.
Nah. That's not it.
So anyway, there's a pretty important exchange rate between the dollar and or the USD and the Singapore dollar. the Singapore Monetary Authority likes to keep the exchange rate between 120 and 140.
Okay.
So I'm watching this. I just had a chart alarm go off at 130 because I was long the Singapore dollar when this first started. This trade was an easy symmetry trade. You can see my yellow boxes. When this thing bottomed out here around 30.50, when I was starting to get daily oversold conditions, I was getting in at 33, 32, 31, and I did have a pending order at 3,000 that didn't get filled, but then I added in on a trend line break. And so I had swing one, I added in on a 5-0 pullback, and I had symmetry. So that trade right there, by the time it hit, that was a lot of profit because I'd built up maybe 7 or 8 positions on this thing. When this was inefficient, I added to the same bottom here. So I probably had, I'm trying to think, I probably had 8+ positions. Here's easily 3, that's 4, that's 5, maybe adding on 6 there to hit my, so it would have been close to like 6 or 8 positions. But that was, this is a little insight to how I trade as well. When I find a good spot, this was basically using the exchange rate at 30. I thought for a second that, maybe we go back to 140 and I could hold this thing longer, but I was up enough profit there. That was probably for my accounts. I mean, I was managing that. That was probably worth like $150,000 of profit. So all I had to do was hit symmetry. I was pretty happy with that. But here we are down lower, and we're sitting here at this like 30-50 level again with the chart alarm set at 3005. Now, is this the time that I'm going to call the bottom on the dollar sing? Not necessarily. So what did I look at? I looked at this Singapore cash rate was set to 4% in June 2023 compared to 3.72 in May 2023. I don't know what it is right now. I think it's, if I'm looking at economics, I don't see it on like cbrates.com, but right now this shows right around 3.5%, and it's oscillating here. So I would assume that they're keeping rates pretty steady at like 3.5% for that official cash rate. If the Fed, I mean, we're 2 years away from that, right? Like the Fed's going to cut 25, 50 basis points. We still have, 250 points to run off on our interest rates in order for this to match. So could it be a potential carry trade? Maybe. So I want to watch this currency pair just because if we have a bounce here, then we have a range trade and we go back to maybe 3,700. If we come down to this level at 1.20, we're going to be having a conversation around like I'd be willing to put 5% of my account on the line for a maybe 20 to 25% gain. When you use leverage like this in Forex, I can put 5 to 10% on the line and turn this into like 20, 30, 40% gains in a Forex account. So it's possible.
It's an interesting currency pair. And again, kind of an up and coming Southeast Asian economy for sure. Singapore is. I wanted to show you something too, Chris, that I was looking at myself here. This is the put call ratio. For anybody who doesn't know the put call ratio, basically just specifically on the S&P 500, the weighting of the volume of how many calls versus how many puts are being bought in the options market. And the reason that this is very interesting is it's a very good pulse check of sentiment in the market. And, we go back to that fabled August 5th day, the put call ratio went crazy in favor of the puts, leaning very close to our, ultimate extreme fear ratio here. Came in really, really terrified. I just wanted to point this out because now that things have started to switch back and we're getting close to, the big Fed meeting this week, one thing to keep an eye on is that we're starting to, or we briefly were back in what I would say maybe a little bit overzealous territory, maybe a little bit too optimistic. The put call ratio has bounced back a little bit, but this is only from yesterday, right? You can look at the end of the day results. So we don't have today's. Today, market's bouncing back. So I wouldn't be surprised if tomorrow's put call ratio, is somewhere in this territory.
Yeah.
And then you're starting to get, this is where, again, even as a bull, I start to get a little bit nervous. I start trailing my stop a little bit tighter because when I see everybody starting to get one side, just like when it was a very good buying opportunity, not necessarily a selling opportunity because I am bullish still, but maybe I manage some risk. Maybe some traders choose to take partials, trim, etc. Just wanted to mention that because, as we get closer to the meeting, we can see the S&P 500 is nearing its all-time highs. The NASDAQ is making an incredible bounce back from the lows here. You're looking at, 15% gain and just that's so rare and it's so fast that I think it's a prudent thing from a risk management standpoint just to say, okay, I probably should not expect the S&P 500 and the NASDAQ just to continue that trajectory, because how often does that really happen? How often do you see trajectory like that sustains itself for a suspended period of time? So, even when you are bullish, it's okay to be like, okay, bullish, but not getting greedy here, not going to not adding tremendously to buys, just being cautious. I think that's worth mentioning. Also, because I mentioned this tool, this is totally free for the next 3 days, just so everybody who's watching knows. We're doing our Edge Finder free week. It is open to the public, free to use for everybody for 3 more days. If you'd like to apply for that, we got almost 1,000 people in here. If you'd like to apply for the Edge Finder free event that is going on right now, this is a first come, first serve ordeal, because we are handling these applications manually. We've got 3 lovely people on my team who are working through applications, getting people set up, answering questions about the Edge Finder. So please take a second to apply. If you'd like to use this tool, you get access to the COT data, top setups, algorithms, seasonality tools, labor statistics tools, economic data. If you're looking to up your fundamentals game, please consider trying it out for the next few days, totally free. So just wanted to mention that. Chris, what are your thoughts on put call ratio and just where sentiment is at going into this meeting?
I mean, I think sentiment is stupid right now. Because we had an extreme fear sentiment switch to an extreme bullish sentiment, and
so fast.
Somewhere in the middle, it's like that's the reality. So I mean, if you look at the AAII, you look at Edge Finder, the put call ratio, I'm looking to see if there's trend changes. I just
got the AAII in front of me too, just so we can review it while you're talking about it. Check this out.
So I mean, when we get, so I would say this: if our bullish signs get up towards 50 again, same thing you just said, Nick. Trailing stop loss is getting a little bit tighter. Probably expecting a bit of a correction. August is still summer. It's typically low volume. The market kind of gets pushed around by path of least resistance, which is what we did. So we had, number one, low volume is how we had such an aggressive drop the first part of August. And then when it was like everyone came back to the headquarters and, get back in the driver's seat on August 5th and like, the big button is buy. I'll just buy. Right. So they did, and they got rewarded for it. But as we get into September, and we have historically what's pretty much a down month for the markets, we're going to see
pull that up too, just because you said it.
Yeah, we're going to see what like typical like seasonality is made of. I would be, I don't know, man. I would be really, look, it's happened in the past, right? September in 2017 was a bullish month, and there's been other Septembers over the years that there's been bullish Septembers. I'm not saying it's always red, but historically, when you look at the 10-year average, the 5-year average, the 70+ year average, it's down close to 1% on average. So, so I'm looking at, I just had a chart alarm go off on TLT. Look, one thing I'm looking at here, the 2-year and the 10-year, that inverted yield curve that has had a slight bull steepening, which means that our short-term rates are dropping faster than the long-term rates. And so it's getting closer where we did actually come out of that inversion briefly through that like August 2nd, August 5th window. I think that week right after that bottom, we came out of that inversion just for a split second. And then we got to like 10, 15 basis points inverted once again. But here we are, like I think we were up to like 25 basis points. I've been tracking this every day. 25 basis points. Now it's down to 13. Oh, it's down to 15 now. So I mean, historically, this doesn't look good for stocks when we come out of an inverted yield curve. Yeah. So look, man, there's so many things that you and I could make a list of, like what could actually turn this market into a downturn. What could turn this market into a bear market? And we could list employment data, recession, Fed cutting during a recession, inverted yield curve coming out of it. We could look at geopolitical things. There's random outliers and blind spots, like, maybe, hey, this Christmas coming to an island near you that China decides to invade Taiwan Christmas Day. Who knows? Yeah. It's like, that's out there, and we could have more escalated. Who knows? We could have another insurrection on January 6th of 2025. Yep. It's like, we don't know, but I'm looking at the stock, TLT is going up because yields are dropping. If you take a look at the 10-year, we're dropping today. It's in red. You're looking at the 2-year, it's dropping today. Look at the 3-month, it's dropping. And the 3-year has been the stickiest. And that's where all these stupid bond auctions are coming in every month. We're financing debt short term at a crazy high rate. Like, if anybody is willing to take on like 3%, 3%, 3% and cycle through this, I have money market instruments doing this. BIL, if you trade this in Tasty Trade, BIL is essentially a short-term treasury bill.
Yep.
So you're getting, I mean, if you do it per quarter, I mean, essentially this is annualized. So 5.14, which is barely budged off these 5.56% highs. But if you're to annualize a cash holding at 5.15 divided by 4, you're getting 1.28% a quarter on your money, which may not seem like anything, but you can also like take that right out. It's fully liquid. You're getting filled within a couple of cents of each other.
Well,
And so
and the power of it is it's doing something
better than
in the
nothing.
meantime. If you see a dip in the market,
Right.
that's the thing. People sometimes they hear like bonds, I could get 4% per year. Well, let's cherry pick for a second. Let's say that you bought bonds, got 4%, and then the market dropped 8% over the next few months, and then you went into the market. It's like,
Right.
oh, you just killed it. You just bought stocks at a discount and you got paid to wait. I mean,
Yeah.
there are times where right now bonds feel silly because the markets are ripping higher. But
Mhm.
the second the market starts falling, they look cash is king, and
Yep.
bonds are just basically timed cash. So where you get paid to tie it up. So really interesting stuff there. Chris, you can keep going if you'd like, but I have a dermatology appointment I got to head out to. So if you'd like to keep going for a little bit, you're welcome to. If you'd like to call the show, we can end it there. We've been on for a long time. So
That's
what
okay.
would you like to do?
I'll go a little bit longer because I know Frank and I for all week Frank and I have like run out of time, and so I didn't really have a chance to like go through charts like everyone asked, like do this, do that. I mean, so I'm happy to do like a top
Yeah.
down run through for maybe 15, 20 minutes.
Yes.
Just share my
please
outlook
do.
and stuff, and I'll wrap the show up at maybe 2:45.
Yeah, you got it. And again, yeah, I've just got to run for this appointment. But everybody, before I step out, a couple things here for you. We're going to drop the link to Chris Pulver's YouTube channel here in the chat if you'd like to check that out. Follow along with Chris, get all of his latest updates and ideas. He also does one-on-one coaching. He has a Discord channel, all that good stuff you can find on his channel. And the last thing I'll say before I step out is, guys, we're doing that Edgefinder free event for the next few days. It is totally free to the public. 3 days left. We'll drop the link one last time here as I step out for the Edgefinder free event. It is totally free to use for the next few days if you apply. If you did already apply, I know there's so many applications coming through. We're handling these one-on-one. If you did not get a response, you can also directly message us on our website. Go to a1trading.com and open up a live chat with us there. All right, Chris, you got it. Thanks for coming on, and you got the show for a little bit.
For sure. Thanks, Nick.
All right, man. See ya.
See ya. All right. Let's take so I'll do top down here. So let me get in to make the charts a little bit cleaner. And we have officially closed the gap from the top on July 16th. So we had a wick high today that officially filled that gap. Look, if you've got any traders out there, if anybody's supply and demand or you understand that stuff, liquidity levels, this market has found pure efficiency over the last couple of weeks, right? Reason why is we had a gap here, we had a gap here, we had a monster gap here, and we had a monster gap here. And what did the market spend the last 2 weeks doing? Filling all of those gaps. So what remains is, it's a big question mark whether this market can sustain all-time highs coming into a seasonality and September effect that usually is bearish. Okay. And then we have a big gap here. And we have a big gap here. And I would say, even if you take the high to low and you look at a halfway point, we could see equilibrium. We could see the market struggles here. We don't necessarily take out highs. We don't necessarily take out lows. And maybe the market's just volatile, And so I don't necessarily want to call the top because that's stupid in the stock market. But I would say that I would be surprised for some type of test, fake out, bull trap, and then a bit of a correction, maybe by 1%, maybe a couple of percent. And then you wonder if we have a September effect and we look in October, we get through the election. Does the market like the election or not? And it doesn't matter who's president. It really doesn't. It's just a matter of does the market think that policy is going to shift enough to change what we have? It's like I really think that when this market is in motion, there's the saying is path of least resistance. And so this has been put in motion and we are staying in motion. And until something changes that, or until something actually derails this, and even looking at this chart I know I have a bunch of workspaces here. Let me get rid of this one now. This chart, okay? Looking at this trend line, I don't think there's any reason to be a bear. And even today. So today and yesterday are pretty much the same prices. We don't really have much movement the last 2 days of trading. This is on the QQQ 5-minute chart. So this goes to yesterday and today. We're pretty much sideways. If I go to the SPY, okay, the SPY has tried today to revisit some highs, but look at this. This is all day Wednesday right here. All day Wednesday, all day Thursday. We just have a range trade and we just have a range trade. There's not really a direction like we had on Monday. Monday was surprisingly directional. But we know that we're within that little whisker of those highs at 565. I could see the market trying to get there and test it. I hope that it does because then I get paid on a long call. That's fine. But I'm still watching my gamma levels and we'll see what happens. So, I mean, right now, path of least resistance is up. I would expect there to be a little bit of a reality check. I do have some broke wing butterflies that I have to manage this week. I think I've got an SPX one. Let me find out. SPX, yeah, let me check this position here. So SPX, right now, these are in the money, which shows this is probably going to be a small loss. So 55.65. Oh, fudge, man. This is Friday. Ah, cripes. Well, this might be a loss. Let me check this position. So I took in $1.50. I'm down to 430. I'm down a little bit. This is price. We'd have to drop not a ton. We'd have to drop 50 or 60 points by Friday. If it happens, cool. If it doesn't, then I'm looking at the trade. It's a defined risk trade. So this is, let me check this trade out here. So right now, I'm risking 350 for it. So that's okay. If I lose, that's the most I lose. If we drop 50, 60 points and I come back into a profit trap, then I can make a little bit more. Yeah, it's not a big deal. I could close it now and say it's a partial loss. But if we don't just keep grinding higher through Jackson Hole Thursday, Friday, maybe we do have a bit of a dip. Maybe I get lucky on this fill as far as a profit trap goes. So look, we're close to the all-time highs. Qs, a little bit further to go. This is the bit of efficiency right here. If we get to this high, then there's nothing left to the upside to say, hey, there's more levels for the market to go after. All we would have is this would be a check mark fill and fill and fill and fill. All the efficiencies to the downside would be filled by this recent run. And what we would have left would be this gap and this gap. And if we're at this level here, does this act as resistance? Yes, no, maybe. But these levels would be the potential rejection spots with the Qs. Something along those lines. If we have a pullback, those are the levels. I mean, this level could be a rejection, as is the same thing with the highs. And I would still look to see if we have, the market struggle here, or the tough position like we talked about all week is, are we going to see a slightly higher high, but also have this potential like lower low? And that's a very difficult trade because this would feel terrible, right? If this market rips up here from this V bottom, goes to all-time highs, and somehow comes back down to fresh lows, that is where traders start to lose their minds. Because as an investor, that's a ton of volatility, and that could be how the next several months play out. We don't know. That would be tough. Or if it's like, oh, this is so easy, just buy it. Well, sure. If we buy it here and then we hold and we buy and we hold, it's like, fine. We're still sitting here with lots of support. We bounce off the 200 EMA on the Qs, not the SPY, but the Qs. So, it's still. I think it's easier to get to the highs than it is to retest the lows. Although we do have a lot of data rolling in before that September news. If we go to the Dow, also within a whisker of those highs, about 1% or so, just like the S&P. The Russell performing a lot better. I'm actually pretty impressed with the Russell coming back the way that it has. The issue is this is a strong level of support that could offer some near-term resistance. So for me as a bull, if I'm a buyer and a bull on the Russell, I would love to see the Russell get above that price point. So this is IWM. I'd love to see the Russell make a nice daily, weekly close above 216 and have some good confirmation above that level. If we start to see some indecision here or a rejection here, then sure, we're kind of right back into this tight range where that's the high, that's the low, and the Russell is going to be all over the place. I do have some trades on the Russell. I'm trading RUT and I'm trading RTY. Those should be in some pretty good profit this week. If I go into RUT, let me go to all these positions here. So RUT is currently up around $2,400 for this week, and RTY is currently up around $1,500 for this week. I think I have some expirations out farther on the RTY and a little bit more near term on the RUT. I do have some profit traps on those broken wings. So if we are fading anywhere back to 2,100 or fading back to 2,050, I can turn those individual trades in like a $2,000 profit. So that will boost this up by maybe it'd be close. Maybe I boost this by like 10, like maybe 5x. This could, if I get profit traps, I could quickly turn a $2,000 winner into like, $10, $12,000. But that's going to be the day of expiration on Friday, right? That's Russell. If we go to the VIX, one thing we are seeing here is VIX is slightly higher, which after this is literally in 34 years, this is the largest volatility crush that we have ever seen in the markets. That is crazy. That is one way that I will always remember 2024 as, what happened for the year. What was the big theme? What was the big threat? The theme for me in 2024 was the 2023 rip continued. It was path of least resistance. The AI was hype, and it was all the market could talk about. That was the market's, best news ever was just AI, and everything is talking about AI, and you're seeing these big jumps. And then we got into crazy narrow, crazy high concentration, and we had a vol event in the summer, right? That's how I'm going to remember it. Now, slightly elevated VIX is interesting. I just wonder if a vol event gets us back into the 20s or 30s, or if a vol event is now between like 15 and 20. And we're just slightly elevated, but we're not at these crazy lows like we saw back in the 11 and 12 zone of the VIX. So, I mean, a little volatility, yeah, that might rattle some traders' confidence a little bit. But still, VIX is up for at least green yesterday and a little bit up today. SVXY, SVIX, I'm long on SVXY for the inverse of the VIX. Dollar index, I would say this at 101, at least in the near term, it's a pretty easy trade. If you're interested in buying low, this is a really good opportunity to buy low with a very tight stop loss. If I'm wrong, get out fast. If I'm right, we might have a 50 to 100 point move on the dollar index that gets us back to 102, 102.50, and there doesn't have to be a ton of risk on that trade. So the dollar might be a very easy trade. I know it feels like you're kind of bottom catching, which never feels good. But if I took this down to a really small time frame, okay, like I'm talking this, like look at this run on the 15-minute time frame, and let's see if price does that, right? If we fall here and we show a little bit of bottoming, there could be a reversal pattern on the dollar, and then trade this up, stop loss below, nice little swing, get back into 102s. There's a good structure level in here, 102.50, 102.60. So I could see that happening on the DXY in the near term for a low risk, high reward type trade, probably 2 to 1 or 3 to 1 on the smaller time frames. If we go to oil, I'm glad that I'm out of crude light because I got out of that trade last week for some nice gains, and it was right at the same price we're sitting at right now. Now my trades on oil are longer term, and I'm out to these lows. Oil's weird. Like we are producing oil, and I said this morning in the session. We're producing oil and crude light, or not, oil and natural gas. We are producing like crazy. OPEC is always the kind of the I'm the parent that comes in and ruins the party, right? OPEC is like, we're going to cut because they want like price stability and they want to make sure things aren't falling too bad. Demand is down. Like oil is slipping because of global concerns and global demand. China's been literally asleep. I mean, Frank and I talked about China for probably 10, 15 minutes this morning. I like China as a play. I like the asymmetry. I like the potential, but it is a sleeping dragon that I hope gets kicked in the face and wakes up. Because if it starts to flap its wings, I think there's a lot of potential there. But if China's slow and China's not going to debt fuel anything or not going to back or prop up their economy, then it's going to be a slow death by 1,000 paper cuts type scenario. So hopefully that's not the case. Anyway, oil. I'm still pretty bullish on oil to hold support levels around 65 or 67. I'm positioned for exactly that. So, I've got cash secured puts out at 55 and 50. I've got some hedges on here. I've got some bear traps, but I like oil bouncing nicely. If we come down to these lows here, I will probably get crude light future, and I'll probably do some credit spreads. I'll probably generate some income, stagger them out, a couple of months. Maybe put each trade could be maybe 0.5% risk. And if we go up from here, maybe I could turn, 0.5 over, let's say 3-4 credit spreads, turn it into 2.5% profit. Something like that's pretty good. So I like this range, bouncing off $67, $65 support, coming back to the midpoint at 75 or 80, maybe getting to highs again at 90. Okay, there's CL, there's NG. NG's been the widowmaker for a while. It's tough. It's tough. Most likely on this one, I see, and I kind of hope this is the case. I'd love to see Nat Gas do something like this, where it just goes absolutely nowhere, and then let's say 1 to 2 years out, this thing is just freaking going nuts. This could be like a career trade. If I can get it right, and I'm not I'm not all in on natural gas by any stretch, but if I can get this remotely right over maybe a 6 to 12 month window, there is a fortune to be made if there's any type of price action like I'm showing on the chart. So I don't know. I'll be watching it, but it'd probably start as a fine risk and maybe have some open long futures contracts or something like that, and see if I can just magnify those gains. Gold, as we kind of beat up here, gold sitting at all-time highs. It's still staying pretty bullish. I'd like to see a pullback on gold just for an opportunity to buy the dip. If we're into some wide open space here, wide open space. If we get a pullback again, resistance becomes support. Look for some opportunities here. Look to stay with it. But gold might be this surprising, sneaky bull that not enough. I don't know. I don't think enough. And not that it matters. Like, I don't want to be in the crowd with everybody else, but I don't think enough traders are paying attention to it. I don't think traders understand like how much potential gold has and how healthy this looks as a bull market. That's the one thing I really like about it, is it's not like it is inefficiently rallying. This thing has been rally, pause, rally, pause, rally, pause. So to me, the structure looks very clean to stay with the bulls. So I'm bullish on that. I still like silver more, and silver has bounced back nicely off these levels. I do have some good positions here in SLV. Let me double check that. So I've got SLV up around $33,000. Pretty happy with that overall. I have some shares. I have some puts. I've got some covered calls. I also have some silver futures, which is also up a decent amount. This is up $2,300. This is up $1,100. This is up. This one's actually down, but it's just because I need some more time decay. But anyway, I like silver futures. I like SLV. I like XAG. I think it's a good trade. This is another one that I'm intentionally long, because I want this. I want this move on silver to get up to 35 and change. I'd love to see this pause and then get some breakout trades and stay long and get rewarded for that. All right, so that's silver. Bitcoin, we're back up towards 60K, but I'm still watching for these potential like drawdown cycles. I mean, typically we have like a 60 to 70% pullback zone in Bitcoin. We have yet to see that. There's some pretty good structure holding these levels. We've had about a 30 to 40% pullback from these highs, if I'm not mistaken. That was a 33% pullback from those highs. Look, 60, 70% has happened for over a decade. It's possible it happens again, right? Or, we may be, here's what I'll say. If Bitcoin finds a way to break these highs, this to me would be a run, a corrective pattern, and then more to come to the upside. I mean, there's still good opportunities to look and be bullish on Bitcoin if we get a bit more price confirmation. Just my thoughts. Okay. All right. MicroStrategy, I'm bullish on that one because of Bitcoin by proxy. HG Copper, I'm also long on copper right now with some futures trades. Nikkei, we were up on the day. I'm watching the Nikkei and the Japanese yen correlate. Foreign markets, the DAX is up, the FTSE's fading a little bit. There's good support here on the FTSE, but I'm not long on this one. China, I'm still looking to stay long. We've come back today and actually put in a green candle, which I'm okay with. I'd like to see HSI get higher, and if that's the case, I'm watching my FXI, I'm watching my KWeb, my BABA, my Baidu. Sounds like I'm speaking baby talk there, but I'm watching to see what China does. Brazil, I'm so bullish on Brazil for an emerging market. This is also potentially playing energy, non-correlated, right? It's got a high dividend at 7%, betas up there at 7.6, but it's slightly less correlated than the S&P. But we also have some good inversions where when the markets are down, this one tends to do okay. And kind of, if this stock market is down as a whole, we go to emerging markets, we go to energy plays. There's a little bit of diversification there. Okay, Mag 7, we talked about the inverted yield curve. So we're sitting around 15 basis points off the 2 and the 10-year. Mortgages haven't budged. We're at 6.5% on the 30-year, 6.06 on the 15. Actually, no, is this the 15 is 5.66. 6.06 is the 1-year variable. and then I've got some futures trades here. So any other charts, any other questions? Otherwise, I'll wrap it up there. So just a little top down. Looking at this really quickly, it's a sideways day. You know, my little scalp slash strangle for the morning was good. I took an SPX trade. All that indecision paid me within about an hour of trading. I still have this 475. I should have been paying attention as we got into I think I was gone at this time. But I was wondering, like, this low, where we going to, fill up a gamma level at 485. That would have been a nice intraday trade, had I gotten in this low that started to fill up. I mean, that could have shown some value for the afternoon, but it is what it is. So anyway, we'll be back at it tomorrow. Thanks for being here. Before you leave, look, you got a free Edge Finder waiting. If you type in the chat, or go ahead and ask, click on the links, and grab your access to the free Edge Finder. Take advantage of it, and we'll see you again tomorrow. I see the chat platform. What you talking about, Willis? Pound yen. All right, I'll do one more. Pound yen. I see it. Pound yen. And look, this pretty much goes with all the yen crosses. All right. I still think that right now, if you're watching the Nikkei 225 and the Nikkei is going up, right? If the Nikkei is going up, then I expect the yen to be weaker. To me, this is the pound yen. If this pulls back a little bit, let me change the color. Okay. If this pulls back a little bit and we have a confirmation break of this trend line, I'd still go up and see if this hits the 5-0 or the 618 zone, because that would be a nice little scalping opportunity for a pretty tight stop loss. And I'd go after probably a 2-to-1, something like that. And if it gets up to this area, then trail it, But I'm looking to see if the market from high to low. This is a really simple pattern. It could be it's called a Gartley pattern. All that is you have this big swing, and then the market goes low to high, higher low to higher high, produces a symmetrical move like that, and then the market shorts itself there for the continuation of the trend. Now, I don't know if this part is going to happen, but I think that based on this, we're probably going to have this little move higher into this 50618 zone. So right now in the near term, I'm looking to see if the JPY gets a little bit weaker as the Nikkei continues to grind back from that big sell-off that we had, and the Japanese yen pairs get a little bit softer into these pullback zones, and then it gets a little bit more interesting to the downside. Okay. So there's and that goes for all the yen crosses. All the yens put on a swing. I'm looking for the same type of behavior. They had a huge swing, 1, 2, 3. If they get that type of move, that's where I'm looking to short it. Otherwise, I'm looking for the short term to be a buy trade to get back in these deeper retracement levels. Okay. All right. That'll do it for today. Thanks, everybody. Have a great rest of the day. We'll see you tomorrow. Bye.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.